into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others? Hi, I'm Vishal Bhargav and I'll be meeting homeowners to explore their purchase journey. Catch me, The Habitat. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New Year.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me is Soumit Sarkar, and over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending in on the number that is flashing on the top of the screen. Before we do all of that, a very quick check of how the markets are doing, because it's been a very interesting day where a couple of key names have been driving the performance for the Nifty 50, led by earnings reactions. Tata Consumer is one of them, but barring that, we've largely seen consistent pressure across the benchmarks as well as the broader market. So pull up the Nifty 50 heat map, and Tata Consumer Products continues to be one which has been a key earnings beat in that sense, led by volume growth, and that has continued to be up about 6.5% at this point of time. The top Nifty gainer, you've seen Max Health, Core India as well as Sun Pharma trying to be positive as well, but largely a screen with almost 30 to 31 names in the red as of now. Seeing Titan as well as the other jewelry companies taking a knock today, and while there were earnings beats as well in this segment, possible reaction being clearly visible from Prime Minister's statement to be Atmanirbhar, import less gold, use lesser fuel in terms of petrol and diesel, navigate towards EVs, and you're seeing a reaction across all those plays today on the markets. So you're seeing the auto pack also continue to be under pressure, while individual names are doing well, and we'll get to that in just a bit. The sectoral heat map also talks about that key aspect. So healthcare is up, but largely consumer durable, realty, PSU banks, oil and gas, media, as well as the energy sectors are down and out in red today. Also, the advanced decline ratio largely favoring the ones in declines today. At one point of time, 4:1. Just a couple of hours ago was the session, and that's how we started. We've seen some pullback from those levels in terms of gains. So at almost 756 stocks that are trying to gain and break the momentum of negativity in terms of the market performance. But the declines favoring as of now, at least at almost 2 to 2.5 stocks in declines, only one stock gaining in trade. The mid cap and the small cap also show you this pressure as well. So you're seeing Within those back, they are up and about from the day's low, but still in the red for the mid cap 150. And the small cap 250 is also just up about 0.7%. And finally, the individual movers, and we'll put those focus on those at this point of time as well. ABB on the back of results was down today, so is AB Realty. Jyoti Labs post-quarterly earnings is also down 9.6%. Kalyan Jewellers, as I spoke about, and Titan down in trade. Rain Industries on the back of earnings, AFL as well is up today. Krishna Medical Institute is also up 7.3% as well. But overall, you're seeing these individual stocks continuing to move in trade as well. At this point of time, let me welcome in Vishnukant Upadhyay. He is the AVP Research and Advisory at Master Capital Services. We'll very shortly be joined by Avinash as well. But Vishnu, very good afternoon. Thanks so much for joining in. Let me just pose the first question to you from Mr. Raju. He's from Hyderabad and he's holding on to Sola at 312. So he's currently sitting on a loss, asking what he should do with this counter if there's a chance of some pullback from these levels. What would you recommend?
Hi, Puneet. A very good afternoon. So it's a Sola Vinaya, right?
Right.
Well, in fact, the stock is consolidating in a very thin horizontal band, and that's a 182 and a 168. But the good thing is that the stock is, showing some sign of accumulation just above a 21 day exponential moving average. So I would say, as long as prices are trading above 168, the buy position should be, held with a target of 200 on the higher side, and stop loss should be maintained below 468.
The next query is coming in from Sanjay and it's on Jyoti Labs. He hasn't mentioned how many shares he has, but his average buying price is 280. Should he hold on to this counter or exit? Avinash, firstly, welcome on the show. Any view on Jyoti Labs?
I think he should continue to hold, Somit. I think it represents FMCG sector, and I think hopefully the coming year should be a good year. Our sense is that both volume growth as well as pricing should be much better in the current financial year. My sense is, I think, despite the fact that he's purchased at a higher level, he can possibly stay invested for the next 12 to 15 months. He can even think of averaging because, the company has been growing quite steadily over the last few years. So continue to hold, but keep a time frame of 12 to 15 months.
Avinash, you don't think the news on that Henkel partnership not being renewed could lead to a stock being derated for quite some time now? Because I think the contribution on EBITDA was quite strong from these brands. Any view?
No, I think, the short-term impact would be there, but my sense is, the management has the bandwidth to actually migrate successfully. And I don't think, that is going to result in a complete stoppage of business. So I think something on the table could definitely be planned by the management. So yes, in the short term, this could be a kind of a small negative surprise. But I think going forward, I think, some sort of corrective action and some sort of, new marketing strategy would definitely be developed by the, by the existing management team. So I think from a near-term perspective, yes, the overhang could be there. But from a longer-term perspective, I think things could definitely, improve going forward. So we'll have to wait and watch.
And got that view, Avinash. The next question that's coming in, this one's, on JNK India as well as on NLC India. So, Avinash, our viewer Mohit actually is asking a question. Between those couple of plays, what's a preferred pick?
No, I think JNK India looks pretty good. I think it represents the infra opportunity. And I think the management has been very positive in sounding that the current year is been quite good. The order book is also quite solid. Hopefully the execution comes to be nice, and definitely that could get reflected in the numbers. So I think JNK India could be a good opportunity. I think, if the investor can hold on for the next, say, 12 to 18 months, I think this could be an interesting bet because a lot of people have shown interest in the company. The management commentary has been good. And I think hopefully if the numbers are, much better than what the street expects, then I think you could expect a gradual re-rating here.
Right, well, the next question is coming from Anuj from Delhi NCR. He sent across an interesting query on Finolex Cables. He holds 1,000 shares at 1,000 rupees per share. So it's a big position that he holds, asking what's the outlook here on the stock for the next 3, 6, 9 months, because he wants to add a little bit as well. Is it a good hold or should he switch out to other counter? I'll take both the views here, but Vishnu, if you can go ahead, what's your view on Finolex Cable on the charts first?
Yeah, definitely, Puneet, we have seen a very good run-up in last couple of weeks. In fact, I would say there has been a very golden crossover between 50 and 200 exponential moving average. Where on a weekly graph, prices are all set to extend. It's a winning stick towards 1320 and then 1350. So for that levels, I would say definitely hold the positions. And I would also recommend to accumulate their stock if prices comes down close to 1070, 1080 sort of levels.
It's been a very sharp move, Avinash, in the last 1 month, but given its valuation comparison to other cables and wires makers, should he continue to hold, Avinash?
Yeah, I think he should continue to hold. The reason is cable and wire companies are now considered to be, the representative, kind of names for the data center opportunity. And I think, if you look at the performance of all the wire and cable companies, very strong numbers, despite the fact that copper prices have been volatile. Finolex Cable is also a very strong bonus candidate, Puneet. I think the markets have been awaiting a bonus for a very long time. So I think that could be a little bit of good sentimental news in the near term. But in terms of their product mix, in terms of their geographical reach, Finolex Cable is a very old player. And obviously, the benefit of the tailwind in the industry is also going to benefit Finolex Cable. So I think if he can hold on for the next 12 months rather than 8 to 9 months, I think he could definitely expect a decent risk reward.
That's the view coming on Finolex. The next one that we have is on Aptus Value Housing. This is from Manish, who's writing us from Lucknow. He's got 450 odd shares at the levels of 299. He says whether he can accumulate at the current price or wait for some time. His time period is anywhere between 6 months to 2 years. But Vishnukant, I'll come to you on this one. Your view on the charts for Aptus Value Housing?
Yeah, definitely, Mima. The stock is looking quite good as the stock is trading above the cluster of all key moving averages. Apart from that, there has been a very good bullish, development and crossover in some key oscillators as well. So I'm expecting the rally should continue with a potential upsides towards 320, 330 sort of levels. On the lower side, one should maintain a stop loss below 273.
Well, that's the view coming in on Aptus Value, but let's go across to Hyderabad now, which is the first caller for today, and Shailendra has a stock query for us. Shailendra, very good afternoon to you.
Yes.
What's your query?
Sir, I have acquired HDFC Bank, so 115 shares at the rate of 507.
Sorry, what's the price, Shailendra?
Yeah, the average price is 807.
807, okay, go ahead.
Yeah, shall I acquire more on, shall I add that?
And is this
At
a
this price?
long-term bet, Shailendra?
Yeah, that is long term, yeah.
Got it. Well, Avinash, we can't go without Ask Profit without getting a query on HDFC Bank, but we got one in the morning, and we mentioned that it's an eternal query that all investors have. If it continues to be a good long-term bet, despite any kind of slowdown that we might have for FY27 in terms of loan growth, but what's your view on the stock now?
So, Puneet, my sense is, the stock has not done anything at all in the last 2 years. And I think, most of the analysts, most of the foreign institutional investors have been putting buy reports. My sense is that it is now going to be a compounder stock. Max to max, I think, you could expect, say, 15% returns. And if you look at the performance of HDFC Bank vis-a-vis the other banks, I think other banks are better positioned. I think we would prefer to, bet on something like an Axis Bank or ICICI Bank in the private sector. And in the private sector, I think, there are many small banks where the risk reward is much better. Something like maybe, a Bank of Maharashtra or private sector bank like Federal Bank. So my sense is if he's going to hold on for the next, say, 2 to 3 years, he can definitely continue to stay invested. But don't expect any major fireworks here, because the base has become very large. And I think, we have seen the performance of HDFC Bank compared to ICICI or Axis. Definitely the other two banks have done better. So, clearly from a medium-term angle, things could get better, but in the very near-term, challenges will continue. So I would suggest that, if he wants a faster growth and a better risk reward, he should shift either to ICICI or Axis Bank. But otherwise, he can hold on for the next 2 to 3 years if he wants to, stay put in HDFC Bank.
All right, okay. The next one that we have is on PVR Inox. Kajal from Maharashtra has bought at the levels of 1101 rupees. She's got 40 odd shares. She says she's sitting on a loss of around 2,700 odd rupees. Wants to know whether she can continue to hold, and if yes, for what targets? Vishnukant, your view on the charts for PVR Inox?
Vimar, technically the stock is not looking positive. In fact, it is trading in a horizontal band, that is a 1100 on the higher side and 930 on the lower side. So I believe the way prices are toppling after touching the higher band, it is likely to approach towards the lower range, that is a 940, 930 sort of level. So I'm not positive on this counter. So if someone has this counter in the basket, so one should get exit.
Well, before I take the next call, just Avinash, actually we were just flashing, I think, the results also just before the show. Company has come back into profits. Yes, again, maybe some Dhurandhar effect just in the last 10 to 12 days that we got in. But did you get a chance to view the results by any chance and any view on the stock?
No, I think definitely the profitability has come back. So, Dhurandhar, I think 1 and 2 have really worked well for PVR. But I think today the management commentary, I believe, is at 3 o'clock. So, I think we'll get better clarity as to what is the kind of new pipeline of movies, what is the kind of traction the management expects in FY 26-27. But I think, the markets have been waiting for this for a very long time. The stock has consolidated at this level for a very long period of time. And unless we see a decent earnings growth of at least 18-20%, Puneet, the re-rating will not happen. Markets want to see a consistent growth in earnings. And, once the merger had happened, there were a lot of expectations that the growth could be much better. But somewhere, I think, they have been facing a little bit of sluggishness in their revenue and profitability. So I think we'll have to wait and watch. But yes, I think somebody who's holding it for a long time should hold on. Hopefully, the management commentary should be positive. And I think this year, that is 27, should be a much better year as compared to last year.
So that one-time gain, as Avinash rightly highlighted, commentary will be very key for growth. But the one-time gain of sale of the popcorn brand 4700 to Marico was definitely that kicker in terms of profitability. But let's go across, take another caller now from Vijayawada. And Aruna has a stock query for us. Aruna, very good afternoon to you. What's your query?
Hi, sir. Good afternoon to all of you, sir. Thanks for taking my query. I'm having Laurus Labs. 400 quantity at 1050 average.
Okay.
What is the short-term and long-term target for Laurus Labs to exit?
To exit, got it. And Aruna, when you bought this, it was a fundamental view or was it from the charts?
Yeah, fundamental view, sir.
Fundamental view, got it. Avinash, been a very strong compounder over the last few quarters. Should Aruna continue to hold at this point of time or book out? What would be a good level?
So I think my guess is, Puneet, the company has done very well in the last 2 to 3 quarters. And this year should be another good year because a lot of its molecules could possibly get commercialized. My sense is, this company has a very high profit margin, operates in a very high growth trajectory. And they've invested a lot of money in R&D in their new facility. So my sense is the benefits of all this could definitely get reflected in 26-27. So I think probably a level of 1400, 1450 looks possible. It's a very well managed, company management, kind of stock. And I think this business is a very unique and a very difficult business to replicate. So to that extent, yes, I think the investor has taken a position at a fairly good, attractive level. I think the investor should wait for the next, say, at least 12 to 15 months. We should expect better numbers going forward.
Okay, so that's the view coming on Laurus Labs. I think we've got our next caller. Nagesh is calling us from Hyderabad. Nagesh, very good afternoon to you. What's your query about?
Hi, good afternoon, Mayama. I'm holding MV shares, MV
Photovoltaic, right.
At the rate of 276.
Okay.
So I want to know about short-term view.
Okay, all right. Got your question, Nagesh. I'll take this up with Vishnukant. Enough data on the charts, Vishnukant, to give a view for MV Photovoltaic?
Yes, definitely, Mahima, definitely. And as I can see on a graph that the stock is in completely bullish trajectory as the prices are forming a higher highs, higher lows kind of pattern. Apart from that, it is also trading of the all key moving averages, positive development in oscillators. So I think, after spending some short time in a very thin consolidation band, prices are now all set to explode. And I believe on the higher side, prices will approach towards 320, 330 sort of levels. So yes, definitely it's a good buy. And one can hold the position for that target, 340, 330.
Got it. Well, hopefully, Nagesh, that answers the question. But the next one coming in, from Shankar from Bangalore, and he time and again tries a good question if it's a good time to buy Ola Electric or no. And he wants to buy 1,000 shares. So he has a few picks which he keeps rotating now, which we've been noticing now, Shankar as well. So you'll have to put some new picks now. But Avinash, today all these EV related names are rallying on that call or that appeal in that sense from Prime Minister Narendra Modi, at least to reduce petrol as well as diesel products. But do you have a view on Ola Electric? Is the 10,000 per month target for the last 2 months enough evidence to even consider this counter now?
No, Puneet, my sense is within the electric vehicle two-wheeler space, I think we look at companies like Ather Energy, a much better and established player. Ola Electric, the narrative has played out for a very long time. And I think unless we see very strong numbers, for the April to June quarter, I don't think in the very near term the stock will get re-rated. See, today the news about the Prime Minister saying that cut down petrol and diesel consumption and opt for electric vehicles is definitely good to hear. But in terms of stock specifics, I think they need to do a little bit of more cost management. They need to actually show a positive bottom line. And I think that is what the market is clearly waiting. There have been many big announcements from the company management, but unfortunately nothing has been delivered. So I'll prefer to wait. I think rather than jumping the gun and immediately buying something like Ather Energy or maybe something like even a Olectra Green, which is into the commercial buses segment, these could be better bets because these are better capitalized, very, very strong businesses. And where, the managements are very clearly looking at a positive EBITDA, so these two companies could be better choices. So Ola, I would say that please wait for the April to June quarter. I think at that point of time, one could take a fresh air.
Yeah, all right. So that's the view coming in on, all of these EV players. But time for a rapid fire round. Vishnukant as well as Avinash, you both know the drill. Try to keep your answers as short as possible. The first one is on Hindustan Copper. Rajendra has bought at the levels of 600, 2,000 shares is what he's holding. Continue to hold for the next 1 year. Vishnukant, on the charts?
Yes, definitely. For the target of 633, one can hold.
Is this the right time to enter DLF for the next 12 months is what Sudhir is asking. Avinash?
Yeah, I think if one had a time frame of 12 to 15 months, one can accumulate slowly.
Okay, the next one is on CDSL. Avinash, this question is for you. Can I continue to hold for the next 5 years? His buying price is 1307 and 150 is the quantity. Your view?
Yeah, I think definitely this is an annuity compounding business, but he can average also at a lower level and continue to hold.
The next one on JSW Infra, stocks buzzing on the back of results today. 8,000 shares held at 250 by Ram, and it's a primary stock in his portfolio. Avinash, should he continue to hold?
Yeah, I think he should hold on.
Okay, the next one is on Siemens. The stock is almost down 5%. Let's try to pull that up. Our viewer wants to know if considering adding at this current level from a short-term perspective makes sense or not. Kunal is asking this. Vishnukant?
No, definitely avoid as of now because the stock is likely to extend this fall towards 3,400.
HFCL bought at 115, Vishnukant by Sunita, and she's asking if she should continue to hold or book out.
Yeah, definitely partial position should be booked because the stock has given a very overstressed rally, and if a stock comes close to 120, then definitely she can build a fresh long position.
Okay, good time to enter Canes is what Uma from Bengaluru is asking from a medium-term perspective. Avinash, wait for the earnings or enter right now?
No, better is I think wait for the earnings numbers to get better clarity. I think after that point, one can take a fresh look.
That big guidance number is what everyone's watching out for on Wednesday when the earnings come out. A key crucial one that we'll monitor. But V. Murli from Bangalore wants to buy into Lenskart post the recent correction. Now, Vishnukant, I know very limited time frame since listing, but what's your view on the stock?
Well, so as of now, no, the stock is currently trading below all the key moving averages, so I would stay away from the count.
Okay, short-term outlook for IEX, can it be bought at the current market price? Ramesh is asking. Vishnukant?
Yeah, definitely one can buy.
Mayur is holding on to 500 shares of Sterlite Tech at 130. Should he book out his profit now, Avinash, or continue holding?
No, I think he should book out, say 20-25%, and the rest he can hold on. I think very strong prospects with the optical fiber prices going up, and with data centers coming, they should benefit.
Okay, Swiggy bought at the levels of 385, 125 shares is what Divya is holding for the next 3 months. Can she continue to hold, Vishnukant?
No, definitely not exit.
Okay, Shankar from Tamil Nadu is asking what's a good target price for Engineers India. He's bought it at 205. What would you recommend here, Vishnu?
PIL.
Yes.
So,
okay, the next one is on Cipla.
I think he's just giving out a view
on Engineers
India.
Go ahead.
Go ahead, Vishnukant.
1 second. Well. So yes, definitely, stock is likely to extend this fall towards 240, but just don't need to get panic because of this fall. So one can hold the counter.
Okay, Cipla, is this a good time to buy from a long-term perspective? Anjali from Bengaluru is asking. Avinash?
Yeah, I think you can possibly buy it in an SIP fashion, but keep a time frame of 12 to 15 months.
Got it. Well, UPL is what our viewer Piyusha wants to invest. Asking if it's the current juncture is good enough. Now, Avinash seen the results very recently. Looks good, but the guidance is something that's also important. What's your view on the stock?
No, I think one can definitely accumulate, Puneet, if the view is long term. Recently, they decided to hive off their seed business. So, that was also one of a dampener. But I think overall medium term prospects continue to appear good.
Got it. Well, that is the end of the rapid fire as well as this edition of Ask Profit. Avinash as well as Vishnu, always a pleasure talking to both of you. Thanks so much for giving us views across a whole bunch of stocks and spaces. But viewers, all the time on this edition of Ask Profit. Thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Everyone sees a house. I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines. Others quietly change lives forever. I break down every detail. Purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others? Hi, I'm Vishal Bhargav and I'll be meeting homeowners to explore their purchase journey. Catch me, The Habitat. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharp.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. Let's take a look at where the markets are right now. They're off the low point of the day. The benchmark Nifty 50 trading just shy of 23,950 and down about 1% or so. If you pull up the intraday chart for the Nifty 50, you will see what I'm talking about, because you have at one point of time this is where you hit the low point of the day, but since then you've actually recovered a tad bit of ground. You're still trading with cuts of about 1% though. Let's pull up the broader markets, the mid-cap index and the small-cap index. In the run-up to today, the two indices have actually outperformed, and there's been a certain amount of resilience. That is visible in trade today as well. Cuts of just about 0.6% for the mid-cap index. Pull up the small-cap index as well, and it's come off quite substantially from the low point of the day. And even here, you're seeing a relative outperformance compared with the benchmark Nifty 50. Pull up the advanced decline ratio, because this will showcase a little bit of a closing of the gap between the advances and the declines, and it's certainly a relatively better picture than you saw at the start today, where the gulf was pretty wide. Let's talk about the heat map for the Nifty 50 as well, because you have a few heavyweights that are really weighing down on the benchmark Nifty 50. You're seeing cuts of close to 6% for Titan, and this on the back of the announcement or the exhortation or appeal that was made by Prime Minister Narendra Modi to protect the rupee. And we'll talk about that. That's quite a bit of attention that we're giving to that on the show today. Interglobe Aviation losing ground. SBI on the back of that 6.5% drop on Friday is losing a further 4%. What's actually doing okay is Tata Consumer on the back of a very strong set of numbers. You have Max Health, you have Coal India, you have Sun Pharmaceuticals, and you have Grasim. So the pharmaceutical pack as a whole is doing okay. Very quickly pull up the sectoral heat map, because you will likely see the pharma pack up and about. Healthcare and pharma, there you go. The defensives are doing okay, but what else is okay? FMCG is up and about, just about 0.4% in the green. Consumer durables, realty, as well as the PSU banking pack on account of SBI losing quite a bit of ground. But earnings continues to be something that we're tracking very closely, and to that end, we've had a conversation with UPL on the back of its fourth quarter earnings. And really, the question is, how does it look at the rest of FY27 going forward? My colleague Varsha caught up with the management and discussed just that. Listen in.
Mr. Frank, my first question would be coming to you. When it comes to the revenue numbers, we're much ahead what the street was expecting. Just wanted to understand what led to this beat. Was there any one-offs, to your revenue?
So when we look at Q4, it was really a continuation of our performance for the entire year. We've seen strong volume performance right from Q1 through to Q4. As we wrapped up Q4, we did see about 20% revenue growth, which translated to about 11% revenue growth on the year, and that translated to about 20% growth on the EBITDA line. So there was no unique one-off revenue items. We saw growth in each one of our regions. So I would say the macro industry setup right now is still very challenging for the global crop protection industry, where the industry is growing in the low single digits. That being said, I think our supply chain and new product strategy really paid off for us this year, and we saw that accelerated growth in our revenue and translated all the way to the bottom line.
All right. And, Mr. Prasad, coming to you on the Middle East impact, just wanted to understand how Middle East impact will have an impact on UPL, and will you see a margin pressure when it comes to Q1 FY27, that means the next quarter?
Yeah, so I think the Middle East concern is impacting everyone. No one is excluded from this list. However, because of the way we have built our resilient core over the multiple years, we are present in over 140 countries with multiple manufacturing operations worldwide. Our R&Ds are all decentralized. What we have assessed is that there will be an impact at the finished good pricing level, but our action will be to pass on the impact to the market. It's too early to assess the entire impact and how the market will react, but we are working on it. So all the new pricing that we are doing to the customer, we are pricing it basis the replacement cost.
Okay, so that's with regards to the management of UPL, who's talking about their Q4 earnings. And currently, if you think about the fertilizer space, if you think about the chemical space, that somewhere is going to bear the brunt of what Prime Minister Narendra Modi has said. But the stock today is at the day's highest levels with gains of 4.5% coming in there. Hemant Kapadia from DR Choksi Finserv and Sudeep Bandapadhyay, Group Chairman, IndiTrade Capital, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. Hemant, let me come to you first. In terms of what's happening in the markets, last couple of trading sessions, we've been talking about a tug of war between the bulls and the bears, and there seems to be no respite. And with the way the FIDI positioning is also panning out, we are somewhere at a point where there is no direction probably. What is your view when it comes to Nifty as well as Bank Nifty? What levels would you be tracking?
A very good afternoon to you, Hiran. Thank you for having me on the show. It's always a pleasure. As far as Nifty levels, I think for the past maybe 17 trading sessions or so, we are in a range between 23,800 on the downside and 24,600 on the upside. And like you said, there is no directional bias. We seem to be going nowhere. There was a big bullish gap on the 7th of April. So that has remained uncovered. Normally, Hiral, you wouldn't expect a benchmark index to have an uncovered gap for too long. So I believe that could happen if we close below 23,800. If we don't, then this sideways meandering continues without any sense. The worry part is VIX, Hiral. Technically speaking, the VIX closes about 19.5. It's oversold. There's a recovery coming in. If it closes about 19.5, it's a problem. So that means there would be pressure on the market, while I'm still not sure whether the crude oil and the rupee dollar scenario we are out of the woods yet. So we don't seem to be going anywhere. These levels are important, but yeah, a lot of stock specific movements have happened. Bank Nifty, Hiral, if I were to take a view, it's 54,200 on the upside, 54,600, and bigger range is 57,400 to 54,200. So once again, we've been here for some 22 trading sessions going nowhere. Interesting thing is the pharma index has given a breakout, Hiral.
Yeah, very interesting. Very, very quickly, Hemant, because we want to go to the top story of the afternoon. What individual stocks are you liking?
Okay, individual stocks, two stocks. Firstly, a buy call on Hindustan Unilever is been corrective, downside limited, taken support on the 55-day EMA, indicators turning positive. Buy HUL at 2,300, stop loss 2225, target 2450. Second one is for a slightly longer term point of view, not immediate, maybe a 3 to 6 month sort of call. Sun Pharma, rounding bottom, looks beautiful in the charts, 1.5 years correction. Buy Sun Pharma at 1840, conditional buy call on a small decline. Stop loss 1740, target 2040. I believe it's conservative. We should overshoot that rather comfortably.
Okay. A whole host of stocks in focus on account of the Prime Minister's announcement yesterday. And in fact, my colleague Shrimi has picked up more information from government sources about what the intention of that was. So, Sudeep, before I come to you on a few of these stocks, let me go across to Shrimi, just so that she can tell all of us what she's picking up and what the intention of the announcement by the Prime Minister was. Shrimi, hi, what are you picking up?
Yeah, that's right, Alex. The PM Modi appeal for voluntary fuel conservation and reduced discretionary spending is actually the part of a broader effort by the central government to prepare the economy for, any sort of prolonged global uncertainty and energy market volatility. What government sources are telling NDTV Profit that the government's objective at this point is to build a nationwide voluntary public movement to help India navigate supply chain disruption. And in fact, the center is aiming, now this is very, very important point, that they are aiming up to a 20% reduction in domestic fuel demand through, both through behavioral changes as well as consumption changes. And that's why that is quite reflected in the PM Modi's speech as well on the greater use of public transport, carpooling, electric vehicle, rail freight and work from home arrangements, etc. Sources also indicating that thinking behind the move is very, very straightforward. which says that if consumption moderates, demand pressure automatically will come down and helping cooling off the prices and reduce stress on the energy market. In fact, they're indicating that recent meetings have happened where they also discussed, several countries which are taking similar sort of energy conservation and demand management measures as global conflict continue to disrupt. And in fact, they're adding that the global fuel demand may need to reduce by 3 to 4% to help stabilize prices. So clearly, there is a proper thought process behind this voluntary sort of measure which PM is speaking about, and also it's not ruling out the policy measures as well, which we need to watch out for in coming future, Alex.
Absolutely. Shrimi, thanks so much for that. The question is, Hiral, how many people have already told their bosses that they're going to work from home for the next 1 year?
I think that the conversation is constant right now where everyone is hoping that they get a work from home soon. But whether it's going to be practical or not is anyone's guess. Sudeep, let us come to you on this one. Let's break this up. We're talking about the appeal that Prime Minister Narendra Modi has made. And first up, the impact when it comes to fuel. Because the statement that Shrimi has got to us and what she's indicating is that we're looking at a 20% reduction to happen. Do you think that's a possibility? I know that the government has been aiming for 10% since quite some time. That is the vision that Prime Minister Narendra Modi had, and now we're talking of 20%. What's the kind of impact you're seeing if you have to look at OMCs or even for that matter, oil as a sector?
Well, Hiral, unfortunately, these fluctuations have a limited, utility, unfortunately. So the only way to destroy demand, which is what you want to do, you want to reduce demand for petrol, oil, gas, and pretty much everything associated. The only way to do is increase price, because that's the proven law of economics. The only way to effectively destroy demand is increase the price. So that has to happen. Without that happening, I think these fluctuations are good. They will kind of have an impact on the margin. But if you're talking about 10-20% reduction in demand, that's not going to happen through these gentle persuasions. It's not, never ever has happened, neither it will ever happen. Yes, it's a good effort. It's a good, I think Prime Minister is trying to prepare all of us for an eventual price hike in petroleum products. And I think his statement was obviously with the intention of us trying to reduce consumption. And I'm sure it will be followed up with a significant hike in petroleum product prices.
Fair point. In fact, there are some that have gone so far as to say that they expect the price increases to take place this week. But it's not the cohort of OMCs or oil marketing companies that have gotten the worst hit. It is actually the jewelers, and that's because Prime Minister Modi has urged citizens to not purchase gold for any function. And here I think primarily he was talking about gold jewelry for the next 1 year. And immediately you've had Titan, which is the worst performer in the Nifty 50, and various other counters that are losing ground. Why is it that it's so important to cut gold purchases? Let's go across to Mahima to find out. Mahima?
Alex, we're seeing pressure on all of these jewelry companies, but let's try to first understand as to why PM Modi has made such appeal, right? What happens is that India relies heavily on imported gold, and most of this gold that we import is being paid in exchange of US dollars. So basically what happens is more gold buying, more gold being imported means more exchange of US dollars, and because of that, we'll expect higher outflows in terms of dollars. Now, what is happening right now is we're already seeing pressure in terms of where oil goes. A lot of oil that we are also importing, almost 85% of crude, is also being paid in exchange of US dollars. And because of higher oil and gold imports, the demand for dollar will go up, and this adds overall pressure in terms of forex reserves, even in terms of your overall economy as a whole. Now, this combined together will also kind of put a pressure on the rupee, because that will weaken at the end of the day. And because of that, a weaker rupee will make eventually imports even more costlier, and that is why it's like a vicious circle. Because of this entire trying to control the deficit, PM Modi has kind of said that right now the importance is to be given more towards importing of crude rather than gold. Now, basically what happens is that, the imports that gets costlier, there's higher fuel prices, stickiness in terms of inflation, and this will overall add economic pressure. So gold companies will see lower store footfalls, slower jewelry sales in terms of top line growth that could see weakening. Softer festive and wedding demand is something that also could be expected because a lot of that action happens in those festive seasons. Revenue pressure will continue and slower inventory movement will also happen, and this all of this leading to margin pressure could impact the earnings for these jewelry companies in the next 1 year. And that is why we're seeing pressure in a lot of these counters coming in today. But I think it's important to also note here that the jewelry or the gold that you're already holding in, that is not going to get impacted in any way. So this is the overall view of what this development means.
All right, what's the reaction from the jewelry industry? And there is one. And that's exactly what my colleague Ridhima is picking up, because she's had a conversation with a few sources in the Jewelry Association, and they're likely to reach out to the Prime Minister's office. Ridhima, take us through what you found out.
So Jewelry Association has reached out to the PMO after the gold advisory. This is after PM Modi urged the customers that they should reduce the buying of gold for at least 1 year. Now for this, in this respect, the association will be presenting a white paper to the PMO, and their aim would be to sort of reduce and suggest ways to reduce the current account deficit due to high gold imports. And their aim is mainly to reduce the gold imports to 3 to 4 lakh crores from 8 to 10 lakh crores for now. Now this is for this, the Jewelry Association will be, the industry will be, reaching out to the PM, and this is the main suggestions which they will be giving out will be, first will be the that instead of gold jewelry, the government can issue an advisory that gold coins and bars are instead reduced for buying instead of jewelry, so that there's less pressure on that. And also they will reach out to the small traders which could get affected. They will also point this out to the PMO, and also they will flag the fact that small traders could affect it, and also this monetization of gold which could which the household gold. So the industry estimates say that around 400 tons of gold, household gold, is there which can be monetized, and they would suggest the PMO that 2.5 interest could be paid, could be introduced on this, and due to which the gold could be monetized well, and it would reduce the current account deficit.
All right. So there are a few suggestions that are being made. Thanks so much, Ridhima, for getting us those details. Let's go across to Suvankar Sen, who's Managing Director and Chief Executive Officer of Senco Gold. Suvankar, thanks so much for taking the time and for speaking to us as always, and good afternoon. This is Alex. On the face of it, Suvankar, this is a move that a lot of people will say is timely, or at least it's a call to action that a lot of people will say is timely. But there is a cost associated. There are a lot of people that are affiliated with the jewelry industry, and that's going to have an impact. First of all, can you tell us whether you're familiar with this white paper that my colleague has picked up information about, and what the reaction from the jewelry industry is going to be?
So see, this white paper, I'm not exactly aware of the content of the white paper, but over the last 6 months or a year, the industry has always been, in discussions, all of us amongst each other, that how do we mobilize the gold that is lying in the economy? Because with the gold prices going up, we have seen that almost 50% of our business that we do in retail is old gold exchange. So consumers are giving their old gold and then buying the new jewelry, which indirectly means that much quantity of gold is not getting imported into the economy. So that is one part of it. And the second part of it is that if you look at the data, especially from Jan to March and also till April of the gold imports and the usage of the gold that has got imported, you will see that for the first time, the use for jewelry has been lower. Usually on an average, it is about 45-50% is jewelry, about 30-35% is investment. But the investment demand has gone up to almost 60-65%, while jewelry demand has come down to 30%. So this has been a change, and that is where I think in the white paper is trying to explain and say that it is not jewelry that is driving the gold imports, but there is a huge amount of investment in various platforms that has also led to the large import bill on gold. So this is, I think, what the industry will try to explain to the PMO. And also, so many karigars, so many people are employed related to the jewelry industry. It adds value addition, it attains taxes. So all those aspects that are there with the industry, I think we'll just try to explain and give our point of view, while we are in fully respect of our Honorable Prime Minister, and we can be also seeing the situation on CAD and the rupee getting weaker. And we all, industry, government, the various stakeholders, the banks, everyone has to come together and come to a solution so that the 20,000 tons of gold that is lying in our economy over so many years can come to good use. That's the solution for the problem.
Right. So, Ankar, good afternoon. This is Hiral on this side. So my question is, one, you're talking about this consumption holiday in a country which is the world's second largest gold market in terms of consumption. Two, you're talking about where citizens probably should be you should stop buying. However, if you have to look at the RBI, they have been increasing their gold reserves as well. They've risen to almost by 16 to 17% of the total reserves by March 2026. Now, if you have to look at this aspect and from a consumption perspective, are you seeing any impact that could come in terms of businesses like yours?
So, this is a consumer behavior that we need to study. Those who have weddings in the family, it is a social pressure that they will need to buy some quantity of jewelry to be gifting to the bride, to the daughters, because it's culturally associated gold with the auspicious aspect of weddings or any kind of such occasion. So I don't see that it will lead a huge impact. Anyway, 50% of the consumption is happening through exchange of old gold. As an industry, we will all put our best efforts that 50% exchange of old gold goes up to 60-65%. So that will automatically take care of any kind of import. But consumers, I think, will still continue to love gold. But yes, with the appeal of our Honorable Prime Minister, there might be some impact. Those who will want to buy it, for the future will say that let us postpone the buying for some time. But, as an industry, I must tell all of you that we are working on making our jewelry lighter in terms of weight. We are working on 9 carat, 14 carat purity, which means lesser quantity and of gold is getting used. So all these efforts are being made not only to reduce the import on gold, but also to make sure that the jewelry fits into the budget of the consumer. If we talk of diamond jewelry, diamond is a component, but gold is a supporting component to the jewelry. All the lab-grown diamonds, gemstones. So I think we all as industry will also come forward for innovative products for the consumer. If you go back in 1970s, there was such a situation. Sorry, I'm taking a little bit of time. But when there was a war-like situation, the purity of gold went down. There was a lot of stones that got added to the jewelry. So I think that we all need to come together and come to a solution to save our economy.
Well said, Shivankar, and I hope an amicable solution that ultimately works for the benefit of the country is found. Thank you so much for taking the time.
Thank you.
All right, now we also spoke with Titan Chief Financial Officer Ashok Sontalia about this issue, and he says that it's too early to judge the impact of the appeal by the Prime Minister. Listen in.
It's too early to kind of comment in any definitive impact at this stage. It has just come up yesterday night. We are still assessing development and understanding implication. We will also wait and watch for a formal policy announcement around that. Our government going to take some steps to curb import or kind of demand side of the jewelry. Business has seen good momentum in Q4, which has continued so far. And of course, because it was an important appeal by Prime Minister, we will continue to do what is best for the country and always being a responsible organization. H1, Q1, Q2 still will have gold price, if you look at year-on-year basis, a significant jump, and that would support growth momentum for sure. And H2, if the gold prices remain stable, then that growth pressure can come in terms of where gold price will not be a tailwind. It is only the whatever normal way we do that will drive the Q3, Q4.
Okay, but the whole cohort of stocks under pressure today, Titan, the worst performer on the benchmark Nifty 50. The question to you, Sudeep, is can you move customer behavior? And all due respect to Prime Minister Modi, and the call that he's made is timely. But ultimately, Indians have proven in the past that they will do what they have to do when they have to do it.
Alex, unfortunately, what you're saying is correct. And it will be very, very difficult for consumption patterns to change drastically. Of course, things have changed in a manner which I think Mr. Sen was trying to explain. Lower caratage is being used more and more. That is reducing effective gold consumption, but consumption for the purposes of religious occasions, marriages, etc., is almost impossible to curtail. Of course, we need to figure out way of utilizing unutilized gold lying in households. We need to figure out ways to reduce gold imports. All that is absolutely understood and very, very critical. But to curb consumption, by appealing, I think it's extremely difficult to achieve. The requirement is genuine and real. The current pressure on currency is huge. The way the oil is behaving, the oil import bill is going up. I think rupee will continue to depreciate if we can't contain other imports and thereby try and contain the current account deficit and overall deficit in the economy. So that's why the effort is being put. But I think at some stage we have to go back to the 2013, the Tapper tantrum. That time the playbook was used by government and RBI, bring certain curtailment on LRS, bring some curtailment on gold by putting duties and things like that, and introduce some NRI deposit scheme, which kind of did stem the rot at that point of time and let the currency regain momentum on the positive side.
Quick follow-up. Would you buy any of these jewelry companies at the discounts that they're available at today?
Well, Alex, none of them are cheap. Yes, I'm always a buyer in Titan from a long-term perspective. And today's 6.5% correction definitely is an opportunity to buy from a long-term perspective.
Fair call. The third leg, and there were a few more points that the Prime Minister had made, and this had to do with reducing the consumption of petrol and diesel. Of course, this is through multiple routes, use of public transport, work from home wherever possible. There's another way to do it. You can have electric vehicles as well. And Puneet joining in to talk about the opportunity that exists for these OEMs, because in trade, you have the electric vehicle manufacturers, the primary ones, that are gaining quite considerably.
Well, most certainly, and that is the additional level of kicker that you're seeing in these stocks today. So, we'll get to the individual names in just a bit, but big resolution to use petrol and diesel sparingly. You also have mentioned that Prime Minister mentioned that people with electric vehicles should use them as much as possible at this point of time, is one of the other factors that is leading to momentum on a bunch of these stocks at this point of time. Now, this is also on the part of conserving foreign exchange on fuel, and hence all of these key beneficiaries. Now, you've seen almost a 7 to 8% move on Ather Energy today. Ola, while it being in green, up 2 to 3%, while the electric bus makers, JBM Auto as well as Electra Green Tech, the pure play EV bus makers, are also having a good day on trade today as well. When you also look at the share of EVs in the three-wheeler space, and we've highlighted this aspect, that it's now risen to almost 61% versus almost 57%. So this is the only category which has meaningful EV penetration, and you've seen that advantage to come to the likes of Mahindra, Bajaj Auto, as well as TVS till an extent as well. While for the two-wheeler space, the story is very, very different. It's just 6%. So only out of 100 scooters that get sold, only 6% or 6 scooters are electric. So let's look at the next chart also very quickly, and it will give you that perspective. So almost the EV share very, very minuscule at just 2 to 4% kind of a range that has increased in FY26, while you have hybrid CNG also gaining share, majority being petrol as well as ethanol. So you have a bigger opportunity in the two-wheeler space and seeing a higher share of price movement as well. Finally, in terms of just some individual players I want to highlight, because Sona BLW is one, almost 40% of its revenues comes from the EV space, 70% of its order book from the EV space as well. Mahindra latest quarterly earnings mentioned that 1 out of 10 vehicles sold is now electric for the company, and Nomura expects this to go to 13 to 15% in not too far away time frame. Tata Motors has hit a mark of 2.5 lakh EVs sold cumulatively over the last 3 to 4 years, while Motherson has 8.6%. This is Motherson wiring. For Bajaj Auto, TVS and Mahindra, three-wheeler makers also have a big opportunity. So that is just a play on the EV makers. You're also seeing that additional benefit coming from states like Delhi, who've now banned the registrations of two-wheelers from 2028. That's for ICE and as well. You could see a similar play coming into the other states as well. CAFE norms is going to be additional play on the EV side as well.
It's a good point. You know, we were doing a little bit of back of the envelope calculation to take a look at the running economics of EVs, and petrol at 100 rupees to 110 rupees per litre costs about 9 to 10 rupees per kilometre. A diesel is roughly 6 to 7 rupees per kilometre. And EV, particularly if you've got home charging, can be anywhere between 80 paise and 1.5 rupees per kilometre. So the running cost, there's clearly an argument to be made. Sudeep, before I come to you, let me go to Hemain on the auto pack and those that are buzzing in trade. Any opportunities that you see, Hemain?
I think JBM Auto looks interesting because it hasn't done much, Alex, for quite some time. It peaked way back in, say, February 24th, so it's been more than 2 years now. Has formed a base. I won't say double bottom, but has taken support at 490 previous bottom. Worst is over. Intermediate bottom in place. Okay. On the other half glass, full half glass empty, it's moved from 490 to 700 in a matter of 7 weeks. So on a decline, I think JBM Auto looks interesting. Worst is over. Long-term turnaround is around the corner. Alex.
Got it. So that's with regards to EV companies. Sudeep, how are you looking at this entire story play out? Because there is a narrative where we are talking about EV as a space that could be built in. A lot of euphoria with regards to hybrid that has built in as well right now. But the question is the EV infrastructure ready? Do we have that kind of capacity? And if so, what would be the recommendations?
Well, I think we are some distance away from having the infrastructure ready, and we are some distance away from actually shifting to EVs. Look, these things don't happen overnight. We are on a journey towards transition, and it will take maybe 10, 15 years before an effective transition, or at least about 50-60% of the automobiles run on electric. That is some distance away. But the process can be smoothened, the process can be kind of expedited. And the government is and probably should try to do that. And that's exactly what I think these statements and the efforts by the government will do. I think this is a step in the right direction. Don't expect miracles to happen in 2 months, 3 months, the next quarter, the second quarter, or things like that. But it's a journey, and the speeding it up will help.
Absolutely. All right. On that note, gentlemen, thanks so much for taking the time this afternoon. Pleasure having you as always. All right. Now, meanwhile, Ashwini Vaishnav and Road and Transport Minister Nitin Gadkari also echoed the sentiment that was showcased by Prime Minister Narendra Modi on cutting fuel consumption and ramping up of forex reserves. Here's what they said.
Honorable Prime Minister has given a clarion call yesterday, and I'll request all the industries and all the citizens to listen to it and implement it. Throughout this turbulence we have seen, and this is a conflict where we don't have any role. This conflict is affecting our economy and our people. So far we have withstood this conflict, the implications of this conflict. We as citizens now must take equal responsibility for this, and what our Prime Minister has requested, try to reduce expenditure on items which have foreign exchange exposure so that our foreign exchanges can be conserved. For example, our expenditure on diesel, petrol, for our expenditure on external travel, for any expenditure which can have implications on foreign exchange, we should try and conserve.
पेट्रोल डीजल का तो देश के इंटरेस्ट में प्रधानमंत्री जी ने अपील किया है, आप सब लोगों ने सहयोग करना चाहिए। जैसे अभी बहुत लोग अपने एक आदमी गाड़ी में घूमता है, उसके बजाय अभी ट्रांसपोर्ट सिस्टम में पब्लिक ट्रांसपोर्ट अच्छा करके हम गाड़ी में बजाय पब्लिक ट्रांसपोर्ट का यूज करें, मेट्रो का यूज करें। ये भाव प्रधानमंत्री जी का है, देश के इंटरेस्ट में उन्होंने बात की, आप जरूर उसको अनुरोध करिए।
Okay, so that's the word coming in from Nitin Gadkari. But as we let's also listen into what the management of Infosys had to say. My colleague Rishabh spoke to Infosys co-founder Krish Gopalakrishnan, who shares his views with NDTV Profit on the austerity call from Prime Minister Narendra Modi.
Massive corporate event happening right after the PM's clarion call yesterday to sort of some austerity measures that he suggested. What's your sense on it? Talk to us about what the industry is feeling about it.
See, clearly we have to do whatever we can. This is not something that was caused by us in India. This is something that was completely out of our control, which is affecting us. So the government will do its bit, the way it has managed the economy. It's one of the fastest growing large economy. Inflation is under control. We have kept the fuel price under control till now. But there is only so much the government alone can do. That's the reason why I believe the Prime Minister has asked all of us citizens, industry, to actually do our bit in order to actually help in this situation. This is in some sense a different kind of event, like when COVID happened, right? Very different, but affects all of us. And that's the reason why we have to all do our bit.
So there's also calls for more and more work from home, right? You're very deeply associated with the IT industry. Talk to us about what the sense is there as well.
See, even at that point I had said, this is a capability that we have now learned. And if need be in the future, we will have to go through the same thing. But having said that, I also want to say that maybe it's not, completely work from home, but maybe a day or two, maybe you can actually do this. This will also help reinforce our learning, right? There are many people who have joined after COVID and they may not have learned how to work from home. So this will allow them to actually get that experience also.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Everyone sees a house, I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines, others quietly change lives forever. I break down every detail: purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others?
Welcome back to India Market Close. In fact, it's that time where we just quickly first look at the markets because you're seeing a sharp fall that's coming in there. So 350 points in terms of Nifty 50. We're at the day's lowest levels right now. 23,821 is what you're tracking, 1.5%. Let's pull up Bank Nifty on the screens as well. And then we look at the Nifty 50 contributors which are leading to this kind of a fall. Bank Nifty not still at the day's lowest levels, but you're still seeing a cut of 1.5%. So there is pressure building up there. In terms of contributors, it's Reliance Industries, which is the top contributor to the downtick today, followed by HDFC Bank. In fact, Alex was just talking about Bharti Airtel as well. with what's happening on that stock, 4 to 5% kind of cuts coming in there. That stock also at its 52-week low. No reason as such, but yes, there is pressure. SBI is another one which is seeing some bit of pressure. So that's what's happening in terms of markets right now. Complete pressure building it. But let's also now get in Somit Sarkar with all the chatter from the dealing room. You know, Somit, yesterday we actually heard about Prime Minister Narendra Modi's appeal with 11 points. Anything that you're picking up in terms of the market reaction from your dealer checks as to how they are reading into it?
Well, definitely this, whatever commentary has come in from Prime Minister Modi has been taken negatively by the street. The sentiment is quite weak given the fact that the Prime Minister of the country is coming in and saying that there is something to be worried about and one should curb down on travel and any more foreign related expenses. So there is some concern, and that is the reason why the sentiment is overall negative in the market at this point of time. But few stocks continue to see buying action. Firstly, it's Amic Forging. Now, there are buy flows on the PMS desk. Dealers indicate a large prominent HNI will be infusing funds very soon in this counter. The stock is up nearly 8% in trade. For Keynes Tech, the stock is down in trade, but there are buy flows at the lower levels on the large HNI desk. Dealers expect strong Q4 earnings from this counter. For Cipla and Dr. Reddy's, there are sell flows on institutional desk. Dealers are expecting weak Q4 numbers from both the names going forward. And when it comes to BHEL and Hitachi Energy, there are some buy flows on institutional desk at lower levels is what dealers have highlighted. In this, both are power capital goods stock, and there are some buy flows on institutional desk and both the names at lower levels, and delivery volumes could well be on the higher side for both the names. So keep an eye out for both the counters as well.
Okay. And Somit, you track Airtel very closely, right? And the stock is down 4%. It's within 0.5% from its 52-week lows as well. The question is, why is it seeing so much pressure, and it's pretty much at the low point of the day?
Well, when it comes to Airtel, they made an announcement today morning where they said that they will reorganize their shareholding framework for Airtel Africa. Now, what people are reading into this announcement is that there could be some more capital allocation concerns that we had seen even when the company had made the NBFC announcement. Something similar could happen this time as well. Now, what could Airtel do? They could give an exit to the Mittal family. They own around, I believe, 16.3% stake directly in Airtel Africa. And previously, somewhere the management or Mr. Mittal had indicated that they would want to exit from Airtel Africa fully. So this reorganization could mean that Bharti Airtel might provide a full exit to the Indian promoter, that is Mittal, and buying out the 16.3% stake, if they'll decide to do that in one go, could cost Bharti Airtel close to 28,150 odd crore rupees. So this could be one of the concerns that investors are seeing in Bharti Airtel at this point of time. The capital allocation concern, if they provide full exit, it could cost them around 28,150 crore.
Got it. Okay. All right. Thanks so much, Somit, for that insight. We got Vinay Rajani, who's a CMT and Senior Technical and Derivative Analyst at HDFC Securities. We got Siddharth Khemka, Head of Research Wealth Management at Motilal Oswal Financial Services. Gentlemen, thanks so much for taking the time. Siddharth, I want to come to you first on the last bit that Somit was speaking about. With regard to the reorganization, I saw it in the morning, a notification that was sent out to the stock exchanges, and we were wondering what it was about. And seemingly, the insight is that it might just provide an exit for the Mittal family, and that means an outgo of capital. And so, what does it mean for Airtel, in your opinion? A lot of people talk about the fact that they have plenty of cash. Is this really a concern?
Hi, good afternoon, Alex. I think definitely a cause of concern for Bharti Airtel in this environment. So capital allocation concerns have emerged after this news flow that the Airtel Africa is likely to reorganize the shareholding framework, and more so because the Mittal family, which is through Bharti Enterprises, which is the promoter-owned for entity which is owned by the Mittals, currently own about 16.3% stake, and if they were to take a full exit, it would cost Bharti Airtel around 28,150 crores. So I think while this will consolidate Bharti Airtel's ownership in the African unit from 62% to 78%, but the massive outgo could potentially impact the dividend. So while they are free cash flow generative and a lot of cash flows is being made on a quarterly basis, but definitely that can impact the dividends in the near term. Hence, I think that is the near term concern that the market is looking at.
Siddharth, correct me if I'm wrong, the yearly cash flow generation for Bharti Airtel is what, 60,000 crore rupees?
Yes, yes.
And so therefore, they could make that up very, very quickly through internal accruals. Okay, but the point is, the stock is trading very close to 52-week lows on fundamentals as well. If I look at trailing price to earnings at around 35 times, and the 3-year average is what, 50 times. So would you say that it's looking well poised on the valuation front, or is it something that you would avoid?
Definitely, Alex, as you rightly said, there has been concerns on the fundamentals prior to this news flow that has come in today. And that is the biggest concern has been on the price hike that they have not been able to take for quite some time. And what we believe is that now with the Jio IPO coming up soon, there may not be another price hike in the near term. On the core business, they continue to do well. Sequentially, quarter after quarter, we are seeing the ARPU improvement, the free cash flow generation. Even the global businesses are now seeing a steady improvement in numbers. But what essentially the market was pricing in was a sharper price hikes that they could have taken, which has still eluded Bharti, and hence I think the stock price has come down. In terms of valuation, yes, FY27 we see a strong earnings growth, and valuations definitely has come down. And we believe that with that kind of valuation, someone who has patience and to see the near-term turmoil, both in terms of the capital allocation strategy as well as wait for the price hikes to happen, I think the Jio IPO could be also a trigger for the telecom space per se. So overall, I think stock at a good valuation, but needs patience and someone needs to hold on for at least 1 to 2 years for the valuation to improve from here on.
The interesting take when it comes to Bharti Airtel, we have Parag Thakkar also who's been absolutely positive when it comes to this one. In fact, Vinay, let me come to you. Seeing the way markets are seeing that kind of profit booking yet again, where Nifty 50 at the day's lowest levels, how are you looking at today's closing and your, I think it's time for BTST as well, so your calls for tomorrow?
Yeah, good afternoon. So market is not closing on a strong note at all. Right now, this is the third consecutive session where it is falling, and now it is on the verge of breaking the crucial support of 23,800. And now below 23,800, we can see support comes in around 23,500. So today's close is definitely a weak sign, and many sectors which were performing very well previously has started showing some profit booking signs. So it is closing on a weak note, and for traders, it is a I think we can expect some more downside in the Nifty, at least 300 points downside we can expect from here. So I think one should stay away from the longs and look for some STBT kind of bets in today's trading session. So today I can see that metal stocks have started falling, though they have been performers. But now today I can see some short-term breakdowns in some of the metal stocks. One of the stock is Hindalco, which is looking weak to me, and recently this crucial support of 1030 has been reached. So Hindalco May future can be shorted for the STBT around 1030. One can go short in May future in Hindalco. 1050 should be the stop loss, and on the downside I'm expecting a target of 1000. So 3% downside we can expect in the stock like Hindalco here.
Okay, so that's with regards to where Hindalco goes. Those are topics coming in there, and because we were talking about Bharti Airtel as well, you have a Vodafone which is in focus, because Vodafone PLC, that's eyeing an India exit, because of which that stock is seeing gains of 8.5%. And this is as per Bloomberg reports. What they're saying is that they're mulling a transfer of part stake in the India unit, and considering that they're transferring part of its shareholding to the Indian companies to hold in treasury. Now, this share transfer would actually take place in lieu of the company injecting more cash into the Indian business, which tells you that it does give some power when it comes to Vodafone Idea in terms of where operations are concerned. What it means, they're looking to transfer its shares in Vodafone Idea to Vodafone Idea, and the owners, it actually owns close to 19% stake in Vodafone Idea. they will actually transfer the stake under the name of Vodafone Idea and will hold a stake in its own company under treasury shares. This is the arrangement that you're looking at. Though there will be no impact as India investment is already written off, and it will not have to infuse any cash in the future, and it will be completely out of the India business. And when you talk about impact on Vodafone Idea, they can actually go and sell these shares in either the open market or to investors. And the value of this 19% stands at 23,160 odd crores. That's the number that you should be looking at. And if and when Vodafone sells these shares, it will receive the cash and it can be used to fund the capex plans. And the second possibility is where they can go ahead and pledge these shares with the banks and can raise a debt, and the cash that will be raised can be used to fund the capex plans. In fact, the company has said that they're planning to invest 45,000 crores in terms of network expansion. So these are the two possible outcomes that you could see. One, sell it in the open market to fund capex, or pledge the shares to fund the capex, and that's the reason why you're seeing this kind of a positive move coming in on a Vodafone Idea as we speak. Very quickly, Vinay, Bharti Airtel versus a Vodafone Idea on the charts.
Yeah, so both are in totally altogether different directions. So Bharti Airtel is about to hit a 52-week low, while Idea is altogether different, and from the level of 8 it has come to 12. So after a long time, this kind of development can be seen on the charts for the Idea. So this is not a mere pullback. It looks like that it is a reversal, and I think this stock can continue to outperform. And the immediate resistance for the stock is placed at 12.80, above which we can see a target of 14, and short-term support is placed around 11.
Got it. All right. Very quickly, let's get you an update on the Semaglutide story here in India. Nimit joining in to tell you who the biggest gainers are. Of course, it's just a couple of months, but who stands out in the lead? Nimit, what are you picking up?
Yeah, so 'tis the season to lose weight, Alex, looks like it, because honestly, it's been a huge jump since the generics have come out for all the Indian manufacturers here. The numbers say there's been a 240% month-on-month increase in semaglutide volumes. That's a 3x increase since the launch on March 20th of most of these drugs when Novo Nordisk patent expired. Now, overall, the market has moved to about 88 crores this month in April in terms of sales from 58 crores previously. But how this is spread out is very interesting. Torrent Pharma, which has both oral and injectables, has come out as a clear winner because of its diversified portfolio here. It's come out with a 38% market share in April, far outpacing anybody else. The others then that follow out are Zydus Life Sciences with 11%, Lupin has 10%, and then surprisingly, the stock that was probably in the news most because of its likeliness to Olimvic, Dr. Reddy's, is at 8%. Its share percentage is actually dropped even though its volumes have gone up. Now, why this is so is because the Torrent Pharma has a first mover's advantage. They came out with the oral drug first. Also their prices are far lower than everybody else. Now, with India looking at this as a mass market product, it's going to look like the price and the margin is going to be key here to see, even for the international companies. Speaking of the international companies, where do they stand now? The innovators of this drug. Well, turns out that their revenues also gone up, even though the chunk of their pie has come smaller because the pie has become bigger. They've also seen an increase in numbers here. The innovators still have 38% of that market share, which is pretty big. Ozempic owner Novo Nordisk, which has Ozempic, Wegovy and Ribulus, holds 25 to 27% of that market still. Important thing to note, experts point out here, is the pressure on their margins, which will go down as the race to the bottom in terms of price and weight keep on going. We'll keep you updated on this, and we see more updates soon.
Yep. Thanks so much, Nimit, for getting us those details. Flashing on the bottom of your screen, and this is the latest flows data from the mutual fund industry that's coming through from the Association of Mutual Funds in India. Of course, the most important data points that you need to focus on are the inflows into equity as a category. And first, let me tell you about the active equity category. This is where there is a fund manager in charge of choosing which stocks to invest in. That as a whole has gotten inflows of 38,440 crore rupees, and that compares with 40,450 crore rupees in the previous month, in the month of March, which was a sizable number. So it's actually stayed very strong, particularly when you account for the new fund offers, where in the month of April, you've only had one new fund offer and inflows to the extent of about 30 crore rupees in that new fund offer in the large cap category. Whereas in the month of March, you had inflows of close to 2,000 crore rupees from new fund offers. So if you remove that, it's actually a very substantial, close to 38,400 crore rupees of inflows on a net basis into actively managed equity mutual funds. Flexi cap funds, and this is something of a theme we've seen in the recent past, diversified funds have actually been getting decent flows. They've seen net inflows of over 10,000 crore rupees. Small cap and mid cap as a category have gotten 6,900 crore rupees and 6,500 plus crore rupees on a net basis respectively. And you've had substantial inflows into large and mid caps as well, to the extent of about 5,000 crore rupees. Even large cap funds have gotten inflows of 2,500 crore rupees, and the multi-cap category has gotten inflows of 3,800 crore rupees. So all very strong. What more, you continue to have inflows into the multi-asset fund category, about 5,000 crore rupees. And that's because there's a lot of interest in some of these funds which allow you to invest in multiple asset classes, including gold. Speaking of gold, gold ETFs have gotten inflows of just about 3,000 crore rupees, a far cry from a recent month in which you had 24,000 crore rupees of net inflows. But passive funds, index funds have gotten substantial inflows of about 4,600 crore rupees, and other ETFs, which is where your equity ETFs sit, has gotten inflows of 10,750 crore rupees. Now, I wouldn't be surprised, we'll hear that SIP number at 330 or approximately 335. I wouldn't be surprised if we're very close to an all-time high in the month of April, particularly because the flows have been so considerable. I don't want to go to Siddharth on this one. Siddharth, it looks like once again, the flows in the mutual fund space have been robust. Does that indicate to you that any large drops in the market will be bought into, and so therefore a base is once again formed?
Well, I think April we saw a very strong up movement in the market, especially in the broader market. If you look at, while Nifty was up 7.5%, mid cap index was up 11-12%, but small cap indices were up about 16-17%. So I think that is what is supporting the kind of strong growth in terms of the inflows in mutual funds. And I think that is where again the market opportunity lies. Overall, if you look at in terms of the quarterly results that have come out so far, the earnings growth in the broader market, that is mid and small caps, have grown at a much faster pace compared to what has been there for the aggregate large caps. And a lot of these new flows that we are seeing are largely, as you rightly highlighted, across multiple segments. But a lot of these flows would now go and chase the quality, high-growing mid and small cap companies. So definitely, I think these flows does provide a downside support to the market, which we have seen in the last 1.5 years.
Okay, and specific AMCs, do you think, look, I was looking at this, and ultimately if they're getting flows and if they're continuing to remain robust, would you say that there are AMCs that you like?
Definitely, Alex. So I think the financialization of saving as a theme that continues to do well. AMCs, wealth management companies, I think they all will benefit from this strong inflows into the mutual fund industry. What we like, our top pick is Nippon India Asset Management, which is on which we have a target price of 1,200 rupees. So a decent 20% upside. We also like Aditya Birla AMC, which is now seeing a new fund management team. Performance has started improving a lot, and we are seeing a lot of flows coming into this company. I think valuation-wise, pretty comfortable compared to some of the other larger peers. Again, here the target price is 1,230. So we see another 20% upside in Aditya Birla AMC as well.
Okay. Vinay, coming to you, if you have to look at AMCs, if you have to look at the capital market theme, anything that comes to you, because good moves coming in when it comes to BSE as well. I mean, good returns, MCX, a lot of other players which have performed well.
Yeah, so BSE and MCX are clearly into uptrend and they have been outperforming, and there is no fresh signal of buy signal on the charts, but one can continue to hold on to the long position with the trailing stop loss. That is the strategy one can adopt. As far as AMC companies are concerned, I think they have run up a lot, and right now I don't find any fresh buy signal on the charts. So better to wait for some dip to come, and then one can look at it. So for short-term traders, I would avoid going long in the AMCs at this point of time, while BSE and MCX, these exchanges can be held with the trailing stop loss approach.
Got it. Okay, gentlemen, on that note, I'd like to thank both of you for taking the time, for speaking to us. Always a pleasure speaking to you on India Market Close. And we are, unfortunately, heading towards a weak close. Pretty much at the low point of the day, 360 points shaved off of the benchmark Nifty 50, third day in a row.
And that last hour of trade is which has been painful when you talk about Nifty 50. And interesting names from a Reliance Industries, HDFC Bank, to a Bharti Airtel. Very different names which have pulled markets lower in today's session, and the breadth itself has been disappointing, right? Let's just pull up the advanced decline ratio from the way we started off for trade today to close, and you'll see the way the gap has actually widened to some extent as well after consolidating somewhere in the middle part of the day today. But clearly the pressure is building up, and that's categorically seen in terms of the kind of declines you're sitting on, and likewise in terms of broader markets. Last week, we were talking about how the week was for the small cap and the mid cap space, where you were seeing buying coming in at lowest levels, and I don't think so that has also sustained today. 5
days of gains for the small cap index at least, and you're seeing cuts of about 0.9%. Of course, there's a dip and a bounce back from that low point. But I do want to look at the contributors chart for the Nifty 50, because what Hiral was pointing out, Reliance Industries stands out, HDFC Bank stands out, 4% plus cuts for Bharti Airtel stands out, State Bank of India losing 3%. So what else?
Absolute heavyweights have been on this side of the chart, which are putting pressure.
So let's also pull up the heat map for the Nifty 50, because you will see at the bottom end of the spectrum, you will see more red certainly on the screen. Titan does not rank because of the weight that it has, but it's losing 7%. But you do have State Bank of India, you have Bharti Airtel with cuts of about 3.9%. Reliance Industries right here, that is losing quite a bit of ground. Tata Motors PV has actually recovered a little bit of ground, but you have quite a few losers. ICICI Bank managed to eke out gains, but you have Tata Consumer that stands out as a big winner today.
It's very interesting. The top gainer and the top loser
both
are
consumption players.
Consumption players, both Tata Group companies, and it's unfortunate for a Titan because post-earnings, the anticipation was that it will be a good move, but it's mainly Prime Minister Narendra Modi's comment which has actually weighed in to some extent on a Titan as well. But clearly, Sun Pharma, HUL, very far in, few of them, top 10 are the ones which are seeing gains, but otherwise completely under pressure as we speak. Let's just look at the sectoral heat map also and see what that is looking like. I'm sure it's going to be a sea of red. It's just healthcare, pharma, FMCG. There you go. That also pretty much on the borderline, but consumer durables, real estate, PSU banks, oil and gas. So majority of your consumption-driven side of it has been under pressure today, Alex.
Yeah, certainly. And the jewelers certainly stand out as the story of the day, arguably. But you have a few winners as well. And pull up, lastly, the big movers in the broader markets, if you can. Maybe the 500 movers, right? You have Rain Industries, which stands out. Very strong set of numbers coming through as we close trade. We're just a few seconds away from the close of trade. ABB stands out as arguably the stock of the day, and we're just getting you the closing rates. ABB seeing cuts of 9%, Kalyan Jewelers, AB Realty, you have Tejas that is losing ground. At the very end of trade, just pull up the intraday chart for the Nifty 50 and see where we're closing. You are seeing cuts of well over 300 points. And you're ending with cuts of 1.5% at the day's low. So the question is, how much do you carry through to the next day of trade? And really, I think that's going to have something to do with any announcements from the geopolitical side and any developments there. But I think...
And anything, if this was a sentimental-driven move, probably a bounce back in tomorrow's session could be on the cards. But again, it's anyone's guess, but completely out of time with that. It's a wrap on this edition of India Market Close from Alex, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned for Market Express next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Everyone sees a house. I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines. Others quietly change lives forever. I break down every detail. Purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others? Hi, I'm Vishal Bhargav, and I'll be meeting homeowners to explore their purchase journey. Catch me, The Habitat. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a lowdown of everything that has happened in today's trading day as well, and news and updates within the country and across the globe. Let's kick off the show with a market update also coming in. Now, the market witnessed Monday blues as global as well as domestic cues really spooked the Wall Street. When you talk about benchmarks, you're looking at profit booking in trade as Nifty failed to defend the key 24,000 level, ending near 23,800. Sensex also ended over 1,200 points lower, while broader markets also dragged in tandem with key indices. When you talk about India VIX, you're looking at about a 10% uptick coming in trade today, signaling that heightened volatility really. Moving on, then let's also move on and talk about the sectoral picture. Now, in terms of sectoral action, you do have, other than pharma counters, it was a broad-based sell-off across sectors. Travel and realty stocks led the sectoral losses with about a 3% decline that you're looking at in trade. Now, when you talk about pharma sector, that was the only one that managed to hold on to the muted gains. Moving on, then let's talk about oil prices that surged after US President Trump swiftly rejected Iran's response to Washington's peace proposal, raising fears that the Middle East conflict could drag on. The move has deepened concerns over the prolonged paralysis of shipping through the Strait of Hormuz. Now, this is a critical energy choke point that you're talking about, and you can see that impact very clearly being reflected in oil prices as well. So while Iran said that it was open to ending the war across fronts, including Lebanon, Washington's dismissal has really dimmed hopes of renewed negotiations at this point in time. With supplies already constrained and shipping lanes disrupted for weeks, markets are now bracing for tighter energy flows and higher for longer crude prices. Moving on, then let's talk about crude prices that were soaring and the Middle East war intensifying global energy risks. You do have PM Modi against this backdrop calling really a nationwide reset in economic behavior. So while addressing a rally in Telangana, the Prime Minister has warned that rising fuel and fertilizer prices are directly linked to global disruptions, urging citizens to act responsibly, from cutting fuel use and reviving work from home to avoiding foreign travel, pausing gold purchases for a year as well. And we'll talk about that in just a bit in greater detail. But before we do that, you do have the PM framing restraint as economic patriotism. The message is clear. At a time of external shocks, safeguarding foreign exchange and reducing import dependence has become a collective national responsibility. Moving on then, like I said, let's talk about jewelry stocks that came under sharp pressure after Prime Minister urged citizens to defer gold purchases and foreign travel for a year, citing some of those rising economic risks from the Middle East crisis. And shares of Titan, Senco Gold, those were some of the jewelers that were under pressure, about 6.5% knock coming in for something like a Titan. Senco Gold as well, you're looking at that 8% knock also coming in. And reacting to fears of a demand slowdown, really here, both of those jewelry makers as well addressing a public gathering. Like I said, you did have the PM talking about the foreign exchange relation of gold prices as well. So that's the key update coming in when it comes to some of those gold-linked businesses as well. Moving on then, let's talk about UPL that reported a strong set of numbers in the fourth quarter on a strong base. Company's revenue growth was driven by volumes, which was supported by favorable forex as well. And when you talk about the contribution margin, you're looking at expansion led by higher capacity utilization and lower input costs, thereby driving the EBITDA. Also, the gross debt was lowered by $850 million versus last year. Management has guided for somewhere close to 10 to 14% revenue growth, while 14 to 18% EBITDA growth in the first quarter of FY27. Moving on then, let's talk about PVR Inox, where it scripted a strong turnaround in the March quarter as well, swinging back to profit after last year's loss. The company reported a net profit of 187 crore rupees, aided by healthy box office momentum and operating leverage. So it was a quite durandar quarter also coming in for them. Revenue rose about nearly 26% thereabout. EBITDA jumped over 56%, pushing margins close to 30%. The performance also got a one-time boost from 195 crore rupee gain on the sale of its stake in Zia Maize as well. Overall, we're looking at higher footfalls, strong content and cost discipline that really helped the multiplex major end the year on a very firm footing. Moving on then, let's talk about Swiggy that reported a mixed fourth quarter with food delivery showing clear momentum even as quick commerce pressures persist. Now, revenue jumped nearly 45% on a year-on-year basis. You're looking at net losses that also narrowed sharply, by the way. And when you talk about Instamart, the growth here really slowed sequentially. Losses in quick commerce are expected to remain elevated in the near term, and the company continues to hold on to its long-term growth guidance and remains confident of hitting contribution margin break-even by the first quarter of financial year 27, with capex also set to decline after two heavy investment years. The focus now really shifts firmly to execution as well as profitability visibility. Moving on then, let's talk about Bank of India that delivered a steady set of numbers in the March quarter. When you talk about the margins, they held firm despite falling loan yields. Now, when you talk about net profit, though, that also rose about 15% on a year-on-year basis. And this was largely supported by some of those healthy loan growth led by retail and MSME segments. Asset quality continued to improve with gross NPAs dropping below 2% as well, while yields on loans really declined. And lower funding costs really helped protect margins, keeping the net interest margin also stable, somewhere close to 2.6% thereabout. Overall, improving balance sheet health and control margins marked a resilient close to the financial year. Let's also talk about something like a Canara Bank that reported a mixed set of numbers in the March quarter now. You're looking at steady margins here, but pressure when it comes to core earnings. Net interest income saw modest growth on a year-on-year basis, but declined sequentially, even as lower funding costs help improve margins. Now, when you talk about the loan growth, that remained healthy, driven by retail and MSME segments. However, non-interest income, that's the one that's fallen sharply due to weaker treasury gains, dragging operating profit despite controlled expenses. And on the positive side, you're looking at lower provisions that kept credit costs in check, while asset quality improved materially with better trends across stress accounts. Moving on, then, let's talk about something like an Atlanta Electricals that delivered a robust March quarter performance, also coming in, driven by a sharp ramp-up when it comes to its new Vadodara facility and the commissioning of Atlanta Trafo. Now, strong utilization is something that you're looking at some of these legacy plants that further supported growth. Revenue more than doubled on a year-on-year basis. EBITDA surged, lifting margins to 20% on the back of operating leverage, a favorable product mix. Improved procurement efficiency is also something that you're looking at here, and the net profit also more than doubled, reflecting execution strength. With a healthy order book of nearly 2,500 crore rupees, it's no surprise that the stock was up about 5% on a daily basis, intraday basis as well, and the company is entering the new year with strong growth visibility. Moving on, then, let's talk about Bajaj Healthcare that reported a weak set of numbers in the March quarter. You're looking at revenue remaining largely flat, and this is despite some of the strong volume growth that you've seen coming in. So pricing pressure, that's something that really weighed on the stock with that 9.5% downtick also coming in. And you're also on the earnings front looking at the pressure when it comes to the domestic API business, weaker realizations that really weighed on the top line, while higher raw material costs really hurt margins as well. And the company also slipped into a net loss due to exceptional items, including income loss from the cancellation of a Middle East project. When you talk about some of these early disruptions, you're seeing that also coming from the Middle East tensions, further really adding to pressure, even as operating profitability remained relatively stable at the EBITDA level. So that's largely the earnings fine print when it comes to something like a Bajaj Healthcare. Moving on, then, let's talk about Balkrishna Industries that posted a mixed set of numbers for the March quarter as well. And revenue growth, you're looking at a steady sort of revenue growth, but profitability that's coming under a little bit of pressure. Also something that weighed on the stock with that 3.5% downtick also coming in. Revenue rose nearly 7% on a year-on-year basis and really supported by stable demand, while EBITDA growth lagged as margins slipped by about 50 basis points. You're looking at softer margin performance that really translated into a sharp decline in net profit, down close to 19% compared to last year. Overall, while top-line momentum remains intact, higher cost pressures, that's something that, along with margin compression, really emerged as a key near-term challenge for the company as well, and the stock, of course, on the day. Moving on, then, let's talk about Citi that maintained a sell rating on Balkrishna Industries as well in terms of the brokerage verdict here, while marginally raising its target price to somewhere close to 2,100 rupees. Now, let's talk about what the brokerage has talked about. They flagged that March quarter EBITDA came in slightly below expectations as higher costs offset the benefit of healthy volume growth. Now, profit after tax, that also missed estimates, worsened by negative other income, and that's also something that Citi is flagging, apart from maintaining a sell rating, of course. And you do have demand trends that remain supportive, they've said, but they do remain cautious, at least at this point in time. And the rationale for that is that they're pointing to cost pressures and earnings headwinds that continue to cap near-term upside when it comes to this counter. Moving on, then, let's talk about Sasken Technologies, and the shares surged as much as 20%. Look at that upper circuit that was hit on this particular counter as well. So it's the biggest intraday gain in a year after the engineering and digital transformation company reported its highest quarterly profit in at least the past 3 years, and signal really further margin expansion when it comes to FY27. Now, let's talk about the sharp improvement in the March quarter performance as well. So you're looking at consolidated revenue jumping about 125%. When you talk about EBITDA, that rose more than fourfold to somewhere close to 34 crore rupees as well, and operating margin that expanded to 10.2% from 5%. So look at that operating margin really doubling from a year earlier. When you talk about net profit, also saw a sharp climb of close to 127%. Moving on then, let's talk about Rain Industries that saw a sharp spike in trade as well on the back of a turnaround quarter. Look at that 13.9% uptick coming in on that particular counter. And the company, of course, saw healthy revenue growth led by carbon business and recovery in advanced materials. So that was really driving this particular gain on this particular counter. And when you talk about Rain Industries, you're looking at a net profit of 121 crores versus a loss of 138 crore on a year-on-year basis. So like I mentioned, quite the turnaround quarter coming in here. And when you talk about margins, also witnessed a sharp spike. Moving on then, let's also talk about domestic mutual fund inflows remaining strong, although equity categories saw some moderation, a little bit of moderation in the month of April. So actively managed equity funds attracted over 38,000 crore rupees during the month, slightly lower than some of your March levels. Flexi cap funds led the inflows, while overall industry flows rose sharply to more than 3 lakh crore rupees as well, highlighting continued investor participation when it comes to the markets. And on to some business news now. Let's talk about Toyota Kirloskar Motor that has announced plans to set up a new vehicle manufacturing plant in Maharashtra. And this is something that really reinforces its long-term commitment to India. You're talking about a facility that is expected to begin production in the first half of 2029. Will cater not only to domestic demand but also to neighboring markets. And Toyota says that the new plant will strengthen its production footprint, allowing greater flexibility when it comes to responding to future demand growth and market shifts, while also ensuring timely delivery of products that customers increasingly choose in the region. But this is a very important update also coming in when it comes to Toyota. Moving on then, out of the many conversations that we have on this platform, there's one that is by far and away the most, important one that you're looking at, and that's, a very important conversation that you're looking at. And let's also tune in to a little bit of commentary coming in on that front when it comes to this conversation. All right, then moving on, let's also talk to you about some other updates also coming in when it comes to Mumbai locals. And you're talking about an electric co-pilot that you're going to be getting on a GPS system that guides motormen on signals as well. So you're looking at a very important update also coming in here when it comes to the Mumbai locals. So they're definitely getting an electronic co-pilot, and that's the update that you're getting here. So it's really a facelift that you're looking at for Mumbai locals. And of course, you do have this really supporting single man drivers under high pressure as well. And that's, the important update that you're looking at when it comes to Mumbai locals. Let's also move on and talk to you about Supreme Court mandating faster bail disposal. And that's also very important to take a look at right now, because, when you talk about the Supreme Court, this particular faster bail disposal is extremely important to take a look at. That is an important story that we're tracking at this hour as well, and more details lined up on the later half of the show when it comes to Supreme Court in terms of this particular mandate on faster bail disposal. Moving on then, let's also get you the word coming in from IMD as well. And extreme weather is hitting India. Rain, heat and storm alerts are across states, and this is something that you're looking at as a very important update coming in. Now, of course, the weather situation has been something that we've been talking to you on a very frequent basis on the channel, and this is something that you're looking at as an important update coming in. Heavy rain forecast in Kerala, Tamil Nadu, Northeast that you're looking at, which is also very important to take a look at. When you talk about northern regions, they're bracing for thunderstorms as well. And that's also something that you should be noting. Winds up to 60 kilometers per hour simultaneously. You do have Rajasthan, Gujarat and western Madhya Pradesh facing localized heat wave threats with travel, power, supply and agriculture at risk. The country must be preparing for extreme weather volatility, and that's the important update that you're looking at on the weather front. Moving on then, let's talk about health authorities that are racing to contain an international hantavirus outbreak linked to a cruise ship after an American and a French national tested positive upon returning home. Both were repatriated in biocontainment unit as a precaution, while a second American showed mild symptoms as well. The outbreak has been linked to the MV Honduras docked in Spain, where 3 passengers have died. Officials say that the Andes strain, believed to have been contracted in South America, can spread between humans, raising global concern as dozens of passengers are traced and isolated. Moving on then, Iran's Foreign Minister Sayyid Abbas Araghchi is expected to visit India this week to attend the BRICS Foreign Ministers meeting in New Delhi at a time of heightened tensions in West Asia as well. The meeting will act as a key build-up to the 18th BRICS summit slated for September, where leaders of major emerging economies are set to gather with global geopolitics under strain and economic uncertainty really rising. The discussions, of course, are expected to focus on regional stability, diplomacy, and the evolving role of BRICS on the global stage. Moving on, then, US President Donald Trump and Chinese President Xi Jinping are set for high-stakes talks in Beijing, covering flashpoints ranging from Iran and Taiwan to artificial intelligence and nuclear weapons as well. And the meeting is Trump's first visit to China in years, the leaders' first face-to-face in over 6 months. Comes as Washington and Beijing really try to stabilize relations strained by trade tensions and the Iran war. Both sides are also weighing whether to extend a critical minerals deal that underpins global supply chains as diplomacy really attempts to temper rising geopolitical risks. Moving on then, let's talk about a move to impeach Philippine Vice President as well that has crossed a critical political hurdle. Lawmakers in the lower house voted overwhelmingly in favor of an impeachment complaint, securing well beyond the one-third support required. The development now sets the stage for a trial in the Senate, a process that could seriously derail the ambitions of running for president for the vice president as well. The impeachment really this particular push really is reflecting rising political tensions in Manila and marks a pivotal moment that could reshape the country's leadership landscape in the run-up to future elections. And an Airbus A330 operated by Turkish Airlines caught fire in its right rear tire during landing at Kathmandu's Tribhuvan International Airport. All 277 passengers and 11 crew were safely evacuated as airport firefighters extinguished the blaze. The runway was temporarily closed as well for inspections, but no injuries, thankfully, were reported and operations have since resumed. Moving on then, after 15 years cut off from global financial networks, Syria has reintroduced Visa and MasterCard services. Alongside launching its own Primera system, a major push to modernize digital payments is something that you're looking at integrate into the world economy as well. Central bank approval now allows domestic banks and merchants to accept international cards, marking a significant step toward financial inclusion and a gradual end to isolation as well. And moving on, then, pop star Dua Lipa has filed a $15 million lawsuit against Samsung in the United States, alleging that the company used her image on television packaging without permission. According to court filings, in fact, in California, Samsung allegedly used a photograph of the singer's face across multiple TV models sold in the US, and the case is expected to intensify the debate around celebrity image rights and commercial usage. And Barcelona champions once again with Marcus Rashford and Ferran Torres scoring the goals that seal the title as well. The club secured their 29th Spanish League title, and that's after beating Real Madrid 2-0 in the Clásico. Rashford's impact since arriving and Torres' crucial contribution, that's something that you're looking at that proved as a decisive on a memorable night for the Catalan club as well. And this Barca moved an unassailable 14 points clear of second place with 3 matches remaining. Moving on, then, let's talk about Arsenal that have taken a huge step towards the Premier League title with a 1-0 win over West Ham. But the match ends in controversy after a dramatic 95th minute West Ham equalizer that is ruled out by VAR following a lengthy review. The decision, of course, sparked major debate while Arsenal moved 5 points clear at the top. And moving on then, while talking to NDTV Profit, market experts like Pankaj Tibrewal of Ikigai Asset Manager and Vikas Khimani of Carnelian Asset Management also discussed their top stock picks in this volatile market and how can one really protect their portfolio amid geopolitical turmoil. Let's go across and listen here.
Sectors you talked about, precision engineering, chemicals. One more exciting idea that you're seeing right now. Not stocks, but sectors.
So I think financials at this price looks to be quite a bargain. I have not seen that the largest PSU bank and the largest private banks trading at almost the same multiples. I think you have seen almost 5, 6, 7 years of time correction. This time there is no balance sheet issue. Unlike previous cycles, there was balance sheet loan loss problem. They are the best provided 80% loan loss provision. Credit growth is picking up. Managements are good. And they are trading at a record bargain valuation. So I think that will be the third sector if you were to ask me to add that. And I think consumer discretionary, many new age businesses, many good franchise which are available and derated over the last 3-5 years. And they are seeing pickup in growth. So I would bet my money there in all these names. But I think, again, I repeat, rather than sectoral calls, bottom-up stock picking will work in the next 12 to 18, 24 months. Market Nifty may not move too much. We are seeing many large caps have become dinosaurs in a way. They have stopped growing, right? In this earnings season also you are seeing large caps have delivered 7-8%, mid caps have, small caps have delivered 30% plus earnings growth. So look out for companies which can deliver sustainable earnings growth over a 3-5 year period, and that's where the winners would be. Vikas.
What's on your sort of list right now, Vikas? What are you finding exciting?
So I think, our largest exposure, one of the large exposures is in BFSI, and which continues to do well and will continue to do well because, that's the one segment does not get, and within that, of course, you have to, we like, banks, we like some insurance companies, we like some capital market players, we own lots of them. Pharma CDMO is
BFSI, capital marketplace.
That's part of the BFSI, right? And, pharma and CDMO continues to remain our very large exposure. Pharma, healthcare, CDMO, so hospitals, diagnostics, some of the CDMOs. So that's again a very large exposure for us. Within manufactured space, we are auto components, we are quite positive, and the selection is very, very going on. So yeah, some of these names we've been, quite exposed to. Aviation is something I think, again, sector has no other player. It's a monopoly play, weak players. I think that can do very well.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Everyone sees a house. I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines. Others quietly change lives forever. I break down every detail. Purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others? Hi, I'm Vishal Bhargav, and I'll be meeting homeowners to explore their purchase journey. Catch me, The Habitat. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Sectors drag the market. Nifty ends in red above 23,800. Markets under pressure as Prime Minister urges to take measures amid Middle East crisis, while rupee ends at record closing low of 95 rupees 31 paise against the dollar. Jewelry stocks slid sharply after Prime Minister Modi urged citizens to pause gold buying for a year. Hospitality stocks feel the pressure also amid Middle East risks, sparking fresh concerns over a demand and forex outflow across the sectors. PM Modi urges citizens to cut fuel use, avoid foreign travel amid US-Iran war. Corporate sector also echoes Prime Minister's thoughts. Sunil Bharti Mittal says need to cut on gold import, reduce fuel consumption, and Gautam Adani pushes for energy self-reliance. Government sources tell NDTV Profit that government is exploring energy conservation steps, targets 20% drop in fuel demand via voluntary savings. Meanwhile, Defence Minister Rajnath Singh chairs meeting of informal empowered group of ministers to review the existing risks to energy supply chains and Middle East crisis. Oil prices jumped after President Trump rejects Iran's proposal keeping the Strait of Hormuz effectively shut, tightening the supplies, stoking inflation fears and pushing Brent over $103 as war risks stay elevated. Centre notifies final rules under 4 labour codes. New wage social security norms kick in. Working hours capped at 48 hours a week under the new labour regime. Iran's Foreign Minister Saeed Abbas Araghchi likely to visit India for the BRICS FM's meet, which is scheduled for 14th and 15th of May. Tamil Nadu Chief Minister Vijay's first day in Assembly. New MLAs take oath while in Bengal. In its first cabinet meeting, Shuvendu Adhikari unveiled 6 key decisions, including Bengal border fencing and Ayushman Bharat scheme launch. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take you through all the top stories of the day. Well, market witnessed Monday blues as global and domestic cues really spooked Dalal Street today. Now, the benchmarks, they witnessed profit booking in trade as Nifty failed to defend the key 24,000 levels today, ending near 23,800. Sensex also ended over 1,200 points lower, while broader markets dragged in tandem with the key indices. In fact, India VIX, which is a volatility index, was up 10% in trade today, signaling the heightened volatility. Jasmeet is now here to break down all of that in market action. Jasmeet, tell us.
Well, a weak start to the week for the markets today. Nifty 50 ends in red, down about 1.5%. If you look at the broader market, even that underperforms overall benchmark performance. If you look at the top lows in Nifty 50, we have stocks like Interglobe Aviation and Titan both losing about 5% and among the top lows in Nifty 50. While this downtick comes on the back of PM Modi's appeal, where they request 11 things to follow, among which were to reduce or postpone the gold purchase for next 1 year and to also reduce non-essential travels across foreign countries to help with the overall foreign reserves. Now, if you look at the other performance of the overall Nifty, we do make a note that the sectors have ended in red, barring Nifty Pharma and Nifty FMCG. If you look at the other key aspect, we have Nifty Small Cap 250 and Mid Cap 150 both ending in red, down about 1.1%, while Kalyan Jewellers and Swiggy are among the top lowers in Nifty Mid Cap 150. If you look at the small cap space, we have stocks like Gujarat State Petronet and Jyoti Labs losing the most, among the most in Small Cap 250 as well. While in terms of the key sectors, all sectors end in red, barring Nifty FMCG and Nifty Pharma, while Nifty Realty is among the top losing sector, which lost about 3%. Aditya Birla Real Estate and Godrej Properties are among the top losers in Nifty Realty. If you look at Nifty Pharma as a particular sector, we do know that Nifty Pharma ends flat in today's trade, up about 0.2%. In terms of top gainers in Nifty Pharma, we had stocks like Abbott and Torrent Pharma gaining about 3%. Now, if you look at the key trends, Nifty PSU Bank, Nifty Oil and Gas, and Nifty Energy falls for a second consecutive day, while Nifty Auto, Nifty Bank snaps its 2 days of gaining streak. But lastly, Nifty Financial Services, Nifty Metals snap 2 days of gaining streak and loses in today's trade.
All right. Thank you so much, Jasmeet, for all those details. Now, as markets remain volatile, Kenneth Andrade of Old Bridge Mutual Fund remains cautious on FY27 earnings, saying that the slow growth really could keep the Nifty range bound between 21,000 and 24,000 levels. Listening.
We've been struggling to grow for the last 2 years, okay, 24, 25, 26. 27 was not going to be very different. What happened at the beginning of the year is just push this entire problem into the next year itself. So 27, don't expect anything. I think we'll be doing an exceptional job if we grow in the low single-digit levels. And then you have to transition to the next year, to 2027 and 28. And once you kickstart some of that resolution in 2027, 28, I think that's the year to look at.
All right. So the equity markets really heavily impacted by the Middle East crisis, which really rages on. And the rupee ended at a record closing low of 95 rupees 31 paise against the dollar, falling nearly 0.9% from Friday and marking its sharpest single-day decline since March 27th. As rising oil prices, remember, and geopolitical uncertainty really rattled the currency markets, and the pressure comes as crude prices, they surged after US President Donald Trump swiftly rejected Iran's response to Washington's peace proposal, raising fears that the Middle East conflict could really drag on longer than expected. So Brent continues to hover above $100 per barrel, while the US WTI benchmark remains elevated around $95 a barrel. So crude really impacting the overall markets. Now, amid the rising concerns over the economic fallout of the ongoing West Asia conflict, Prime Minister Narendra Modi has called for a nationwide push towards fuel conservation and also forex savings. In fact, addressing a rally in Telangana, the Prime Minister warned that the war has sharply increased the global crude and fertilizer prices, putting pressure on the India's import bill and foreign exchange reserves. In fact, PM Modi urged the citizens to reduce the petrol and diesel consumption, adopt work from home practices wherever possible. In fact, Union Minister Ashwini Vaishnav and Road and Transport and Highways Minister Nitin Gadkari also echoed the Prime Minister's call. Let's hear out Prime Minister Modi and thereafter the Union Minister Ashwini Vaishnav.
हमें पेट्रोल डीजल का उपयोग कम करना होगा। शहरों में जहां मेट्रो है, वहां हम तय करें कि हम मेट्रो का ही उपयोग करेंगे। ज्यादा से ज्यादा मेट्रो में ही जाएंगे। अगर कार में ही जाना जरूरी है, तो फिर कार पूल करने का प्रयास करें। हमने कोरोना के समय में वर्क फ्रॉम होम की, ऑनलाइन मीटिंग्स की, वीडियो कॉन्फ्रेंस की, ऐसी अनेक व्यवस्थाएं विकसित की और हमें आदत भी हो गई थी। आज समय की मांग ऐसी है कि उन व्यवस्थाओं को हम फिर से शुरू करें।
We as citizens now must take equal responsibility for this, and what our Prime Minister has requested, try to reduce expenditure on items which have foreign exchange exposure so that our foreign exchanges can be conserved. For example, our expenditure on diesel, petrol, for our expenditure on external travel, for any expenditure which can have implications on foreign exchange, we should try and conserve.
तो पेट्रोल डीजल का तो देश के इंटरेस्ट में प्रधानमंत्री जी ने अपील किया है, आप सब लोगों ने सहयोग करना चाहिए। जैसे अभी बहुत लोग अपने एक आदमी गाड़ी में घूमता है, उसके बजाय अभी ट्रांसपोर्ट सिस्टम में पब्लिक ट्रांसपोर्ट अच्छा करके हम गाड़ी में बजाय पब्लिक ट्रांसपोर्ट का यूज करें, मेट्रो का यूज करें, ये भाव प्रधानमंत्री जी का है। देश के इंटरेस्ट में उन्होंने बात की, आप जरूर उसको अनुरोध करिए।
All right, so that's the clarion call really coming in from the government that there needs to be energy conservation and self-reliance. India Inc. is now rallying behind the centre's call for economic self-reliance amid the ongoing global uncertainty that has been triggered by the West Asia crisis. In fact, Bharti Enterprises chairman Sunil Bharti Mittal backed Prime Minister Modi's appeal to cut fuel consumption. Meanwhile, Gautam Adani stressed that no nation can truly be self-reliant if it remains dependent on others for their source of energy. Let's listen in.
We need to get away from this obsession of import of gold. We need to lower our energy costs. We need to move more faster towards renewable energy in our industry. And importantly, we need to vote with our feet within our country. Spend more here, put more capex here. We need to invest more. This is not the moment to shy away. This is the moment to invest, double down in our own country, because the underlying growth is there. This is a continent of consumers, large young population wanting more products and more services. And let's give them more from India, make in India, from India, serving India. Thank you.
Supply chains are being redesigned around national interest. Energy security and digital security are no longer independent dimensions. They are now the twin foundations of national power. And it is increasingly evident that the country that control its energy will drive its industrial future.
All right, so that was about fuel efficiency and self-reliance. But Prime Minister Narendra Modi also spoke about lessening of abroad travels and in terms of also curtailing our fuel consumption. And remember, the airlines are also pressured because of the ATF prices. So let's also bring in Danish, my colleague. And the travel industry is really backing Prime Minister Modi's call to curb non-essential foreign leisure travel at a time of global economic uncertainty. Danish, what are you picking up? How is the industry responding to this call?
Well, that's correct. The domestic travel industry is completely supporting PM Modi's message yesterday, which talked about ensuring that there is less kind of international leisure travel and more focus should be on the domestic tourism. And hence, this is what we're learning from Faith, which is the Association of Hotels and Tourism Industry. They have noted that in the past few months, the airfare to Europe has gone up by 15 to 20%. And similarly, for the Far East as well, we are seeing airfare also rising more than 20%. So, which is going to create an impact also on the foreign exchange, and hence they have also said that it is a very right moment when the PM had mentioned about this. And he is also saying that after especially after the PM made this particular message yesterday, the inquiries for domestic for certain domestic destinations has started to go up. For example, Kashmir, Sikkim and other more destinations in the northeast. So the industry is getting more and more such inquiries for such locations. And all in all, if we see, Faith is really aligned with PM Modi's message on ensuring that there is less kind of international travel and there is more weightage that is given to domestic tourism destinations.
All right, Danish, thanks so much for all those details. Now, after Prime Minister Modi's push for natural farming, government reassures the farmers on fertilizer availability and also concerns triggered by the ongoing conflict and supply disruptions by the Middle East war. In fact, the government appeals farmers that there is no need to panic. Let's listen in to Aparna S. Sharma, who's the Additional Secretary, Ministry of Chemicals and Fertilizers, her remarks on this aspect.
price of fertilizer in the longer run. So the price of fertilizer is as per our policy. That is, we have the two policies. Urea policy, the price of fertilizer, the urea bag is fixed. And in the NPK fertilizer, it is as per the policy. That is, the price of DAP right now is at 1350 per 50 kg bag, and other complexes are the MRP is free. So about the use of fertilizer, I think the government has been promoting balanced use of fertilizer across the country, and towards this end, several steps have been taken at the state level. The state level interventions have been there to check diversion and hoarding. And there has been some panic buying initially. That also, our appeal is that ample stock is available. As I already informed you, about 51% of the stock for the season is available.
All right, enough stock available for the fertilizer industry despite the Middle East crisis. That's the word coming in from the government. Now, the jewelry stocks witnessed sharp selling pressure after Prime Minister Modi urged the Indians to avoid buying gold for a year to help reduce the import dependence and also conserve the foreign exchange reserves amid the rising geopolitical tensions and elevated crude prices. Now, following the Prime Minister's remark, the jewelry industry has now reached out to the PMO with suggestions to reduce gold imports through monetization schemes and curbs on gold bars and coins instead of jewelry purchases. Even as concerns around physical gold imports rise, investor appetite for paper gold remains strong. In fact, latest AMFI data has also shown that gold ETF inflows surged over 30% on a month-on-month basis to over 3,000 crore rupees in the month of April. And amid the uncertainty, remember Titan CFO, he also says that it is still too early to fully assess the impact of Prime Minister's appeal on the gold sector. Listen in.
It's too early to kind of comment in any definitive impact at this stage. It has just come up yesterday night. We are still assessing development and understanding implication. We will also wait and watch for a formal policy announcement around that. Are government going to take some steps to curb import or kind of demand side of the jewelry? Business has seen good momentum in Q4, which has continued so far. And of course, because it was an important appeal by Prime Minister, we will continue to do what is best for the country and always being a responsible organization. H1, Q1, Q2 still will have gold price, if you look at year-on-year basis, a significant jump, and that would support growth momentum for sure. And H2, if the gold prices remain stable, then that growth pressure can come in terms of where gold price will not be a tailwind. It is only the whatever normal way we do that will drive the Q3, Q4.
All right, India's biggest labor law overhaul in decades is now fully in place, with the centre notifying the rules for all 4 labour codes, replacing 29 existing laws with a single framework. Now, the new system brings changes to wages, social security, industrial relations, as well as workplace safety, while capping the work week at 48 hours. Now, the reforms also mandate appointment letters for the workers, expand social security coverage to the gig and platform workers, and introduce new norms around wages and benefits. To help break this down further, I'm now joined by Puneet Gupta, who's a partner at People Advisory Services Tax EY India. So good to have you, Puneet, on NDTV Profit. What does this landmark labor code really mean for the country and for the employee or the laborers, good, healthy working conditions in our economy?
Yeah. So, Nisha, thank you for having me. Of course, a major transformational reform. I think from an employee-worker perspective, it does multiple things. It brings everyone equal social security ambit, whether it's fixed-term employees, contract labor, third-party employees, gig workers, platform workers, the labor codes have something to offer to all class and category of employees. I think the second major thing is the whole formalization of employment by ensuring that everyone in India has a formal appointment letter, a demand to social security. I think that's again a very, very fundamental part. The other aspects is focus on health and safety, whether it's women employees working post 7 p.m., whether it is general focus on health and safety, well-being of employees. There's a lot that labor codes offer for larger employment benefit.
That's right. In fact, lots of benefits coming in and for better and more respectful working conditions for the laborers. But how are the larger corporates and corporate world really taking this? Of course, in the previous quarter, we had seen that almost all the companies had a significant amount of labor consideration, which really ate into their performance. How are you seeing them react to this, and also how much of an impact financially it's going to make?
I think, Nisha, so while, yes, there is a short-term, one-time impact that the industry will have to bear because there's more social security and statutory benefits that needs to be offered to employees. And that obviously means additional costs for the organizations. But organizations also are welcoming the change that the labor codes entail by offering standardization in a lot of these provisions, which were very ambiguous before, by ensuring that everything is now within a structured framework. There's more clarity on some of these norms. Industries at the same time welcoming the move. And they realize that the short-term, one-time financial impact, hopefully, probably will be for the larger good of the economy, will mean more money in the economy, more demand, and ultimately more benefit for the industry as a whole. So I think companies are still evaluating, analyzing the whole impact, implementing the internal policies and procedures to comply with the labor codes, but they are welcoming this transformational change for the country as a whole.
Very quickly, also Puneet, has the entire ecosystem also aligned with the new working condition? What is the role that you are playing also in getting the systems and processes there? What is the readiness?
I think, again, there are multiple stakeholders that have to come together to make this work. I think the government have done its part initially by ensuring that the labor codes are effective 21st November 2025. They've now last Friday notified the central rules. I think one big work still needs to happen is for the state rules to come in, because for most manufacturing, non-manufacturing organizations, the labor codes can be fully implemented only if the final state rules are notified. Everyone is hoping and expecting that state rules largely should be compliant or aligned with the central rules, but that's one still a major milestone that the government, especially at state levels, need to achieve. Then, obviously, for the corporate, there are multiple changes, right? The changes in how compensation is structured, the changes in how policies are implemented, processes have to work. So organizations are over last 3 to 4 months looking at all of these and trying and implement. But I think everyone is still waiting for the final state rules to notify. As consultants, we're obviously helping our client organizations implement this in the most optimal manner. But all stakeholders really come together.
All right. So transformational, their policy there. And thank you so much, Puneet, to help us break it down. Thank you.
Thank you so much.
All right, let's take it straight across to some of the political developments of the day. And after taking oath yesterday, C. Joseph Vijay officially begins his journey as the Chief Minister of Tamil Nadu. He attended his first session in the Assembly, and Vijay took oath as a legislator for the first time after assuming office as the Chief Minister, along with the other MLAs in the first Assembly session. Meanwhile, signs of an internal split within AIADMK became visible as the party's newly elected MLAs arrived at the Assembly in separate groups for the oath-taking ceremony. After this, Vijay met with the former Chief Minister M.K. Stalin at his home. So that formation has been done. But to another state, West Bengal, Bengal's new Chief Minister Shubhendu Adhikari moves to signal a major administrative reset. In its first cabinet meet, West Bengal Chief Minister announced 6 major decisions with border security, job recruitment, and the implementation of central schemes emerging as key priorities. One of the key decisions was also land for border fencing in 45 days and the rollout of Ayushman Bharat in the state of West Bengal. Now, the health insurance scheme, considered one of the centre's flagship welfare programs, had not been implemented in Bengal under the previous government. All right, so those are the big political developments today, but completely out of time on this edition of Profit 360. But do keep it with NDTV Profit. Thank you so much.
Everyone sees a house, I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines, others quietly change lives forever. I break down every detail: purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others? Hi, I'm Vishal Bhargav, and I'll be meeting homeowners to explore their purchase journey. Catch me, The Habitat, only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. KYC is the hottest show where I get you good companies and whether to invest in them, hold or sell position. That's also something important decisions you can take based on our analysis. But before that, I would like to give you some hints. Try to guess it and I'm sure a lot of you will guess it very fast. The first hint, and I think you'll understand, is they have a franchisee for McDonald's in South and West India. It's of course a decent mid to large cap size company. They delivered a strong quarter after a lot of stress in the industry. Also, another hint I'd like to give you, from the March lows, the stock is up 17%, but yes, it has been beaten down a lot from its high levels. I'm sure you must have guessed it by now, or maybe during the weekend you might have actually tasted or consumed their products also. It's summer season, so definitely beverage section is also there. The company in focus is Westlife Food World. That's what we'll be talking about. But the question remains is, why are we calling such a large company in our KYC show? Generally, we find companies and the news stories which are not discovered, but there are some queries on the sector. That's what we need to understand. Their footfalls, they have improved on the value meals. We need to understand, is this trend going to last? वो जो 99 rupees का meal आप खाते हैं, उसकी बात मैं कर रहा हूँ. Then let's talk about the other key questions, is the gross margins. Despite inflation being hit, how is the margins being held up? Is it operational efficiency? If yes, let's take the details. Also, why FY27, FY28 revenue and PAT estimates were cut? That's what we need to understand, and that's where a little bit of selling pressure is there in the stock. Is the dine-in recovery stronger than the delivery growth? There is always a fight. This question must ask question. Also, how will the mix evolve going ahead, the product mix, how the things will go ahead? There's so much changes happening on the consumer front, the taste front, and what are the store level ROC and payback period is very much important, and outlook for this segment. Also, can McCafe become a meaningful growth and margin driver? This is definitely there. When you are ordering a burger, there is another side corner which is having a cafe setup. That's what I'm talking about. And are there any lines for the nutrition blending with fast food? Trend change हो रहा है, QSR में भी health आ रहा है, और of course fast food भी है, and change in menu at play. Will that happen or not? All these questions we'll be asking to the management. Akshay Jatia, the CEO of Westlife Food World. But let's try to understand. I'm sure you know this company, but let's get a little bit more in details about it so that you understand what other layers are there. So this company is having the master franchisee for South and West India, and I'm sure you must be knowing about this. Apart from this, let's get into more detail. They're present in 478 restaurants across 78 cities. So there is a good coverage, especially in South and West. And apart from this, let's look at the other key reasons why the company is giving us important data. They have around 48 new restaurants in FY26. They're targeting almost 60 plus openings in FY27. Now there's an omni-channel presence as player. Delivery hai, app se order karo, dine in karo, ya drive through bhi karo. Interesting. Same store sales growth, that's at 1.5%. This has actually improved if you compare it with the other numbers. So yes, there is a little bit of inflection at play, but we need to figure out, and more data should come in. Interesting, gross margins in the fourth quarter, they expanded by 60 basis points on a sequential basis. याद रखिए महंगाई हो गई थी, उसके बावजूद आया. So this is a very important and a positive factor. Footfalls have improved as the value-led strategy is gaining traction. I spoke about the value meal packs, and that is where the interest is coming back. The Western markets, they've maintained a healthy momentum. But South market, यहाँ पे एक recovery चल रही है. That's what the numbers have been looking like. So yes, this is what we have actually qualitatively got for you for the Q4 performance. And of course, they have opened 21 stores in the fourth quarter. Apart from decoding the numbers, let's see the sales growth, how it has happened. On-premises sales growth, that means आप उनके दुकान में जाके खाना लिए, that's up 9% on a year-on-year basis. And off-premise, online, that's around 6% on a year-on-year basis. So yes, growth is there, but it's not that good. There's a Vision 2027 which they have come out with. They want to achieve a market leadership, of course, in their core day part businesses, especially in the meal strategy. Secondly, also looking at the vision, they are focusing on the omni-channel strategy, and of course, there's a lot of coverage to do in that segment as well. Also, the third important vision is the penetration of the unreserved geographical areas and to fortify the existing markets also. There is still a lot of story to be played in the tier 2, tier 3, tier 4 segments. That's where the purchasing power is coming back, and maybe that is what the street might like going ahead. And it's on track to achieve a target of 580 to 630 restaurants by year 2027. So that is something which was said in the Q4 con call as well. Interesting for this Vision 2027. But why is QSR out of favor? That's one of the biggest questions. That's why I want to address that by getting this company in our show. Of course, more local competition has come in. That's one reason. There is a sector derating at play. And if you look at the other key reasons why QSR is out of favor, this also includes your change in consumption trends. Some are going towards health, some are going towards other cuisines. So definitely the menu change is very much important. Consumption patterns are changing, and overall the investor sentiment is very muted in this sector right now. Because of course fundamental factors are there. There are technical factors at play as well. That is why QSR is out of favor right now. It's an asset heavy model in some cases also, where the expansion happens that puts strength on financials as well. And of course there are cycles to it also, and right now we are near that, so that is where we are near the lower numbers. But let's talk about the rating parameters where we'll judge the company. When the first one, let's start with income statement, and let's get you all those details, how things are moving. So first of all, the income statement for the last 3 years CAGR, that hasn't done well. I know revenue, EBITDA, profit, this has just gone nowhere for the stock. And when there is no earnings growth, you won't see any growth in the stock price. It is as simple as that. So that is where my concern comes in. The history is not good last 3 years. But there is always a silver lining to the cloud, and that is where the Q4 numbers come in, and this is where the improvement has started in. So in one side, on the short-term basis, the earnings are improving, but the long-term basis, the company has to prove it's not been good. Let's look at the margins, how that has actually panned out the story. Earlier, the margins were at around 16% and now it has moderated. It's still stuck at 13%, and kudos to the company because of their operational efficiency. At least they are offsetting the inflationary pressure right now. And remember, there is an inflationary pressure, especially for their raw materials. Of course, that includes bread, it includes milk, all cheese, all these are the important segments, even tomatoes, to name a few veggies as well. So net, Q4 numbers strong. The history, that's on the bit weaker side. To balance things out, I'm going to give this a neutral rating when it comes to the income statement. Let's talk about the balance sheet and see what's happening here. Balance sheet for a large company like this is basically managed very properly. There is definitely a little bit of borrowings because they are expanding as well. जब आप रेस्टोरेंट बनाते हो या एक्सपैंड करते हो तो आपको खर्चा लगता है, and of course there is a payback period attached to it. We'll try to understand that economics as well. It's not that complicated, but net it's a neutral rating I would give, seeing their important numbers. So income statement we have done, balance sheet we have done, both of them a neutral rating I have given, and I've given the justification for it. But cash flows, let's see what's happening here. Cash flow operations have been pretty much decent. It's a very stable model, to be honest, and when we get these size companies, there's literally, you could say, very less negatives, especially when the way they manage their cash flows, balance sheet, or even PL. That's what we have seen. There's nothing extraordinary, neither it's ordinary, it's decent. So I would like to give this a neutral rating as well. So apart from these financial numbers, let's look at the return ratios, and I have taken the ROC numbers, and that is where a little bit of pressure comes in. जब भी खर्चा होता है, balance sheet में pressure आता है, and of course there are some adjustments also. So largely we have seen this number should be around 15 to 17%. So that's a decent number. But then there is a downtick coming in FY26, and those ROC numbers are likely to be on the lower side as well for FY27 as well. That's what analysts are also talking about this. So the ROC pressure is weak. So I'm going to give this a strong thumbs down as well. So we did your income statement, we did your balance sheet, and we did your, of course, most importantly, the cash flows. That is where the neutral ratings come in, and the Westlife's return ratios ROC, that is coming down as well, and that is where my concern comes. So 4 ratios are done. Let's move on to the 5th ratio, the shareholding ratio. That's also pretty much important. and let's see how things are changing when it comes to the shareholding segment. Promoter stake largely has been unchanged. It's around 56% 2 years ago, and that has remained same. Now the change which has happened, FIs, of course FIs have been selling across the board for the last 2 to 3 years. Their holding in the company from 12% has come down to 8%. So yes, they have reduced, you could say, a significant 30 to 34% of their exposure in the company. This is the March quarter, the latest shareholding pattern which I am referring to. DIs on the other hand, they have been stable and they have lapped up, and they have lapped up since last year. They have increased the stake from 22% to 27%. So this technically nullifies each other, as public stake still remains, you could say, neutral. So I would like to give the shareholding segment a neutral rating as well. So we spoke about street cred, we spoke about the shareholding pattern, but let's look at how the valuations fare in this segment. And remember, the valuations are sky high. The way the adjustments are happening, the share prices have come down, and because of that you are seeing such a large valuations 12-month forward PE. I'm sure you must be wondering, Sharad, the peer for Westlife is Restaurants Brand Asia, which is Burger King. Remember, those numbers are in the negative side. So from the QSR players, we have taken Sapphire Foods and Jubilant FoodWorks also, and largely we see, look at the valuations, how high they are. Of course, this is a bit cheaper if you compare that with the Sapphire Foods, around 122 times a 12-month forward PE ratio as per Bloomberg data. But look at this valuation, and of course, Jubilant FoodWorks 97 times. So the valuations are not attractive entirely for the sector. So we just cannot just pinpoint Westlife Food as well. So that is why even after this correction, can a stock picker for a long term invest in the company? There will be some questions to be asked. So I'm leaving it that to you. I'm keeping this a neutral rating when it comes to the valuations portion. Of course, let's talk about street cred, how things are moving. And let's just see what's happening here. From this lifetime high levels, the street cred, it's down 48%. That's the big concern coming in for this counter. Apart from this, if you look at the March low segment, the stock has gone up to 17%, but it's a very, very minor bump up. And for the last 1 year, if you're holding the stock, you have lost 28% of your capital. And last 5 years, that's the dismal portion to look at. Just 17% of returns has come in. It is positive, but net, it is a very negative for a long-term investor. This has tested the patience and the respite or the hope or the silver lining. People are waiting for it. Maybe Q4 might be the inflection point, but it's going to take a lot of time unless it gets the premium which the company should have. So net, it's a negative rating when it comes to the street cred as well. Let's give an outlook also how things are panning out. I mentioned to you about the Vision 2027, and let's see what's happening here. But in this outlook, this is the analyst take I'm talking about, or roughly you could say around 20 plus analysts are tracking the stock. They are having 54% of them are having a buy rating, but on the other hand, the sell and hold, if you add it together, that is coming 46 odd %. So yes, there is bullishness by the analysts, but is it too much? No, it is not, because the 12-month target price from the current price is just 9% return potential in the next 12 months. So the higher return potential is also not there, and analyst community is totally divided right now in the stock, and that is why I'm going to give this a neutral rating as well. Let's give you the final rating कि KYC में मैकडोनल्ड वाली कंपनी को हमने क्या रेटिंग दी है. दिस इज इंपॉर्टेंट जस्ट टू पुट दैट इन पर्सपेक्टिव. आई हैव सिंप्लीफाइड इट फॉर यू, दैट्स व्हाई आई एम टॉकिंग अबाउट इट. Income statement, balance sheet, cash flow, it's decent, it's neutral. Of course, the history was on the negative side for the income statement, but the Q4 numbers is something where the mind changed, perception changed, and that's why I've given a neutral rating. Return ratios need to come up, they are dismal. Apart from this, shareholding is largely neutral here. DIs have lapped up, FIs have sold. Street cred, money has not been made. Last 5 years, or even you could say the last 1 year, there has been big negative returns. Valuations for the entire sector, there's a big question mark right now. Why should an investor come in this sector? I've highlighted you the QSR sector, the industry take also. Analyst take also divided. Half of them want to buy the stock, half of them want to sell or hold the stock. So net, the company is around 3 out of 8. I've given the final rating for Westlife Food World. And of course, with time,
and more changes happening, we'll definitely revisit the company in the KYC segment again. But to join us, we'll have Akshay Jatia, the CEO of Westlife Food World, where he'll take us through the earnings and also about the industry, why so much pressure coming in, a little bit details about him. He joined the company in 2014, almost 12 years experience there. And interestingly, he launched the experience portion of McDonald's. That's where the second generation comes in. We have McDelivery, McCafe, McBreakfast as well. And the education is from NYU Stern School of Business. Well, we are joined in by Akshay Jatia, the CEO of Westlife Food World. Good afternoon, Akshay. It's always a pleasure to have you. First and foremost, we'll talk about the Q4 numbers. The numbers were strong. Of course, we could say the last 2 to 3 odd years, the industry had a lot of pressure coming in. That's what we're talking about. But let's focus on your company. The footfalls improved on the value meals. How sustainable is this growth and with this heavy discounting? Am I right? This 99 rupees, schemes?
Good afternoon. Thank you for having me. I think you covered it well in terms of, Q4 has been a good, encouraging quarter in terms of footfalls. I think, this platform, we call it the everyday value platform. It is not discounting from our point of view, because this is what McDonald's stands for. These extra value meals actually form a part of the value that we offer to customers. And in addition to that, we've done a lot of work in terms of on-ground execution to make sure that customers can come in at this very attractive price point, get a great experience. And there are multiple price points within our restaurants, within our menu, where they can either trade up or add more items to their bill. So I think it's a very good platform to bring in customers. And additionally, we have enough levers to keep offering them value at our restaurant.
Right. Akshay, one interesting thing I've discovered, the gross margins were hit by inflation, but the margins actually went up. Of course, there was operational efficiency, but can you give us some more light, how your confidence is coming to have 18 to 20% margins by calendar year 27?
So there are 2-3 levers, like you rightly pointed out. Gross margin is doing better because of a lot of the operational efficiencies on the supply chain. So it's not only volumes, which also add operating leverage, but we have a very strong cost program always running in our organization, where we have to beat inflation and remove more costs from the system. So I think that has been fantastic in a very inflationary environment. Additionally, as operating leverage comes in, which we're very confident about, as you've seen a preview of it this quarter, we're further confident that this is going to drive margin expansion. And you've seen it in previous years where we've had great margin expansion due to operating leverage kicking in. Right. And let's get into a little bit more details about, what the FY27-28 revenue PAT estimates which were there. These estimates cut have started coming in despite positive commentary from the management. Is there any kind of cuts expected when it comes to the the revenue top line front for FY27-28? What are you looking at? No, so as we've pointed out, in our earnings commentary and a few interactions that we've also had, we're actually looking at mid to high single-digit SSSG growth in the following year. We're also going to be adding 60+ restaurants to our base. So that signifies high growth ambitions for the coming year, despite all the volatility in the macro. So we're very confident about how we are running the business, how we are executing on the ground, how we are propagating value for our customers. And I think that, a lot of the results that we have committed through Vision 2027, a lot of that accuracy will start setting in over the next 2 years. Right. And Akshay, apart from that, let's talk about the sectors. The in-dine segment we talk about, that recovery is now stronger than the delivery. I just want to understand, how do you see this mix evolving going ahead now? So what we've always maintained is that these are occasions to interact with our brand. And whether it's delivery or dine-in, you're eventually having McDonald's. So as long as both keep growing, we're very happy. Dine-in, I think there's a huge opportunity because our country still eats out quite less. And even when they eat out, there is a little bit of fragmentation in the market. What we've been able to do very well over the last 6 months is further core down our dine-in proposition through this everyday value platform. And as a result, we're seeing a lot of footfall traffic in our restaurants. So along with that, we'll continue to grow in delivery. But I think if we continue to see the traction that we are, you'll see a lot of broad-based holistic growth of our revenue as well as our margins. Well, that's pretty interesting. But looking at the store expansion plans, there is an aggressive plan at play.
And how the store level ROC numbers look like, and what's the payback period? If it sounds a bit, theoretical, but it's very much, understanding how does it actually work. You can just give us the exact store level ROC and the payback period for that.
So we don't break it out, but typically, if you just add kind of G&A back to our operating margin, you typically get your store operating margins, which are quite healthy. I think we've seen a lot of traction for our, cohort of stores that have been operating for more than 2 years over the last 6 months. So I'm quite confident that as even our newer stores start performing, which we're also seeing, I think you will see good expansion of margins at the store level. And as a result, you will see better paybacks, you will see better return on capital. In fact, when there was huge volume expansion in 22, 23, we did see very healthy return ratios.
Right. Akshay, this is one of your, brainchild McCafe is there. You had introduced this, and now the meaningful growth and margin contribution, has that started coming in? Because the coffee space is very much competitive, and interestingly, some of your peers have also started coming out with those products, but you already have a first mover advantage, which we have seen, most of the stakeholders know about it. Just so wanted to understand, Akshay, what are the growth points for McCafe right now?
So, like you rightly said, I think we have a competitive advantage because we already have 400 plus McCafes across our region. I think we spent a lot of time building the brand under our McDonald's brand. And I think we have become a beverage destination because as per our calculations, we probably sell more coffee than anyone else in our region, in our McCafes. I think there's huge growth coming up in front of us. I think it's just the beginning because the coffee market, like you said, is expanding. There is a lot of competition, but when that happens, a lot of people get educated in terms of what's good value and what's good coffee. And that's exactly what McCafe stands for. We've been able to communicate that well to our customers. And very recently, we launched this coffee subscription program with the intent of making McCafe a daily habit. And we're very encouraged to see the first cut of results that we have been seeing. And we're confident that this is going to allow us to build McCafe as well as our dine-in and omni-channel strategy.
Right. Interesting. But now you're an industry spokesperson also. And of course, for the larger QSRs, you're one of the faces also. But a lot of domestic QSRs are coming in. A lot of consumption trends are changing. People might like some other cuisines also. So how do you take this, as a larger QSR player? Because menu needs to be reinvented also, right? So how do you take this? How are you trying to mitigate these risks? Because there must be some plan for that.
So I think competition has always been quite intense in our country, whether it's from the newer Indian QSRs or the roadside vendors in the past. I think what we've continued to do is obviously help the market expand. We've also expanded our store footprint quite aggressively over the last decade. But I think with the emergence of newer QSRs, the QSR market will expand. And we're very happy about that because we want people to eat out more often. As they have more options, they will do that. When they do that and they eat at a McDonald's, they will see the value that we offer at Westlife, at McDonald's, which you don't get anywhere else, according to us. I think the quality of products, the price that we offer, and the experience that we offer is differentiated. So as the market expands, I think we can further display our market leadership in terms of all these factors. And I think we will be able to capture good share as people eat out more often.
Right. And Akshay, because you're a second gen person, and interestingly, you have introduced so many new initiatives. Now the initiatives for the fast food versus the protein segment or health has also come in. A lot of peers of yours are adding some kind of layers of protein and coming up with something like that. So how do you see this? If an average Indian household wants to eat out also, the fast food definition is at times junk food. So how does these trends are changing? And of course, your company, which menus are they introducing in this health segment? How do you address this?
I think as we've explored the market and done our research, I think when customers eat out, they want something called mindful indulgence. And I think at Westlife McDonald's, we've done a great job in terms of building that portfolio. We call it real food, real good. So we do have a menu where you can add more protein, for example, to your burger through our protein slice. You can customize your bun into a millet bun. But additionally, even for our core products like the aloo tikki, we've done a lot of work in order to improve the profile of the product. So it's actually been certified as a balanced meal, which means you get the right amount of carbs, fat, and protein when you eat an aloo tikki. If you add a protein slice to that, in fact, it can probably compete with, your more wholesome, nutritious options that you would get anywhere else. So I think at McDonald's, we've focused on that because that's what the customer sees as value. And I think as long as they know that they are getting a great quality meal, which they can get at a great price, which is convenient, I think we're doing our job. So I think as a result, the market is expanding and, Westlife McDonald's is here to take that expansion.
Right. Fair enough, Akshay. There's a lot of work to be done with new, dishes and meals being introduced as you are also there in the QSR industry's inflection point. It's always a pleasure to talk with you and hopefully we see something much more positive happening. Thank you very much, Akshay. So that's the management of Westlife Food World. The entire QSR industry definitely is not the sweet spot right now for the markets, but you never know where the inflection comes. And if that comes, then we'll be the first one at KYC to find these trends. So for interesting stories like this, stay tuned to NDTV Profit.
Everyone sees a house, I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines, others quietly change lives forever. I break down every detail, purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others? Hi, I'm Vishal Bhargav and I'll be meeting homeowners to explore their purchase journey. Catch me, The Habitat. Only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch out.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. If you listen to the Prime Minister, you'll probably be planning what you're going to do to fulfill what he has asked you to do. If you missed it, you should go and check it out. The Prime Minister making a statement yesterday to exhort people to protect the Indian rupee. And there are various things that he has suggested that you can do. And we're going to talk about that because ultimately it relates to your money and your money decisions. Joining me is Varun Fatehpuria, who's the founder and chief executive officer of Daulat Wealth Management. Varun, thanks so much for taking the time. I anyway wanted to talk to you about gold today. So I think it's a timely conversation to have. The Prime Minister saying that you should not be buying gold for the next 1 year. It's a big statement to make. How would you read this?
Good afternoon, Alex. So yes, I think on the face of it, definitely it's a big statement coming from the Honorable Prime Minister's mouth. But if we just look at from what he's trying to achieve through that, the appeal is fairly straightforward. It is in the national interest, and there is hard numbers behind it. So we were just doing some numbers, and what he's essentially telling us is that gold actually represents one of the single largest foreign exchange outflow for us, India as a country, given that we import close to 700, 800 tons of gold every year. And that translates to about $50 billion of foreign exchange outflow, the single largest outflow after crude. Now, what he's essentially trying to tell us is that gold actually represents one of the only demand-side levers that we have under our control that we can really use to actually cut down the foreign exchange outflow, bring the current account deficit under control, bring the balance of payments under control. Because crude at about $100, $105, $120 a barrel, I think that is a variable that we do not have much control over, depending on how the geopolitical situation actually ends up evolving. So if we can actually cut down that import bill, defer our gold purchases by about a year, I think that will significantly help in cutting down the overall import bill that we have as a country and hopefully improve the balance of payment situation. So that is what the appeal is that Prime Minister Narendra Modi is making to the citizens of the country.
Yeah, there's more beyond that as well, and we'll talk about certain aspects of that. But here's the trade-off, right, Varun? If you're an average Indian, and you're looking at this and you're making the distinction to say that I'm going to look at gold as consumption, which is gold jewelry, and I'm going to put that aside. I'm not going to do that. But from the perspective of gold as an investment, that's where it gets a little complicated, because as an Indian, as an investor, you need to also bear in mind the effect of the rupee, because whether we like it or not, it is going to depreciate. And gold is one of the best hedges against that rupee depreciation. So should you still, if you have less gold in your portfolio, go out and add, and in what form should you add?
So I think obviously, Alex, let's sort of take a step back and see most of where Indians are invested in from an investment perspective. I'm leaving aside consumption or the kind of gold and jewelry and bars that we typically end up using for our children's marriage, so on and so forth. That's an emotional, that's a cultural decision. So that's not for today's talking. But let's say just from an investment perspective, whether we are buying physical gold, whether we are buying digital gold, whether we are buying a gold ETF, fund of fund, all of them just represents different forms of ownership of gold. The underlying still remains physical gold, right? So even if we were to say that tomorrow we are not going to, let's say, stop our purchases of physical gold and rather reroute our investment to a ETF or a fund of fund, that still actually requires the AMC or the manager to actually go out and buy physical gold to give you that ownership in an electronic format. So that's not really sort of changing anything per se, right? I think just the format of ownership changes, but the underlying still remains physical gold. So that's to your ownership question. I think from a broader portfolio perspective, typically we advocate keep about 10%, 15% of your portfolio to gold. But given the strong run-up that we have seen over the last 2.5 years, there is a very high likelihood that the number would have sort of significantly increased. So if that's the case, I would sort of encourage investors to actually try and bring that number back to your original intended asset allocation to 10, 15% of the portfolio. So that's how I would broadly look at gold today, Alex, in an investor's portfolio, both from an allocation perspective and from a form of ownership perspective.
So would it be, if you're already at 5, 10, 15%, don't add at this point? If you're at 0, maybe on the balance, you can, on a monthly basis, add a little bit and don't go and add that full 10% at one go. Is that the right approach?
Yes, definitely. I think this is not the time to double down on gold, and not just because what has happened yesterday with the appeal, I think just generally given the run-up that we have seen, I think it's only prudent that investors sort of, take small steps, stagger that purchase over a 6-month, 9-month period. And in the interim, if you see a drawdown and if you still want to double down, then that would probably be a good point. But as things stand today, I would slightly be a bit more cautious and not just go all in with my gold exposure, even if I'm in that 7, 8, 10% range in my overall portfolio.
Okay, a quick follow-up here, because ETFs are generally suggested as the way to go. Of course, the sovereign gold bond was the best thing to do, and ever since the budget, it's not really an option that anybody can consider unless they bought it at the issue time, right? And it's not being issued anymore. So therefore, either gold ETFs or gold mutual funds. But there's also the electronic gold receipts. Should that be considered right now?
So Alex, if I look at gold, let's say a gold ETF or a fund-of-fund wrapper which invests in a gold ETF, which further mandated by SEBI to invest about 90-95% of its assets in physical gold, I think EGR or electronic gold receipt, which was recently launched by NSE just last week, actually represents, I would say, it is an exchange-traded security. Let's see what EGR is, right? It is an exchange-traded security that represents physical ownership of gold in a SEBI-approved vault, right? So when you're buying an EGR, there is someone out there in a vault that is putting gold in a rack and attaching a label to that gold that represents ownership. The only difference is that you hold these receipts in a demat account, and at the time of redemption, you have the opportunity to actually ask for physical delivery. So nothing changes apart from that if you want to shift your ownership from a gold ETF to a gold EGR, you're still essentially at the end of the day buying physical gold, or someone on your behalf is buying physical gold. So that overall import bill that we have been talking about continues to tick up. Nothing really changes over there. It is only the form of ownership changes in an ETF or an EGR.
Okay. So we'll circle back and talk about gold another day, but I do want to talk about certain things that you can do apart from that, because there are two other mentions that the Prime Minister made, and one related to reducing petrol and diesel. And you can do that either by working from home if you have the ability to do so, or you can contemplate shifting to an EV. And I just asked Varun this. Varun, I asked you whether there is a case to be made to acquire an EV and what the unit economics are. Of course, the preconditions are that you have the ability to charge, etc. How do they stack up?
So Alex, we were just actually doing the numbers, and the numbers present in front of us are actually quite shocking, right? So just for the benefit of our viewers, let me sort of run through the numbers at a very high level. So today, let's say if you were to purchase a petrol or a diesel car, let's start with the petrol car, right? Today, petrol on an average costs about, let's say, 105 rupees a litre, and the fuel efficiency goes to about 10-12 kilometers per litre. So your running cost of actually owning a petrol car, and I'm not talking about your cost of ownership from, let's say, purchasing that car, just your day-to-day running cost of a petrol car comes to about 9-10 rupees per kilometer. If I look at the diesel counterpart, assuming an average diesel rate of about 90 rupees in the country and a slightly higher fuel efficiency, that comes to about 6 rupees, 7 rupees per kilometer. So if you're owning a petrol or a diesel car, your cost of ownership on a day-to-day basis is about 6, 7 to as high as about 10 rupees. But let's say if you were to switch to an EV and not taking into account that higher upfront cost, assuming that you have the ability to actually charge at home, today most of the domestic tariff, Alex, in our country costs about 6 to 8 rupees a unit. And on one unit, you can typically run about 7 to 8 kilometers. And I'm talking about real world efficiency numbers. So your actually cost of ownership in an EV on a day-to-day basis, your per kilometer cost actually comes down drastically to about 1 to 1.5 rupees. That's it. Compared to about 7-8 rupees for petrol and 6 to 7 rupees for a diesel car. So your cost of ownership, your day-to-day maintenance actually comes down significantly if you were to actually go and buy an EV. Now, some people also question that, okay, then if you're buying an EV, then the electricity also needs to be powered. And today in a country like India, about 70% of our actually electricity demand is met through coal, which is procured domestically. So you're not really adding to the import bill from that point of view as well. So just doing a like-to-like comparison, if we were to really listen to a Prime Minister's appeal, then yes, buying an EV on a day-to-day basis would actually help in reducing the import tax quite a bit.
Okay, and the last thing that you can do, of course, is that if you're planning to go overseas this year on a trip, then maybe you can look to travel domestically, and you can save quite a bit of money. People spend anywhere between $1.5 lakh to 2 lakhs to all the way up to 7 lakhs, so thereabouts. And usually that is by converting into foreign currency. So therefore, that's something to bear in mind. Varun, any advice there? Because if you think about it, if you do at least 2 of those things, you can actually set it off and have a positive footprint to that extent, if you think about it in terms of carbon footprint as well. Quick answer.
Yeah, if I just look at the entire appeal that Prime Minister has made, I think it's really trying to cut down on your foreign exchange bill. And 2 of the biggest sources continue to be crude and gold. And if we're able to actually just make use of those 2 levers, I think we'll be able to significantly help in building the nation significantly from a foreign exchange perspective. And if you're planning to, let's say, save down on your expenses as well by not traveling abroad, obviously, I think tourism in India, there's so much that we have in our country to explore.
Yeah, couldn't have said it better. Varun, thanks so much for taking the time.
Thank you, Alex.
Everyone sees a house, I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines, others quietly change lives forever. I break down every detail: purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others? Hi, I'm Vishal Bhargav, and I'll be meeting homeowners to explore their purchase journey. Catch me, The Habitat. Only on NDTV.
All right, now in the second half of today's program, I'd like to get you a voice that'll help you understand how fund managers and fund houses are planning their strategies, because there's so many moving parts as things stand right now. So let me introduce you to R. Shivakumar, who's the CIO of Axis Mutual Fund. Siva, thanks so much for taking the time. And I think a lot of people will be wondering, you've had the Prime Minister come in over the weekend and make this exhortation to say, look, you need to cut your purchases of gold, you need to stop purchasing gold for a year, you need to try and reduce your consumption of petrol and diesel. It brings to the fore a statement that this geopolitical crisis and the effect of that high energy cost is very close to home, and we've been shielded, but there is a problem. Are you seeing that when you look at companies and you're studying them and you're looking at the earnings potential? Have you factored that in FY27?
Thank you. Thank you, first of all, for having me on. It's, I think, extremely important that we discuss and understand the impact of this crisis in West Asia, not just through the lens of oil and, for example, gold, but also more broadly in terms of the supply risks that we see across commodities and as well as demand, because West Asia accounts for a significant part of our exports also. So I think it's very important to see from a macro perspective, it's this potential that we could have. It has a potential to be to bring some risks home. I think the most important risks are 2 parts. One is the commodity availability and price risk. So we are seeing pressure in terms of oil prices go up, gas prices go up, but more importantly, lack of availability of some of these products, especially gas. And that, I think, will have some impact on the industrial sector. Now, having said that, the other half of the picture is demand. And I think on the demand side, things have been a lot more resilient. most of the companies, if not all, that we're speaking to are reporting that demand conditions are quite stable and strong. So why I'm harping on that is because when you look at it from the perspective of demand satisfaction, the lack of availability of raw materials means you may be delayed in satisfying that demand for a quarter, maybe two, as long as the demand holds. But if we see demand slow down, certainly we will have to revisit our entire calculation. So the important thing right now from our perspective is to see if there are any really medium-term impact on demand. But I think on the near term, we are while we see supply disruptions, we are not really changing our views.
Okay, interesting. So it's a little bit of a dynamic situation, right? Siva, because if you think about it right now, we're basing all our expectations on the fact that the crisis is not yet over. And we have to assume at this juncture, without knowing anything else, that it could well persist for longer. And so from that perspective, we were speaking to somebody earlier today and they were saying, look, don't expect anything from FY27. If earlier the expectations for the large cap counters was an earnings growth in double digit, you'll have to dial that back to single digit. The broader markets, even in Q4, a lot of companies posting very strong bottom line growth, and there was a recovery. But if you look now, the Q4 looks like it's happened 2 years back, based on what's happening in Q1. So therefore, should you be prepared to dial down your return expectations?
No, I disagree there completely. I think the underlying momentum of the Indian economy has turned the corner, or it looks like it has turned the corner in many respects. It's not only seen in the earnings. I mean, we've had 2 quarters now, December quarter and March quarter, where the results have been pretty strong on a wide base of companies. So it's not a 1 quarter flash in the pan type of results. But more importantly, if you look at the other indicators which are there in terms of the breadth of the economy, when you take a look at bank credit was languishing at barely 9-10% kind of growth a year ago, and now we're looking at 15-16% kind of growth. Now, when people borrow, people are not borrowing just for the fun of it, because they believe that there is an opportunity to use that cash in business, right? Currency in circulation has spiked, not related to the election, but even before. For the last 6 months, you've seen an increase in currency. Again, people hold cash when they feel the need to do transactions. So in many respects, I think we have, as an economy, as a macro outlook, had really turned the corner. Now, obviously, we have to take a quarters or two pause where we'll have to reassess whether that momentum sustains. Because if the momentum gets broken, certainly we will have to reevaluate our views. But I think if the momentum holds, and at least early signs are that the macro momentum is holding, from an equity market perspective, we can live through 1 or 2 quarters of uncertainty. Okay. Yes, if this war persists for 6 months or more, certainly we will have a situation where we will have to reassess the impact on demand and on growth. But I think for now, we are seeing this as transitory. And as long as the underlying growth momentum is there, we should be seeing 4 quarters from today a lot better in terms of the economic outcome.
Okay.
2 quarters of pain, but not 4 quarters.
Okay, so that's good to hear. About strategy and incremental allocation then from this point, Siva, the broader markets have actually come back quite strongly, right, in April. If you think about it, at the benchmark level itself, small cap index gaining as much as 17-odd%, the mid cap index 13%. Earlier this week, the mid cap index trading at all-time highs. I mean, I didn't anticipate that you would say this in the month of March, but would you say that it's better to have a diversified fund kind of an approach, because fund managers can then be more nimble? And how are you managing, or how is the fund house managing their multi-cap and flexi-cap strategy at this juncture?
Good questions. Absolutely. I think what is underpinning this strong performance is the reality that while your large cap companies are in some sense constrained by overall macro, right? If, for example, last year, that is financial year 26, the second advanced estimate of GDP for nominal GDP is about 8.5%, right? So what that means is for large cap companies, that's about the bound of earnings growth. Now, the estimate for next year is, let's say, 10 or 11%. That gives you a kind of starting point that large cap should grow earnings at 10 or 11%. Some will grow more and some may grow a little bit less. But in aggregate, that because large cap companies large, diversified, and are macro sensitive, that's where large cap earnings will lie. The differentiation is really happening at the smaller companies, where I think the export sensitivity is much higher, where I think the manufacturing sector resurgence is being shown. That's showing up in mid cap and small cap. So that's where you're seeing disproportionate earnings growth, much faster than the macro economy. And that's where you're seeing money flow. That is, people who want to see that growth are not just buying large caps, but actually buying mid caps and small caps. So what has this done is that it has also tilted the valuation quite a bit. Today, mid caps and small caps, as you rightly said, have reclaimed previous highs and are trading quite expensive. And large caps actually have not traded that high, and over the last couple of years have actually derated in terms of their valuation. So in that sense, you have a situation where large caps offering slightly better value relative to its recent past, and mid caps as well, small caps certainly more expensive, with much higher growth. So a balanced approach makes a lot of sense rather than taking a hard approach that I'll only buy large caps or only buy small caps. I think you will need to take a more of a balanced approach. Today, when you take a fund like a multi-cap fund, we are 50-50 split between large cap and mid and small together. So that reason, I think, is just that we're having more valuation comfort in the larger companies. And incrementally, as we see the growth valuation trade-off getting better in mid-cap, small caps in certain pockets, that's where we will increase our allocation.
Interesting. Okay. I want to delve a little deeper into that because Siva, Axis Mutual Fund known for its growth quality bent. In that context, what is the approach and how is your portfolio strategy aligning with your philosophy when you look at deploying funds in the market right now?
So when you look at growth, I think in India is a growth market. No one is allocating to India because they see value here. I mean, the value index in India trades at 18 to 20 times. So there is no such thing as value. We have entire economies in the rest of the world where our total market is trading in single-digit Ps. So clearly, India is not a value market. Where India shines is where you can get disproportionate growth, and that is where you need to be careful. Yes, you are buying growth, you're buying high-quality companies, but are you overpaying for them? So you still need to have a bent of mind that says that I'm okay, I'm chasing growth, I want to get a share of that growth pie, but I'm not willing to pay any price for that. I need growth at reasonable price. This makes it a bit of a challenge when pockets of growth are extremely overvalued. So you need to be very careful in making those allocation decisions. As a fund house, we are very clear, it's growth first, but it's not growth at any price. You need to have a valuation framework that you have a certain target price or a fair value in mind when you're making investment decisions. It's okay to pay a small premium as long as you know where growth is headed. But we are certainly not a growth at any price type of a house. We want to be a quality growth house, but we want to respect market valuation as well.
That's an interesting perspective. So I wanted you to complete that because I have a counter argument. It's always relative, wouldn't you agree, to say, for example, that a large telecom company in India had or has a 3-year trailing PE of close to 50 times. And if it is currently trading at 35, relatively speaking, one can argue that it is cheaper in terms of valuation, and so therefore the value argument can be made?
No, it's not value. There's a big difference between outright value and relative valuation. Okay. I think we have to distinguish that very carefully. When you look at value, it is like, for example, let's say, a large country, take the case of where China was a couple of years ago. The entire market was trading at like 9 times, right? So that is value, wherein you have really, you're not talking about 35 P, you're talking about single-digit P. Even today, in Asia, you can find multiple countries which are still trading at single-digit Ps, right? So that is value, wherein you can say, okay, even if there is no growth, at this price, the earnings, even if they don't grow, will still justify me buying that market, right? It's cheap enough. But in India, we look at relative valuation because we want to buy stocks where the growth is there, disproportionate growth is there, and where I'm not overpaying for that growth. So it is very important to distinguish between the two. India is certainly not in any consideration a value market. Now, so-called value stocks in India have done well over the last 4 or 5 years, especially post-COVID, during that supply chain and commodity cycle, right? And you can argue that, yes, India is a value market. But you have to remember that in that same era, those same companies showed maybe 20% plus earnings growth. So the first quality is growth. And then they were relatively cheap, so they did really, really well. But they got the trigger for re-rating of so-called value stocks was actually growth and not the valuation themselves.
Okay.
So I think first step is identifying pockets of opportunity in terms of growth, and it has to be forward-looking. We can't look at the last couple of years' growth, but rather where is growth headed and how much are we willing to pay for.
Okay. So therefore, to the nub of the issue, Shiva, in terms of where Axis is looking at and finding opportunities, you've already indicated that you're looking at large cap and saying that relatively more comfortable picking stocks and weightage right now is relatively higher than your diversified strategies. Can you give us a few themes that the fund houses identified that should showcase opportunity in the next 1 to 2 to 3 years?
Right. See, it's when we discuss large cap versus small cap, yes, I mean, aggregate large cap seems to offer the valuation. Large cap also you need to distinguish, right? So, for example, financial services, I think we've seen significant growth coming from banks, but actually even stronger performance from non-bank financials. I think that's a space where there is good opportunity, and the multiples are reasonable. I would say in some cases cheap. But if you look at IT, for example, where growth is pretty much absent, even though valuations look like they have come off, that's a place we are still underweight. So you have to distinguish it that with the sectors where we are comfortable, where we are not. Auto is still a pocket of strength. So there are places that we can really play even in the large cap space. But if you go outside just the headline large caps, then the big theme I think that's under play is manufacturing. This ties into whether it is defense or whether there is this auto ancillaries to traditional industrials. I think there's a lot of appetite there. We're also seeing a lot of opportunities in this in the third Gulf War, which is you're seeing energy transition taking a big step forward. You're also seeing switch from fossil fuel to electrification taking a huge step forward in the next few years. So anything related to the power sector, now those stocks are expensive, and so you have to be very careful where you participate. But the opportunity exists as a theme to play at the right price or at the right time.
Okay, so actually very insightful conversation, Siva, because it tells me what your own expectations are for FY27. You're not really very bogged down. You look at this as transitory. So that's my big takeaway. Thanks so much for taking the time.
Thank you.
That brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in, and do stay tuned. This is NDTV Profit.
Everyone sees a house, I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines, others quietly change lives forever. I break down every detail: purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others? Hi, I'm Vishal Bhargav, and I'll be meeting homeowners to explore their purchase journey. Catch me, The Habitat, only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Economy.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Interesting conversation here with Rinkesh Roy. He's the Joint Managing Director and CEO at JSW Infra. Good morning, Rinkesh. It's always a pleasure to have you. Very strong set of numbers coming in, and of course the volume growth outlook from the port also doing well. Our company delivered a strong operational performance. So what led to this, and will this margin resilience continue going ahead despite a lower net profit reported?
You see, the earnings, if you see, we had given a guidance in January that we'll be touching 2,600 crores EBITDA, and that we have been able to achieve despite all the headwinds that we had with the Middle East and some problems in Morbi and everything put together. We have been able to achieve those numbers. The margins we were able to drive was on two fronts. One was that we were able to push up the earnings at our ports. And the second one was we were able to scale up our logistics business. So these two factors had helped us to increase the margins. If you look at the logistics sector, the Navkar company that we had taken over, it had an EBITDA of only 8 crores in FY25. And we were able to make a strong turnaround and get it into 118 crores this year. And the capacity utilization of that asset increased from 44% in FY25 to around 56% for the entire year in FY26. And if you look at only Q4, there the utilization went up to 60%, and in Q4 we were able to do an EBITDA of around 40 crores. This is excluding the rail business that we acquired in February 26, which further, enhanced our margins by another 25 crores. So this has been broadly the theme of how we were able to meet our guidance of 2,600 crores.
Right, and Mr. Roy, how sustainable is the growth volume play for Navkar Port? What's the trajectory looking like?
So Navkar, what we have done, and as I told you, it's a beautiful turnaround story that from 8 crores EBITDA, we have gone up to 118 crores. Last quarter, we did 40 crores EBITDA. This year, we are looking at ramping up the utilization to close to 75-80%. And moving this needle up to around 160 crores in the current year. Along with it, we have taken 1 or 2 more terminals to Navkar. We are adding container rig fleets. So all this will be our guidance in logistics, including Navkar, would be around 400 crores for this year. That's FY27.
Pretty much interesting, but the rail rig segment, already Q4 numbers also, there was contribution there, but not that meaningful. But when will the meaningful contribution start, especially to the EBITDA levels?
So if you look at when we took over Navkar, we had 8 rigs with us. That was in October 24. We had 8 rigs. From there, we have now scaled up the rig operations up to 42, including the new acquisition that we did in February. And we have already placed an order for 40 more rigs. Our target is to reach 250 rig fleet in the next 3 to 4 years' time. So on that, we have been very bullish about it, and we will be pursuing it as quickly as possible.
And Mr. Roy, how much capacity expansion is still locked versus how much is under the development? If you could just give us some numbers for that.
So capacity development, this is with respect to ports, if we look at it. So I'll just split it up into 2 parts. One is the port part. So the ports, we are looking at a movement from 180 million tons current capacity, and to be precise, 183 million tons per annum as we speak, to 300 million tons by FY28, and adding another 100 million tons capacity by FY30. And this does not include, again I repeat, this does not include major privatization initiatives being taken by the Government of India to privatize terminals across the major ports. So that is a 400 plus drive. So in the journey from 183 to 300, all the works are on ground, they are happening, all the clearances are available. From 300 to 400, we have already in the process of getting the statutory clearances. So these are not something as a figment of my imagination. These are something which are rooted on ground, and these are going to happen. So by FY28, if you look at the entire journey, what we have said is that we will be roughly doubling our EBITDA. So the capacity as it jumps, it will be roughly doubling our EBITDA. Along with it, we are scaling up the rakes business as well as the logistics business. So in future, you will gradually see a decoupling of cargo port growth versus EBITDA, because we are now looking at an integrated piece. That is logistics, ports put together. We're looking at a more of an integrated product that we'll be offering.
Right. Of course, the guidance has been achieved despite the war, but there are some risks. How exposed are Fujairah's operation, to these prolonged geopolitical risks right now?
So, in between our entire management team, we had gone to Fujairah during that ceasefire period. So we had been there. The very positive development there is that these ports, Fujairah, Khor Khafan, Dibba, and let us say the ports in Oman. So all these are outside the Straits of Hormuz. So everyone there, including the UAE government, is giving a lot of focus on development of these strategic ports. In between, a rail line has also been laid between Fujairah and Abu Dhabi. So there we are now seeing a lot of cargo movement taking place. So in future, our estimation is the developments are highly positive. And as and when the crisis, this is not going to be a long drawn-out crisis. As and when the crisis gets over, we expect our operations to normalize very shortly. 50% of our capacity we expect to come up, in a very short span of time, and the balance will be doing it in a phased manner, albeit subject to the overall environment.
Right. And Mr. Roy, how much revenue visibility is existing, for FY27, and any guidance numbers if you could give us?
So we stand by the guidance we had given earlier of FY27 and FY28. We still stand by it. We delivered despite all the headwinds in March. We were able to deliver our 2,600 EBITDA. We still stand by our guidance of 3,000 crores EBITDA in FY27. And, roughly doubling it to 5,000 crores in FY28.
Right. And a quick question, will the customer mix also continue to tilt towards the third-party cargo? If you could just give us the numbers in the next 2 to 3 years, how it pans out?
Around 4-5 years back, we were only 5% third-party cargo, 95% captive. We have moved the needle last year up to 50-50. This year, the needle was at 48-52. And our estimation is as and when, let us say Jaigarh expansion or Dharamtar expansion takes place, the needle will move towards group. As and when the terminals at major ports get commissioned, the needle will again go back to third party. So the range would be between 45 to 55.
Thanks a lot, Mr. Rinkesh, for taking out your time and giving your views on NDTV Profit.
Mr. Sonthalia, thanks so much for taking the time out. There are so much to talk to you today, so you're going to take a lot of your time. So be prepared for that. But let's start off with basically how the quarter has been and what are the demand trends as they seem, because it seems like the most unusual things of all, which is analog watches, have been a star performer of sorts.
Analog watches grew 15% this quarter. They have been growing at this clip, maybe 18-20% also in the past quarters. Analog watches are growing and sustaining their growth basis the product innovation which is happening in Titan and the premiumization. And I think you will see more and more premium offering coming out of Titan stable, and we are certainly very, very hopeful that analog will continue to do well. But jewelry continued to be star in quarter 4. Neeraj, we crossed 75,000 crore mark as the Titan as a company, and I remember 1 year back we had crossed 50,000 crore. So it's a tremendous feeling that within 1 year we have added another 20,000 crore to reach to 75,000 crore mark. Jewelry business has been doing very well, not only domestic business, but internationally. And we added Damas to our fold. So from January 1, so quarter 4, Damas results were also added in the international jewelry business. And domestically, we grew 46% in jewelry. Consolidated with Damas coming in, we grew 50%. Very, very satisfying numbers.
Yeah, absolutely. Mr. Sonthalia, point taken. I just want to drill down in the jewelry space. And of course, we got a lot of questions on that as well. But the growth actually has come despite the kind of run-up in the underlying, right? So you've actually managed to grow quite substantially. Take us through why that is. Is it the mix that has gone up? Is it the fact that the blend of gold has changed in the way that people are buying?
So, this was quarter 4 was after few quarters was the first quarter where we saw healthy buyer growth at 8%. Earlier quarter, if you would have tracked us, buyer growth was almost flattish, sometime -1%, -2% kind of number. So quarter 4 from that point of view changed trajectory and 8% buyer growth, and ticket size was 40% growth. And that is how we delivered 46-47% growth. In terms of still coins are growing at a rapid pace, and they are now early double-digit part of our portfolio, which used to be a few years back low single-digit to high single-digit. Now they are kind of double-digit part of the low double-digit part of the portfolio. Studded jewelry also grew 35%. Studded has been also witnessing small buyer growth also in earlier quarters, but this quarter, of course, the buyer growth was very healthy. If you would recall, quarter 4 is always for us a diamond festival of diamond quarter, where we do a lot of activation and consumer value propositions, campaign, collections of diamond jewelry, and I think that has done well.
Absolutely. Mr. Sonthalia, Tamanna here. The times we live in is such that quarter 4 is now seeming like it's a long time ago, which is why let me ask you about the here and now. Prime Minister has put out an appeal last evening to the nation saying, buy less gold jewelry. Have your weddings and simpler weddings, but have them in India. Don't travel abroad. A lot of austerity measures have been proposed. We've seen stocks stumble this morning as a reaction. You've said you've had increase in bullion and in jewelry in the last quarter. Do you expect this to recede or retreat dramatically after what the Prime Minister has said?
You see, Tamanna, it's too early to kind of comment in any definitive impact at this stage. It has just come up yesterday night. We are still assessing development and understanding implication. We will also wait and watch for a formal policy announcement around that. Are government going to take some steps to curb import or kind of demand side of the jewelry? Business has seen good momentum in quarter 4, which has continued so far. And of course, because it was an important appeal by Prime Minister, we will continue to do what is best for the country and always being a responsible organization. But it is too early for us to kind of
understand, and I agree that it's too early to assess, and that is sort of the expected answer. But I'm just wondering, there is never going to be a formal diktat, don't go out and buy gold. It is about how people feel when there is geopolitical stress coming in. Have you seen any dip in the last 8 weeks or so in appetite?
No, Tamanna, we have not seen actually any dip in the appetite. People, because if you remember, Tamanna, there was some time back a meaningful correction in gold prices, about 10%.
Yeah.
And after that, we are seeing people are coming back more and more in the category, because general consensus in the minds of consumer is that sooner or later gold will kind of again resume its upward trajectory.
Yeah, nothing has been an advertisement for gold as much as its returns in the last 1 year, beating all asset classes. But having said that, if there are any kind of measures taken, increases in duties, making it more difficult to import gold, what is the kind of impact that you expect to see? Because already high raw material prices perhaps have had some impact on margins even in a stellar quarter, last quarter.
So you see, I'm sure government would take a holistic view because it has ramification not only for industry. Sometimes some of the curves generate parallel markets which are not healthy. So I'm sure a holistic view would be taken before policy announcements are made. Of course, higher gold prices do impact margin because of the product mix. As I spoke early in this conversation, that coin going up in the portfolio and diamond jewelry margin because of the gold component come under pressure has an impact on margin. We on our side do making jewelry more accessible through 18 karat, 14 karat, and some 9 karat also. We also launched natural gem jewelry category, which is kind of first, and we believe that can over the years become a meaningful segment. Right now, we just talk about gold jewelry, diamond jewelry, and coins. We hope to create a natural gemstone jewelry category also. So margin, if gold prices continue to go up, of course, will be under pressure. But we are doing all what we can do for making jewelry more accessible.
Sonthalia, okay, so point well made. I'm referring to guidance, and this must have come through in the management con call. The company expects a strong H1 growth of over 30%. There is a target for 15 to 20% growth over the medium term, and the margins are expected to sustain around 11% in domestic jewelry. These are actually standouts for us when we look at the commentary that has apparently taken place. Do you think that the environment, particularly the change over the last 24 hours, poses a challenge to that, Mr. Sonthalia? Because Titan ultimately has been known to be resilient in the past, which is why I'm asking.
So, some of the things, of course, yesterday we had our earnings call. We didn't call out 30% growth. We said H1, quarter 1, quarter 2 still will have gold price, if you look at year-on-year basis, a significant jump, and that would support growth momentum for sure. And H2, if the gold prices remain stable, then that growth pressure can come in terms of where gold price will not be a tailwind. It is only the whatever normal way we do that will drive the quarter 3, quarter 4. So that was the commentary yesterday. 30% number was not spoken about. And in that context, H1 seems to be high growth compared to likely H2 if gold prices remain stable. The second 11%, we have talked about always in the context of stability of gold prices. We didn't say 11% should sustain, but yeah, all are now in factor. But absolute profitability growth, we are in medium to long term very clear that revenue building blocks are there 15 to 20%, and similarly EBIT should also grow in that range. But a big factor would be behavior of gold price.
Mr. Sonthalia, what about the growth that comes in through newer centers? And the story always has been that pan-India players, larger players will eventually grow because of economies of scale and get that market going as well from the localized jewelers, if you will. How is that panning out, and what percentage of your growth over the next 2 or 3 years is actually from newer centers as opposed to same-store sales growing up in the existing ones?
So typically, Neeraj, we always talk about 11-12% or 10-11% growth comes from the same center. In the likely scenario where gold prices are moderately getting inflated in their historical trend, and 3 to 4 to 5% comes from the new centers. That's the way, and another 2-3% through various initiatives you do, and through Omni, e-com, and even the international is adding these days 2-3, and that is where 15 to 20% growth confidence comes to us over medium 3 to 5 year term. Temporarily, last 2 quarters, we have been close to 40% plus growth. Those I would say are not sustainable. They are coming because of a very, very steep rise of the gold prices. But 15 to 20%, that's the breakup. 10-11% same centers, 4-5% new centers, and 2-3% coming from international and other Omni e-com play.
And Mr. Sonthalia, Just the other thing, historical trends, now I know you use a lot of data. Typically, reduction in demand due to any exigency or a messaging or lower prices, is it demand destruction or demand delay, typically? Gold particularly I'm talking about.
We have seen they are generally demand delay. In the current uncertain environment, actually gold become more attractive asset class and investment class in the form of jewelry. But we have also seen that uncertainty of this kind will sometime impact discretionary spend in short term, not only for jewelry, but for all consumer categories. So I would still see this as a short term possible impact, maybe. And we will come to know about this in the coming weeks.
Mr. Sonthalia, let me then focus on everything apart from domestic jewelry. Because if there is going to be a challenge, and we don't know, as you say, it's too early perhaps to judge, right? So will there be an increased focus, for example, on international jewelry? You've made a significant acquisition. A lot of people are talking about the potential there, unlocking there. There is eyewear, as you pointed out, the analog watches growth is there. Eyewear is growing pretty well, double digit. So what are the plans there? So for example, from the perspective of the management, would you double down on everything not domestic jewelry in anticipation that that could be a little soft?
So far, I would say if you look at the whole Titan portfolio, and as you alluded to, we have also an engineering company, Teal, which is doing extremely well, and we are certainly supporting and doubling down on that how that can grow rapidly. Coming to international play, our TCL North America and Singapore is doing very well. We certainly are considering to opening up Canada as a new country during FY27. GCC has a temporary logistic challenges and consumer footfall related challenges because of the current environment. But all the integration activity, improvement work, some of the network conversion planning, all are happening as we speak. And we are very hopeful that medium to long-term Damas will actually add a new chapter in our playbook, where we are now going beyond Indian diaspora. So far our international play in America, Singapore, and GCC was also focused on global Indians and Indian diaspora. Through Damas, we are first time going towards Arab ethnicity, which is adjacent, I would say, ethnicity and geographically close. And this is a very important playbook for us to write a new chapter.
Just, Mr. Sonthalia, as gold prices perhaps will continue to rise, what is the kind of volume and interest you're seeing in 14 carat and 18 carat? Just wondering if that's building as a good segment as well.
Yeah, now, so you see, India used to be 22 karat gold jewelry market, but 18 karat is being well accepted now. Diamond jewelry, the base metal was 18 karat gold. Now 14 karat gold is getting well accepted. It is increasing in proportion. Might be currently quarter of the whole volume, but gradually as we progress day by day, month by month, that proportion is increasing. Even on some small scale level, 9 karat modern diamond gold jewelries are also finding acceptance in the gifting space and online space. So I think through making light jewelry, through lowering down these caratage, we are trying to make jewelry more accessible and introducing some of the new categories like natural gem, which are very colorful gold or other metal-based jewelry, to my mind is an exciting space for consumer to explore.
All right. Well, on that note, Mr. Sonthalia, we really appreciate that you've taken the time and answered a few tough questions this morning, and wish you all the best in the remainder of the first quarter and indeed FY27.
Thank you very much.
We are joined in by Praveena Rai, MD and CEO at MCX. Always a pleasure to have you. But a very standout earnings coming in across the operational parameters and, of course, beating the street estimates across the broader line numbers. Just wanted to understand what led to this growth, because I remember the 9-month numbers were also on the stronger side. So it's an extension of a strong growth coming in. So just wanted to understand what were the key triggers for that.
Hello, Sharad. Wonderful to be here. Yes, it's been a good year. I think the sort of growth momentum has carried quarter on quarter. We've closed with a a good last quarter, leading to excellent numbers over the course of the year. I think there are a number of parameters that have played out. Number one certainly is the kind of very democratic business growth that we saw across all our segments, product segments. We've had strong growth in energy. We've seen growth in metals. We've seen exceptional growth in precious metals and bullion. Now, we've also seen growth across participation segments, and we'll talk about that in a while. But very importantly, we have seen a very strong operational resilience. So a lot of our efforts and work really went into making sure that the platform holds up, the risk management is strong. Whatever is the environment at the global and domestic level, we have the ability to take it in a strong and positive way that makes the platform really work. Now, this has certainly been supported by tailwinds that have played out, creating volatility. Ultimately, we are a platform for hedging. So while the tailwinds were there, I think our ability to take that volume has really held us through. And we've also had the right products that were required for the market at that time. And I would like to wrap up by saying that the Indian economy, where it is, the kind of growth we are seeing, the need of the market, very importantly, a lot of the regulatory actions, ease of doing business, that has been something SEBI has been working on. All of these parameters have also helped the market overall in the way this growth has been supported.
Right. Praveena ma'am, just wanted to understand, there's a lot of volatility.
Everyone sees a house. I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines. Others quietly change lives forever. I break down every detail. Purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision. Same house, different outcomes. Why it worked for them? Why it didn't for others? Hi, I'm Vishal Bhargav, and I'll be meeting homeowners to explore their purchase journey. Catch me, The Habitat. Only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Good evening, I'm Vikram Oza. You're with me on The Big Question on NDTV Profit, and our focus tonight on the Prime Minister's, well, almost wartime message. It's without a war at home, and the Prime Minister is asking Indians to think and behave like it's COVID all over again. So work from home, cut travel, use less fuel, spend less on imports, even reconsider buying gold. So what the Prime Minister is saying, this is not routine advice. It is a coordinated, nationwide call to conserve foreign exchange at a moment when global risks are rising fast. And the trigger is right there before us. There is that deepening West Asia conflict, disruptions around the Strait of Hormuz. There is a surge in crude oil prices, a serious vulnerability for a country that imports more than 85% of its oil. Yes, so add to that this widening import bill. You talk about the current account deficit, there is a widening import bill, $775 billion. That was the case last year. And now with crude and gold alone draining more than $200 billion. Forex reserves had touched a record $728 billion in February. They've already slipped closer to $690 billion. The International Monetary Fund now expects India, the current account deficit of the country, to widen even further. So the government's message in that kind of scenario is what we've heard the Prime Minister say. Cut demand, reduce the dollar outflows, and brace for a prolonged period of global instability. But then here's the question. When citizens are asked to delay their travel plans, to rethink their consumption, and to adopt restraint across sectors, is this prudent, preemptive, precautionary economics? Or is it a signal that the risks ahead for the country, for the Indian economy, are far more serious? So tonight on The Big Question, we're asking this. When the Prime Minister is calling for COVID-style restraint, are we talking about precaution over here, or are we taking it a notch up? And is this an emergency and in an economic sense? This is what the Prime Minister has said.
हमें पेट्रोल डीजल का उपयोग कम करना होगा। शहरों में जहां मेट्रो है, वहां हम तय करें कि हम मेट्रो का ही उपयोग करेंगे। ज्यादा से ज्यादा मेट्रो में ही जाएंगे। अगर कार में ही जाना जरूरी है, तो फिर कार पूल करने का प्रयास करें। हमने कोरोना के समय में वर्क फ्रॉम होम की, ऑनलाइन मीटिंग्स की, वीडियो कॉन्फ्रेंस की, ऐसी अनेक व्यवस्थाएं विकसित की और हमें आदत भी हो गई थी। आज समय की मांग ऐसी है कि उन व्यवस्थाओं को हम फिर से शुरू करें।
Now, that's what we got from the Prime Minister. It's a strong advisory. It's a COVID-style restraint that the Prime Minister is exerting citizens to put in place in daily life. To put this in context and to debate whether this is precaution or emergency, let's speak to our panel. Experts joining us tonight, Jitendra Bhargav, former Executive Director at Air India. He's author of The Descent of Air India. He's going to decode the impact on the travel sector, on aviation as well. We've got Ajay Dua, former Union Secretary in the Ministry of Commerce and Industry, joining us in a moment. Madhvi Arora is already with us, Chief Economist at MK Global. She's joining us to break down the macroeconomic implications of this call for restraint. Aditya Saraswat is Senior Vice President at Rystad Energy. He's joining us from London, helping us track the energy markets and the crude dynamics that is actually driving this shift in the Indian economy. Also, for the HR perspective, Aditya Mishra is with us, Managing Director and CEO at CLHR. He's with us to assess what this really means for workplaces, what it means for consumption behavior going ahead from here. But Madhvi, let me ask you, when a Prime Minister is asking citizens to cut fuel use and defer gold purchases, avoid this foreign travel and revive work from home, you consider this proactive economic management, or you think it's a signal that there is deeper stress coming?
It's actually both, Vikram. See, India has been also a laggard in terms of these restrictions. If you look at Asia, rest of Asia actually started putting movement restrictions and some, curtailment in commercial usage of energy much before India actually even suggesting that. So we are actually way behind our Asian peers who are also, energy guzzlers. And possibly, it could be partly on account of, certain, timing constraint for the government. But I think what they're suggesting, is actually, if you look at from the larger national interest, of course, is making sense because we don't know how protracted this energy crisis could turn out to be. The world has already dipped into their reserves. Of course, there are still reserves in the world order that we can dip into, but definitely the longer this war sort of stretches, the more the pain economies like ours will have to bear. So there's nothing wrong in preparing for the same. As of now, this is just it was more like a public appeal than any kind of national constraint or public tightening that has happened. So
So you're saying we are preparing. You're saying we are preparing for what could get worse in times to come. Ajay, do weigh in on this. From the industry side, you worked in the Ministry of Commerce. Tell us, when the messaging is save foreign exchange, reduce imports, you consider this a temporary advisory or an early signal to prepare for prolonged global disruption?
Thank you for having me in this discussion, Vikram. I think what has just been said, that several measures of austerity, of tightening the belt, needed to be taken once it was clear that the war in West Asia is there to stay for a while, and it's not a temporary or a transiting kind of event. But for certain reasons, including I will be upfront, including the ongoing elections in 5 states, probably the government didn't want to take some of the more restrictive measures, including making use of the price mechanism for cutting down demand for certain things. The Prime Minister yesterday in Hyderabad has alluded to a whole lot of measures which need to be around. They need to be there. In fact, if you ask me, for a long term, and not just momentarily. But I would say that these need to be backed also by regulatory measures, including letting the markets decide what should be the price for the goods for which the supply has been disrupted. The demand isn't coming down. So let the two be allowed to be matched by the market forces.
You're saying regulatory plus market forces need to act together at a time like this. As far as the government is concerned, the signaling, how absolute is that? Is that a signaling to the regulators as well?
I think so. The government is, what the Prime Minister has stated is that, look, things are not any longer normal. I'd like you to go back to certain constraints which you had accepted during the COVID from 2020 to 2022. The time has come when we should revert to those. And at that point of time, you would recall, Vikram, some of them were regulatory changes saying you can't do this, you can't do that.
Yes.
Similarly, what I'm suggesting is, or what I make of the Prime Minister's yesterday's listing out of those 11 measures, if you broadly speak, look at it, they come to 11 or 12, is that there is need for the government to cut down, move in this direction. And in moving in this direction, I'm appealing to you. But if it happens that in the next few days, there isn't much of a move forward, then I expect the government to start making use of the measures at its disposal, as well.
So you think of this as the first step, as it were. If you were to talk about the austerity measures and get specific, Aditya Saraswat, India is importing more than 85% of its crude. Hormuz is that choke point. That is the trouble area. Now, if disruptions persist, How vulnerable do you think India is today compared to the past oil shocks that we've had?
No, I think over the recent crises, the single most structural vulnerability we have is the import dependency and the stock covers we have. So just to quantify this claim, every $10 per barrel increase in the prices adds another $14-15 billion in annual import bills. And that widens the current account deficit by 40 BPS over GDP as we speak, right? So over the last 30 years, this vulnerability hasn't changed anything structurally, but it's really positive to see our 500 gigawatt of renewable capacity plans. We have already crossed 200 halfway mark, and it is also there were some signs already emerging leading up to this announcement. Last month, we have seen the Petroleum Ministry directing the PSU oil marketers to look at the contingency planning and the supply chain flexibility there. That was not only just a rhetoric, but it was an operational measure leading up to this announcement. So all in all, we are, as you rightly pointed out, more than 85% of our we are dependent on these imports. As much as we can cut short our oil dependency, it will help us to be resilient against these shocks in the future. Work from home, however, doesn't create enough dent because we are largely driven by diesel-driven logistics, jet fuels, and other industrial feedstocks. That, again, if you cut down on those feedstocks, then that it plays and flirts around with our growth and GDP.
So you're saying work from home is not going to make a substantial impact?
No, because it's a passenger vehicles and that has a very limited share of our overall demand. It's largely the trucks and the daily transportation of your logistics, jet fuels, industrial feedstocks. That has the lion's share of your demand. And if you start constraining those feedstock, then it impacts your overall industrial growth and GDP. So it's a very, very initial step to try and position and do some sort of posturing
by the messaging. Yes. To try and curtail it through simple messaging. And that's how it's starting, like two of you have said. But before I go back to that macro picture and talk about the impact on GDP and ask Madhavi, Aditya Mishra, on the ground, since we are talking about work from home, can corporate India realistically today pivot back to work from home after spending 2 years pushing employees back to offices after the pandemic?
No, Vikram, it's going to again create some bit of a disruption. Corporate India, after a very long period of protracted efforts, has been able to get the employees back to office in large numbers. But this kind of a measure is going to create some disruption. However, considering the national security of our international reserves and all of that, this is a welcome move in that sense. And maybe many employees would like to go back to their hometowns and work from home. So the kind of balance which was achieved in terms of hybrid work environment is going to shift a bit. But in my mind, the major changes or the impact can be produced when the consumption can be slightly tweaked. For example, Honorable Prime Minister has said that we should do carpooling.
Yes.
So similarly, can the e-commerce companies, supply chain companies do some pooling, more and more of pooling, while some of them do, but can they do more and more of pooling? And can the citizens, the number of times that they order items of this quick commerce type, the number of times that some households order, can they reduce that and bring all these materials together into one order so that you save some fuel?
Yeah.
And things like this are to be thought through. School, transport of the kids and the teachers and the staff, that consumes a lot, that consists of a lot of traffic in our cities, whether some of that can be rationed. So some of these innovative methods have to really come into picture. And this carpooling as a method that Honorable Prime Minister has said, can be done for multiple other things.
Well, we talk about carpooling even when you don't have, this kind of situation. But that is in general good for the environment and good for the planet. But Madhvi, since we're talking about crude, if the prices of crude stay elevated and the import bill, which is already at $775 billion, comes under pressure, then what is going to hit us first? Is it going to be the inflation? Is it going to be further depreciation of the Indian currency, which has been substantial? Or you think our growth is going to get hit?
So it will happen in a conjunction. I mean, it will be a process wherein you will see all of these variables actually move in tandem with each other. FX is obviously the biggest move that we've seen so far because that's a more open segment of the external sector. But I think in terms of growth and inflation, that will largely be the function of as to how the pain is distributed between OMCs, government, and the consumer. As of now, what we're seeing is that the consumers are largely out of this equation. The pain is largely borne by OMCs and now followed by the government of India when they took up the excise duty cut.
Yeah.
So as of now, I think a consumer is not in the picture. So the consumer price inflation may not necessarily increase.
Yes.
Wholesale price, obviously, you will see a price shock playing out because the producer price inflation will be actually much more pronounced than the consumer price inflation. So we'll see where, how much and when the government actually increases the pump prices for us to see a reflection in CPI in the direct fashion and indirectly, of course, with a lag. On growth, again, it depends on how much burden sharing is happening between government, PSUs and the consumer. As I said, consumer is currently out of the equation, but I think ideally speaking, in a scenario where the energy cost looks to be more prolonged in nature, more pronounced in nature, consumers should be also bearing a portion of it. We are a welfare state, definitely, but we are not a socialist state. So I think to that extent, I think the consumer would eventually be a part of this equation, which will imply that the growth impact would again be a function of how much fiscal hit the government is taking on its book and how much they're actually curtailing versus, planning to spend it out or flip on their fiscal at this point in time.
We were just talking about the states,
Madhvi. Inflation. $85 per barrel on an average, which we'll see a maximum pain coming in the first quarter. We are still hopeful that, mid-year onwards, you will actually see this sort of streamline much better. So we are still playing at $85 per barrel for the average, which gives us 6.5% growth story at this point in time. And inflation, more in the likes of 4.6, 4.7%. This does not include the agriculture shock that we may face because of bad.
And we talked about the fertilizer bit as well. But Mr. Bhargav, since Madhvi is alluding towards the kind of hit that the consumers might have to take, and many of the advisories are towards the consumption side of the story, specifically calling out foreign travel over here. So how seriously do you think the aviation sector is going to take this? Could Indians actually pull back on overseas travel in a meaningful way?
They will have no option but to pull back or defer their travel plans. Considering that ATF prices are at a very elevated level, the fares have gone up. Many airlines in the world, not just India, have cancelled flights. Air India announced 100 flights cancellation because you can't operate or meet the operational costs if you keep operating at these fares. And India is a price-sensitive market. Affordability of fares is an important thing. So airlines have conventionally been selling tickets at par and making modest losses, etc. But when you are in a situation which you are currently in, you simply cannot operate flights. So it has, in fact, automatically come into the airline that the number of flights being operated, therefore the consumption of fuel has automatically gone down because the flights are being operated are less today. Correct. But to allude to this, to the COVID times, etc., is not kind of thing for the aviation industry, because when does a passenger travel? When he has a trigger for some business meeting, some social engagement, weddings, sporting events, etc. So at the moment, since the triggers are very much there, those who can afford will travel. Give airlines the right to club flights. There is no point in airlines operating multiple flights and flying at 50-60% load factor. Let them go up to 80% load factor with a proviso given by the DGCA
that higher load factors should not necessarily translate into higher fares, because you have the bucket kind of system in aviation industry. As you get on to the less number of seats being available, the fares shoot up. So DGCA must moderate it, say, look, we are allowing you to cut down your operation flights so that you can cut down on fuel consumption. You are more efficient, more productive, and the nation's priority need to be kept before your own personal commercial.
So like Mr. Dua was saying, you think DGCA as a regulator needs to put down the strictures immediately or wait for stronger guidelines from the center?
No, immediately. For example, DGCA has a lot of regulations which are pro-passengers at the moment that you penalize airline should you delay a flight beyond a certain time. Now, if you continue to hold those kind of rules, regulations, it's a burden on the airlines. Give airlines the flexibility of clubbing 2 flights up to a certain time limit and say, look, this will be allowed so that the number of flights operated are productive. Government airlines do not have to rush to the government for financial aid. And we know quite a few of our airlines are on the verge of collapse because they simply can't afford less number of passengers traveling because of elevated fares and higher operational costs.
True. Mr. Dua, India still this consumption-driven economy. So when you're talking about the Prime Minister's signaling for restraint from gold to travel that we're talking about, can it coexist with the need to keep demand alive in the economy?
I think so. The Prime Minister has talked of, say, unnecessary travel, weddings, but with the middle class being held outside the country because that's become a fad. Gold, which is not necessary, why should it be allowed to be imported? Similarly, if you can make a particular thing within India, Make in India possibility is there, why continue to import it? I am of the opinion that the war, which has disrupted certain supply chains, and in our case, many more, because we are an import-dependent economy for the 3 Fs, the fuel, food, as well as fertilizers.
Yes.
We need to be able to get ourselves down to accept the situation that for whatever reason, we've had it good for the last 3 months. The situation cannot continue this way for very much longer.
But then this route that we are taking, Madhvi, perhaps you can come in on this. Crude, gold, edible oil, fertilizers, together they account for a significant share of our imports. So if households then pull back, does it stabilize the macro picture for us? But, you know, on the other hand, you might have weakening demand on the ground.
Correct, Vikram. That's the idea in the end, right? You need to curtail demand given the supply constraint that we're sitting with, else there's a price impact which is, visible. So we don't necessarily have a current account problem at this point in time. Of course, gold share in the total imports has gone dramatically up in the last 2 years, largely owing to the price effect. It used to be like 6-7% of the total import bill. It is now touching close to 9.5% of the total import bill. There's not only just consumption demand for gold, but also investment demand for gold that is playing out. So gold plus oil itself is a very big chunk of your overall import basket. To that extent, I think the aim is to basically cut. I mean, again, as I said, it's not even a policy advisory at this point in time. It was just more like a national appeal. So we'll see how things pan out. But I think we don't have a current account problem as of now. Whatever supply shocks that we are facing, there's not much that we can do but only curtail demand around that. That's the way most Asian countries have also gone ahead, by the way.
And you know, Aditya, from what the Prime Minister has said, he's also nudging EV adoption and reducing import dependence. Is this crisis exposing how urgent India's energy transition really is? Because that's been the need for a long time. Now, that entire transition, if we can expedite it, it's really going to make things much easier. But I don't know how much can be done.
No, certainly. I think it's certainly this sort of geopolitical shocks are acting as a precise forcing function that justify accelerating energy transition in the country, right? So it's not an ideology, it's a national strategic risk management. EV adoption, both in two-wheelers and four-wheelers, certainly put a dent into passenger vehicles demand. On top of that, the call for public transportation in metro, that also substitutes personal vehicle fuel consumption in a dense urban corridors. And these two alone create a significant dent in the passenger vehicles, which alone cannot create a significant dent in overall demand, but it's certainly a right place to start in a very initial posturing stage.
Fair enough.
And on top of that, this 500 gigawatt renewable energy plant certainly cuts through the stagnant crude and fossil dependent sectors in industrial and petchems, where this empowering the power sector to cut through fossil dependent sectors can certainly help us to reduce our import dependence. And that would be the second step, where India has to show resilience and eat up this demand dependence in the industrial sector.
So Aditya Mishra, for all the measures that have been suggested and we are talking about, cutting off the fuel use, work from home, the domestic travel, buying local, which one, in your opinion, is most practical and can make an immediate difference?
I think reduction of import bill is the major focus that the Prime Minister is trying to achieve. So whether it is about converting it to EVs or carpooling or, the gold, reducing the gold consumption and some of these things, I see there is an opportunity here for our domestic industry in renewables, for example, maybe the GCCs as an example, and some innovative startups to come in if government can support some of these policies on a little longer term horizon. I think most effective is going to bring people together by this national appeal. And if some policies are formed to shape this national appeal into action over a longer period of time, rather than just one-off announcement and hoping that some results will come.
Well, that's a hope, but this is clearly not a routine advisory from the Prime Minister's side when he himself is asking citizens to cut consumption, to defer spending, to think twice before using resources. It does tell you that the risks ahead are real and possibly prolonged. And this is India now trying to get ahead of a possible global shock, because once it hits, reacting late is not going to be an option. My thanks to my panelists, Ajay Dua, Jitendra Bhargava, Madhvi Arora, Aditya Saraswat and Aditya Mishra. Thank you so much for joining us with your perspective tonight. For us, as we are consumers at this time, the clarion call has come in. Now, how much further the centre is going to go in putting down the strictures, that remains to be seen. But it's really going to test the resilience of our economy. It's a piece that we are watching very closely, as indeed I'm sure you are as well. I'm Vikram Oza on The Big Question. Thank you for joining us.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a lowdown of everything that has happened in today's trading day as well, and news and updates from within the country and across the globe. Let's kick off the show with a market update also coming in. Now, the market witnessed Monday blues as global as well as domestic cues really spooked the last trade. When you talk about benchmarks, you're looking at profit booking in trade as Nifty failed to defend the key 24,000 level, ending near 23,800. Sensex also ended over 1,200 points lower, while broader markets also dragged in tandem with key indices. When you talk about India VIX, you're looking at about a 10% uptick coming in trade today, signaling that heightened volatility really. Moving on, then let's also move on and talk about the sectoral picture. Now, in terms of sectoral action, you do have, other than pharma counters, it was a broad-based sell-off across sectors. Travel and realty stocks led the sectoral losses with about a 3% decline that you're looking at in trade. Now, when you talk about pharma sector, that was the only one that managed to hold on to the muted gains. Moving on, then let's talk about oil prices that surged after US President Trump swiftly rejected Iran's response to Washington's peace proposal, raising fears that the Middle East conflict could drag on. The move has deepened concerns over the prolonged paralysis of shipping through the Strait of Hormuz. Now, this is a critical energy choke point that you're talking about, and you can see that impact very clearly being reflected in oil prices as well. So while Iran said that it was open to ending the war across fronts, including Lebanon, Washington's dismissal has really dimmed hopes of renewed negotiations at this point in time, with supplies already constrained and shipping lanes disrupted for weeks. Markets are now bracing for tighter energy flows and higher for longer crude prices. Moving on, then let's talk about crude prices that were soaring and the Middle East war intensifying global energy risks. You do have PM Modi against this backdrop calling really a nationwide reset in economic behavior. So while addressing a rally in Telangana, the Prime Minister has warned that rising fuel and fertilizer prices are directly linked to global disruptions, urging citizens to act responsibly, from cutting fuel use and reviving work from home to avoiding foreign travel, pausing gold purchases for a year as well, and we'll talk about that in just a bit in greater detail. But before we do that, you do have the PM framing restraint as economic patriotism. The message is clear. At a time of external shocks, safeguarding foreign exchange and reducing import dependence has become a collective national responsibility. Moving on then, like I said, let's talk about jewelry stocks that came under sharp pressure after Prime Minister urged citizens to defer gold purchases and foreign travel for a year, citing some of those rising economic risks from the Middle East crisis. And shares of Titan, Senco Gold, those were some of the jewelers that were under pressure, about 6.5% knock coming in for something like a Titan. Senco Gold as well, you're looking at that 8% knock also coming in. And reacting to fears of a demand slowdown really here, both of those jewelry makers as well, addressing a public gathering. Like I said, you did have the PM talking about the foreign exchange relation of gold prices as well. So that's the key update coming in when it comes to some of those gold-linked businesses as well. Moving on then, let's talk about UPL that reported a strong set of numbers in the fourth quarter on a strong base. Company's revenue growth was driven by volumes, which was supported by favorable forex as well. And when you talk about the contribution margin, you're looking at expansion led by higher capacity utilization and lower input costs, thereby driving the EBITDA Also, their gross debt was lowered by $850 million versus last year. Management has guided for somewhere close to 10 to 14% revenue growth, while 14 to 18% EBITDA growth in the first quarter of FY27. Moving on then, let's talk about PVR Inox, where it scripted a strong turnaround in the March quarter as well, swinging back to profit after last year's loss. The company reported a net profit of 187 crore rupees, aided by healthy box office momentum and operating leverage. So it was a quite Durandar quarter also coming in for them. Revenue rose about nearly 26% thereabout. EBITDA jumped over 56%, pushing margins close to 30%. The performance also got a one-time boost from 195 crore rupee gain on the sale of its stake in Zia Maize as well. Overall, we're looking at higher footfalls, strong content and cost discipline that really helped the multiplex major end the year on a very firm footing. Moving on then, let's talk about Swiggy, that reported a mixed fourth quarter with food delivery showing clear momentum even as quick commerce pressures persist. Now, revenue jumped nearly 45% on a year-on-year basis. You're looking at net losses that also narrowed sharply, by the way. And when you talk about Instamart, the growth here really slowed sequentially. Losses in quick commerce are expected to remain elevated in the near term, and the company continues to hold on to its long-term growth guidance and remains confident of hitting contribution margin break-even by the first quarter of financial year 27, with capex also set to decline after two heavy investment years. The focus now really shifts firmly to execution as well as profitability visibility. Moving on then, let's talk about Bank of India, that delivered a steady set of numbers in the March quarter. When you talk about the margins, they held firm despite falling loan yields. Now, when you talk about net profit, though, that also rose about 15% on a year-on-year basis. And this was largely supported by some of those healthy loan growth led by retail and MSME segments. Asset quality continued to improve with gross NPAs dropping below 2% as well, while yields on loans really declined. And lower funding costs really helped protect margins, keeping the net interest margin also stable, somewhere close to 2.6% thereabout. Overall, improving balance sheet health and control margins marked a resilient close to the financial year. Let's also talk about something like a Canara Bank that reported a mixed set of numbers in the March quarter. Now, you're looking at steady margins here, but pressure when it comes to core earnings. Net interest income saw modest growth on a year-on-year basis, but declined sequentially, even as lower funding costs helped improve margins. Now, when you talk about the loan growth, that remained healthy, driven by retail and MSME segments. However, non-interest income, that's the one that's fallen sharply due to weaker treasury gains, dragging operating profit despite controlled expenses. And on the positive side, you're looking at lower provisions that kept credit costs in check, while asset quality improved materially with better trends across stress accounts. Moving on then, let's talk about something like an Atlanta Electricals that delivered a robust March quarter performance also coming in, driven by a sharp ramp up when it comes to its new Vadodara facility and the commissioning of Atlanta Trafo. Now, strong utilization is something that you're looking at some of these legacy plants that further supported growth. Revenue more than doubled on a year-on-year basis. EBITDA surged, lifting margins to 20% on the back of operating leverage. A favorable product mix, improved procurement efficiency is also something that you're looking at here. And the net profit also more than doubled, reflecting execution strength. With a healthy order book of nearly 2,500 crore rupees, it's no surprise that the stock was up about 5% on a daily basis, intraday basis as well, and the company is entering the new year with strong growth visibility. Moving on then, let's talk about Bajaj Healthcare that reported a weak set of numbers in the March quarter. You're looking at revenue remaining largely flat, and this is despite some of the strong volume growth that you've seen coming in. So pricing pressure, that's something that really weighed on the stock with that 9.5% downtick also coming in. And you're also on the earnings front looking at the pressure when it comes to the domestic API business, weaker realizations that really weighed on the top line, while higher raw material costs really hurt margins as well. And the company also slipped into a net loss due to exceptional items, including income loss from the cancellation of a Middle East project. When you talk about some of these early disruptions, you're seeing that also come in from the Middle East tensions, further really adding to pressure even as operating profitability remained relatively stable at the EBITDA level. So that's largely the earnings fine print when it comes to something like a Bajaj Healthcare. Moving on then, let's talk about Balkrishna Industries that posted a mixed set of numbers for the March quarter as well. And revenue growth, you're looking at a steady sort of revenue growth, but profitability that's coming under a little bit of pressure. Also something that weighed on the stock with that 3.5% downtick also coming in. Revenue rose nearly 7% on a year-on-year basis and really supported by stable demand, while EBITDA growth lagged as margins slipped by about 50 basis points. You're looking at softer margin performance that really translated into a sharp decline in net profit, down close to 19% compared to last year. Overall, while top-line momentum remains intact, higher cost pressures, that's something that along with margin compression really emerged as a key near-term challenge for the company as well, and the stock, of course, on the day. Moving on then, let's talk about Citi that maintained a sell rating on Balkrishna Industries as well in terms of the brokerage verdict here, while marginally raising its target price to somewhere close to 2,100 rupees. Now let's talk about what the brokerage has talked about. They flagged that March quarter EBITDA came in slightly below expectations as higher costs offset the benefit of healthy volume growth. Now profit after tax, that also missed estimates, worsened by negative other income, and that's also something that Citi is flagging, apart from maintaining a sell rating, of course. And you do have demand trends that remain supportive, they said, but they do remain cautious, at least at this point in time. And the rationale for that is that they're pointing to cost pressures and earnings headwinds that continue to cap near-term upside when it comes to this counter. Moving on then, let's talk about Sasken Technologies, and the shares surged as much as 20%. Look at that upper circuit that was hit on this particular counter as well. So it's the biggest intraday gain in a year after the engineering and digital transformation company reported its highest quarterly profit in at least the past 3 years, and signal really further margin expansion when it comes to FY27. Now let's talk about the sharp improvement in the March quarter performance as well. So you're looking at consolidated revenue jumping about 125%. When you talk about EBITDA, that rose more than fourfold to somewhere close to 34 crore rupees as well, and operating margin that expanded to 10.2% from 5%. So look at that operating margin really doubling from a year earlier. When you talk about net profit, also saw a sharp climb of close to 127%. Moving on then, let's talk about Rain Industries that saw a sharp spike in trade as well on the back of a turnaround quarter. Look at that 13.9% uptick coming in on that particular counter, and the company, of course, saw healthy revenue growth led by carbon business and recovery in advanced materials. So that was really driving this particular gain on this particular counter. And when you talk about Rain Industries, you're looking at a net profit of 121 crores versus a loss of 138 crore on a year-on-year basis. So like I mentioned, quite the turnaround quarter coming in here. And when you talk about margins, also witnessed a sharp spike. Moving on then, let's also talk about domestic mutual fund inflows remaining strong, although equity categories saw some moderation, a little bit of moderation in the month of April. So actively managed equity funds attracted over 38,000 crore rupees during the month, slightly lower than some of your March levels. Flexi cap funds led the inflows, while overall industry flows rose sharply to more than 3 lakh crore rupees as well, highlighting continued investor participation when it comes to the markets. And on to some business news now. Let's talk about Toyota Kirloskar Motor that has announced plans to set up a new vehicle manufacturing plant in Maharashtra. And this is something that really reinforces its long-term commitment to India. You're talking about a facility that is expected to begin production in the first half of 2029. Will cater not only to domestic demand but also to neighboring markets. And Toyota says that the new plant will strengthen its production footprint, allowing greater flexibility when it comes to responding to future demand growth and market shifts, while also ensuring timely delivery of products that customers increasingly choose in the region. But this is a very important update also coming in when it comes to Toyota. Alright, then moving on, let's talk about Ritesh Agarwal-led hospitality platform OYO that is nearing a key milestone on its IPO journey. The company is expected to receive final approval from SEBI this week for its proposed public issue, according to sources who spoke to NDTV Profit as well. In fact, OYO has trimmed its IPO size to somewhere close to 6,500 crore rupees from earlier estimates of about 8,400 crores, signaling a calibrated approach amid market conditions. And the company is now targeting a stock market listing in the second half of 2026. The move, of course, follows OYO's confidential filing of draft offer documents late last year, setting the stage for one of India's most watched tech listings. Moving on, then let's talk about Central Railway that has upgraded its signal location announcement system across Mumbai's suburban local trains, adding a new layer of safety for motormen operating under intense pressure as well. Then GPS-based stylus that you're talking about, it now announces the number and exact position of upcoming signals, acting as an electronic co-pilot inside the cab. With over 2,300 local services running daily and signals barely 400 to 500 meters apart, motormen perform a demanding single-man job. Railway officials say that this particular upgrade, in fact, is aimed at safer, more error-free operations across one of the world's busiest suburban networks. Moving on, then let's also get you the word coming in from IMD as well. And extreme weather is hitting India. Rain, heat and storm alerts are across states, and this is something that you're looking at as a very important update coming in. Now, of course, the weather situation has been something that we've been talking to you on a very frequent basis on the channel, and this is something that you're looking at as an important update coming in. Heavy rain forecast in Kerala, Tamil Nadu, Northeast that you're looking at, which is also very important to take a look at. When you talk about northern regions, they're bracing for thunderstorms as well. And that's also something that you should be noting. Winds up to 60 kilometers per hour simultaneously. You do have Rajasthan, Gujarat and western Madhya Pradesh facing localized heatwave threats with travel, power, supply and agriculture at risk. The country must be preparing for extreme weather volatility, and that's the important update that you're looking at on the weather front. Moving on, then let's talk about health authorities that are racing to contain an international hantavirus outbreak linked to a cruise ship after an American and a French national tested positive upon returning home. Both were repatriated in biocontainment unit as a precaution, while a second American showed mild symptoms as well. The outbreak has been linked to the MV Honduras docked in Spain, where 3 passengers have died. Officials say that the Andes strain, believed to have been contracted in South America, can spread between humans, raising global concern as dozens of passengers are traced and isolated. Moving on, then, Iran's Foreign Minister Sayyid Abbas Araghchi is expected to visit India this week to attend the BRICS Foreign Ministers meeting in New Delhi at a time of heightened tensions in West Asia as well. The meeting will act as a key build-up to the 18th BRICS summit slated for September, where leaders of major emerging economies are set to gather with global geopolitics under strain and economic uncertainty really rising. The discussions, of course, are expected to focus on regional stability, diplomacy and the evolving role of BRICS on the global stage. Moving on, then, US President Donald Trump and Chinese President Xi Jinping are set for high-stakes talks in Beijing, covering flashpoints ranging from Iran and Taiwan to artificial intelligence and nuclear weapons as well. And the meeting is Trump's first visit to China in years, the leaders' first face-to-face in over 6 months. Comes as Washington and Beijing really try to stabilize relations strained by trade tensions and the Iran war. Both sides are also weighing whether to extend a critical minerals deal that underpins global supply chains as diplomacy really attempts to temper rising geopolitical risks. Moving on, then, let's talk about a move to impeach Philippine Vice President as well that has crossed a critical political hurdle. Lawmakers in the lower house voted overwhelmingly in favor of an impeachment complaint, securing well beyond the 1/3 support required. The development now sets the stage for a trial in the Senate, a process that could seriously derail the ambitions of running for president for the vice president as well. The impeachment this particular push really is reflecting rising political tensions in Manila and marks a pivotal moment that could reshape the country's leadership landscape in the run-up to future elections. And an Airbus A330 operated by Turkish Airlines caught fire in its right rear tire during landing at Kathmandu's Tribhuvan International Airport. All 277 passengers and 11 crew were safely evacuated as airport firefighters extinguished the blaze. The runway was temporarily closed as well for inspections, but no injuries, thankfully, were reported and operations have since resumed. Moving on, then, after 15 years cut off from global financial networks, Syria has reintroduced Visa and MasterCard services. Alongside launching its own Pimera system, a major push to modernize digital payments is something that you're looking at integrate into the world economy as well. Central bank approval now allows domestic banks and merchants to accept international cards, marking a significant step toward financial inclusion and a gradual end to isolation as well. And moving on, then, pop star Dua Lipa has filed a $15 million lawsuit against Samsung in the United States, alleging that the company used her image on television packaging without permission. According to court filings, in fact, in California, Samsung allegedly used a photograph of the singer's face across multiple TV models sold in the US, and the case is expected to intensify the debate around celebrity image rights and commercial usage. And Barcelona champions once again, with Marcus Rashford and Ferran Torres scoring the goals that seal the title as well. The club secured their 29th Spanish League title, and that's after beating Real Madrid 2-0 in the Clásico. Rashford's impact since arriving and Torres' crucial contribution, that's something that you're looking at, that proved as a decisive on a memorable night for the Catalan club as well. And this Barca moved an unassailable 14 points clear of second place with 3 matches remaining. Moving on, then, let's talk about Arsenal, that have taken a huge step towards the Premier League title with a 1-0 win over West Ham. But the match ends in controversy after a dramatic 95th minute West Ham equaliser that is ruled out by VAR following a lengthy review. The decision, of course, sparked major debate, while Arsenal moved 5 points clear at the top. And moving on, then, while talking to NDTV Profit, market experts like Pankaj Tibrewal of Ikigai Asset Manager and Vikas Khimani of Carnelian Asset Management also discussed their top stock picks in this volatile market and how can one really protect their portfolio amid geopolitical turmoil. Let's go across and listen in.
Sectors you talked about, precision engineering, chemicals. One more exciting idea that you're seeing right now. Not stocks, but sectors.
So I think financials at this price looks to be quite a bargain. I have not seen that the largest PSU bank and the largest private banks trading at almost the same multiples. I think you have seen almost 5, 6, 7 years of time correction. This time there is no balance sheet issue. Unlike previous cycles, there was balance sheet loan loss problem. They are the best provided 80% loan loss provision. Credit growth is picking up, managements are good, and they are trading at a record bargain valuation. So I think that will be the third sector if you were to ask me to add that. And I think consumer discretionary, many new age businesses, many good franchise which are available and derated over the last 3-5 years, and they are seeing pickup in growth. So I would bet my money there in all these names. But I think, again, I repeat, rather than sectoral calls, bottom-up stock picking will work in the next 12 to 18, 24 months. Market Nifty may not move too much. We are seeing many large caps have become dinosaurs in a way. They have stopped growing, right? In this earnings season also you are seeing large caps have delivered 7-8%, mid caps small caps have delivered 30% plus earnings growth. So look out for companies which can deliver sustainable earnings growth over a 3-5 year period, and that's where the winners would be. Vikas.
What's on your sort of list right now, Vikas? What are you finding exciting?
So I think, our largest exposure, one of the large exposure is in BFSI, and which continues to do well and will continue to do well because, that's the one segment does not get, and within that, of course, we like, banks, we like some insurance companies, we like some capital market players, we own lots of them. Pharma CDMO is
BFSI, capital marketplace.
That's part of the BFSI, right? And, pharma and CDMO continues to remain our very large exposure. Pharma, healthcare, CDMO, so hospitals, diagnostics, some of the CDMO. So that's again a very large exposure for us. Within manufactured space, we are auto components, we are quite positive, and the selection is very, very going on. So yeah, some of these names we've been, quite exposed to. Aviation is something I think, again, sector has no other player. It's a monopoly play, weak players. I think that can do very well.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. Call 9300
Jewelry and aviation sectors drag the market. Nifty ends in the red about 23,800 levels. Markets under pressure as PM urges to take measures amid Middle East crisis, while rupee ends at record closing low of 95.31 against the dollar. Jewelry stocks slid sharply after PM Modi urged citizens to pause gold buying for a year. Hospitality stocks also feel the pressure amid Middle East risks sparkling fresh concerns over demand and forex outflows across the sector. PM Modi urges citizens to cut fuel use, avoid foreign travel amid US-Iran war. Corporate sector also echoes PM's thoughts. Sunil Bharti Mittal says need to cut on gold import, reduce fuel consumption, while Gautam Adani pushes for energy self-reliance. Government clarifies that there's no plan to bail out package for OMCs under recoveries and there's no formula-based approach to hike fuel price. And India, in fact, has sufficient supplies, no plans to ration fuels. BPCL CMD flags need to have more LPG storage. Government sources tell NDTV Profit that government is exploring energy conservation steps, targets 20% drop in fuel demand via voluntary savings. Meanwhile, Defence Minister Rajnath Singh reviews the risks to energy supply chains amid Middle East crisis. Oil prices jump after President Trump rejects Iran's proposal, keeping the Strait of Hormuz effectively shut, tightening supplies, stoking inflation fears, and pushing Brent to $103 a barrel as war risks stay elevated. Centre notifies final rules under 4 labour codes. New wage, social security norms kick in. Working hours capped at 48 hours a week under new labour regime. Iran's Foreign Minister Syed Abbas Araghchi likely to visit India for the BRICS FM's meet, which is scheduled for May 14 to 15th. Tamil Nadu CM Vijay's first day in assembly. New MLAs take oath, while in Bengal, in its first cabinet meeting, Suvendu Adhikari unveils 6 key decisions, including Bengal border fencing and Ayushman Bharat scheme launch. Hello and welcome viewers, a warm good evening. This is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on markets, national as well as international news. Let's begin with checking how the D Street performed today. Markets witnessed Monday blues as global and domestic cues spooked the Street. Benchmarks witnessed profit booking in trade as Nifty failed to defend the key 24,000 odd level, ending near 23,800 in the negative zone. Sensex also ended over 1,200 points lower, while broader markets dragged in tandem with key indices. India VIX was up 10% in trade today, signaling the heightened volatility on the street. My colleague Jasmeet now joins us with a full detailed breakdown of the market action. Jasmeet.
Well, a weak start to the week for the markets today. Nifty 50 ends in red, down about 1.5%. If you look at the broader market, even that underperforms overall benchmark performance. If you look at the top lows in Nifty 50, we have stocks like Interglobe Aviation and Titan both losing about 5% and among the top lows in Nifty 50. While this downtick comes on the back of PM Modi's appeal, where they request 11 things to follow, among which were to reduce or postpone the gold purchase for next 1 year and to also reduce non-essential travels across foreign countries to help with the overall foreign reserves. Now, if you look at the other performance of the overall Nifty, we do make a note that the sectors have ended in red, barring Nifty Pharma and Nifty FMCG. If you look at the other key aspect, we have Nifty Small Cap 250 and Mid Cap 150 both ending in red, down about 1.1%, while Kalyan Jewellers and Swiggy are among the top lowers in Nifty Mid Cap 150. If you look at the small cap space, we have stocks like Gujarat State Petronet and Jyoti Labs losing the most, among the most in Small Cap 250 as well. While in terms of the key sectors, all sectors end in red, barring Nifty FMCG and Nifty Pharma, while Nifty Realty is among the top losing sector, which lost about 3%. Aditya Birla Real Estate and Godrej Properties are among the top losers in Nifty Realty. If you look at Nifty Pharma as a particular sector. We do know that Nifty Pharma ends flat in today's trade, up about 0.2%. In terms of top gainers in Nifty Pharma, we had stocks like Abbott and Torrent Pharma gaining about 3%. Now, if you look at the key trends, Nifty PSU Bank, Nifty Oil and Gas, and Nifty Energy falls for a second consecutive day, while Nifty Auto, Nifty Bank snaps its 2 days of gaining streak. While lastly, Nifty Financial Services, Nifty Metals snap 2 days of gaining streak and loses in today's trade.
While we saw some bit of despondence clearly on Dalal Street today, the rupee also ended at a record closing low of 95.31 against the dollar, falling nearly 0.9% from Friday's closing mark and marking its sharpest single-day decline since March 27th, as rising oil prices and geopolitical uncertainty rattled currency markets. The pressure comes as crude prices surged after US President Donald Trump swiftly rejected Iran's response to Washington's peace proposal, raising fears that the Middle East conflict could drag on longer than expected. Brent, for instance, continues to hover near the $100 per mark, while the US WTI benchmark remains elevated around $95 a barrel. So that's about the currency market as well as how crude is doing. But amid rising concerns over the economic fallout of the ongoing West Asia conflict, Prime Minister Narendra Modi has called for a nationwide push towards fuel conservation and forex savings. Addressing a rally in Telangana, the Prime Minister warned that the war has sharply increased global crude and fertilizer prices, putting pressure on India's import bill and foreign exchange reserves. PM Modi urged citizens to reduce petrol and diesel consumption, adopt work-from-home practices wherever possible. Union Minister Ashwini Vaishnav and Road Transport and Highways Minister Nitin Gadkari also echoed the Prime Minister's call. Let's first listen in to Prime Minister Modi and thereafter to Union Minister Ashwini Vaishnav.
हमें पेट्रोल डीजल का उपयोग कम करना होगा। शहरों में जहां मेट्रो है, वहां हम तय करें कि हम मेट्रो का ही उपयोग करेंगे। ज्यादा से ज्यादा मेट्रो में ही जाएंगे। अगर कार में ही जाना जरूरी है, तो फिर कार पूल करने का प्रयास करें। हमने कोरोना के समय में वर्क फ्रॉम होम की, ऑनलाइन मीटिंग्स की, वीडियो कॉन्फ्रेंस की, ऐसी अनेक व्यवस्थाएं विकसित की और हमें आदत भी हो गई थी। आज समय की मांग ऐसी है कि उन व्यवस्थाओं को हम फिर से शुरू करें।
We as citizens now must take equal responsibility for this, and what our Prime Minister has requested, try to reduce expenditure on items which have foreign exchange exposure so that our foreign exchanges can be conserved. For example, our expenditure on diesel, petrol, for our expenditure on external travel, for any expenditure which can have implications on foreign exchange, we should try and conserve.
पेट्रोल डीजल का तो देश के इंटरेस्ट में प्रधानमंत्री जी ने अपील किया है, आप सब लोगों ने सहयोग करना चाहिए। जैसे अभी बहुत लोग अपने एक आदमी गाड़ी में घूमता है, उसके बजाय अभी ट्रांसपोर्ट सिस्टम में पब्लिक ट्रांसपोर्ट अच्छा करके हम गाड़ी में बजाय पब्लिक ट्रांसपोर्ट का यूज करें, मेट्रो का यूज करें। ये भाव प्रधानमंत्री जी का है, देश के इंटरेस्ट में उन्होंने बात की, आप जरूर उसको अनुरोध करिए।
Viewers, India Inc. is now rallying behind the centre's call for economic self-reliance amid the ongoing global uncertainty triggered by the West Asia crisis. Bharti Enterprises Chairman Sunil Bharti Mittal backed PM Modi's appeal to cut fuel consumption. Meanwhile, Gautam Adani stressed that no nation can truly be self-reliant if it remains dependent on others for its energy. Infosys co-founder Chris Gopalakrishnan also backed the PM's austerity appeal, even as BPCL CMD Sanjay Khanna highlighted the need to ramp up LPG shortage capacity. Medanta Chairman Dr. Naresh Trehan, meanwhile, pushed for renewable energy and better storage solutions. Listen into all of them.
We need to get away from this obsession of import of gold. We need to lower our energy costs. We need to move more faster towards renewable energy in our industry. And importantly, we need to vote with our feet within our country. Spend more here, put more capex here. We need to invest more. This is not the moment to shy away. This is the moment to invest, double down in our own country, because the underlying growth is there. This is a continent of consumers, large young population wanting more products and more services. And let's give them more from India, make in India, from India, serving India. Thank you.
Supply chains are being redesigned around national interest. Energy security and digital security are no longer independent dimensions. They are now the twin foundations of national power. And it is increasingly evident that the country that control its energy will drive its industrial future.
I believe the Prime Minister has asked all of us citizens, industry, to actually do our bit in order to actually help in this situation. I also want to say that maybe it's not, completely work from home, but maybe a day or two, maybe you can actually do this. This will also help reinforce our learning.
It is definitely that the country needs more LPG storage, and various options are being explored, and maybe next 3 to 6 months time we will be able to share with you what our plan to enhance the LPG storage capacity.
The whole world is changing and we need to change too. And the EVs and all the other things that we can do, renewable energy is the mantra around the world, and India has the advantage. It can use it to see we have sunshine in large parts of our country throughout the year, and that's where we can harness it. The only thing is that storage is a problem right now, but that's also getting better and cheaper, so things will happen soon.
And so very lastly, how can India take a major push as far as medical tourism is concerned? And do you feel that there can be some effect on our medical tourism arrivals considering the West Asia crisis is there?
Yes, it has already had the effect, but it will come back.
India's oil marketing companies are staring at losses of nearly 1 to 1.2 lakh crore rupees in the first quarter of fiscal year 27 amid the ongoing West Asia conflict, with under-recoveries estimated at nearly 2 lakh crore rupees. Government sources say nearly half the losses are coming from LPG alone, while the Finance Ministry may step in with support if needed. My colleague Cesar Sen joins us with more details on the pressure building up on OMCs. Cesar.
State-run oil marketing companies are staring at losses of about 1 lakh crore this quarter, and this figure may go up further if the West Asia conflict drives up crude prices even higher. Now, this is according to government estimates. Now, the projected Q1 hit is large enough to wipe out the entire profits earned by OMCs in FY26, with nearly half the losses expected to come from LPG alone. Under-recoveries on petrol, diesel and domestic LPG are estimated to surge to nearly 2 lakh crore in the June quarter if the current crude prices sustain, putting unprecedented pressure on the balance sheets of companies such as Indian Oil, Bharat Petroleum as well as Hindustan Petroleum. Now, coming to prices, the officials from the Petroleum Ministry also indicated that support to OMCs would be extended if and when required in order to prevent stress on the companies from spilling over into the broader economy. On retail prices, however, while the centre has so far maintained that there are no immediate plans to rationalize retail fuel prices in order to shield domestic consumers, the government's messaging on fuel has subtly evolved over the past 2 weeks as the West Asia crisis intensified. Now, sources indicate that Prime Minister's recent appeal to citizens to reduce energy consumption could be a precursor to a long-delayed fuel price hike.
Viewers, government sources have told NDTV Profit that the centre's broader objective is to build a nationwide voluntary public movement aimed at helping India navigate global economic disruptions and rising energy market volatility triggered by the ongoing geopolitical tensions in West Asia. Sources say the government is targeting up to 20% reduction in domestic fuel demand through behavioral and consumption changes, including greater use of public transport, work-from-home practices, and reduced non-essential fuel consumption. We also heard Prime Minister Narendra Modi speak on the same lines. The move comes, of course, amid concerns over elevated crude oil prices and their impact on India's import bill, inflation, and foreign exchange reserves. Government officials also point out that several countries across the world are exploring similar energy conservation measures as supply disruptions intensify globally. According to sources, global fuel demand itself may need to be moderated by nearly 3 to 4% to stabilize energy markets and ease pressure on supplies. Let's also bring in our colleague Danish Anand now. The travel industry is backing Prime Minister's call to curb non-essential foreign leisure travel at a time of global economic uncertainty. He tells us what else he's gathered on this story.
Well, that's correct. The domestic travel industry is completely supporting PM Modi's message yesterday, which talked about ensuring that there is less kind of international leisure travel and more focus should be on the domestic tourism. And hence, this is what we're learning from Faith, which is the Association of Hotels and Tourism Industry. They have noted that in the past few months, the airfare to Europe has gone up by 15 to 20%. And similarly, for the Far East as well, we are seeing airfare also rising more than 20%. So, which is going to create an impact also on the foreign exchange, and hence they have also said that it is a very right moment when the PM had mentioned about this, and he is also saying that after especially after the PM made this particular message yesterday, the inquiries for domestic for certain domestic destinations has started to go up. For example, Kashmir, Sikkim and other more destinations in the northeast. So the industry is getting more and more such inquiries for such locations, and all in all, if we see Faith is really aligned with PM Modi's message on ensuring that there is less kind of international travel and there is more weightage that is given to domestic tourism destinations.
After the travel industry, India's technology sector too is backing the centre's push towards energy conservation amid the ongoing Middle East tensions. In a statement, NASSCOM said tech companies are already operating on well-established hybrid work models and are now further optimizing energy usage across campuses by reducing non-essential consumption, rationalizing facility services, and enabling remote or hybrid work wherever operationally feasible. After PM Modi's push for national farming, government reassures farmers on fertilizer availability amid concerns triggered by the ongoing conflict and supply disruptions by the Middle East war. Government appeals farmers there is no need to panic. Let's listen to Aparna S. Sharma. She is the Additional Secretary at the Ministry of Chemicals and Fertilizers. Her remarks on this are important. Take a look.
Price of fertilizer in the longer run. So the price of fertilizer is as per our policy. That is, we have the two policies. Urea policy, the price of fertilizer, the urea bag is fixed. And in the NPK fertilizer, it is as per the policy. That is, the price of DAP right now is at 1350 per 50 kg bag, and other complexes are the MRP is free. So about the use of fertilizer, I think the government has been promoting balanced use of fertilizer across the country, and towards this end, several steps have been taken at the state level. The state level interventions have been there to check diversion and hoarding, and there has been some panic buying initially.